impacted the most, and the names here are Trident, 38% exposure to the US market. Wellspun Living has an exposure of 63%, and KPR Mills has an exposure of 19%. Alok Industries with an exposure of 45%. Himmat Singhai has an exposure of 83%, and Arvind has an exposure of 37% of the total revenues that come in from the US market. Now, a small sector which also has an exposure is the shrimp or the seafood sector. Now, the Avanti Feeds has an exposure of 14%. Apex Frozen Food has the highest exposure to the US market of 63%, followed by Waterbase, around 40% of exposure to the US market. Now, if you look at the consumer companies, largely most of them are insulated, but few of them have an exposure to the US market. LT Foods has an exposure of 39%, KRBL 10%, Tata Consumer Products around 12% of exposure to the market. Now, if you look at the renewable energy side, there are only a couple of companies that have an exposure. Wari and Premier. Wari has an exposure of around 57% of its order book is coming from the US market. Premier Energies exposure currently is just 1%, but they had plans to set up a plant in US, so that could get impacted because exactly here, as it mentions, their US expansion plan is underway, so that could get impacted for Premier Energies. Now, when it comes to oil and gas, now there is no direct exposure, but given the fact that Trump has also made comment on India importing crude from Russia, so that could have an impact on Reliance Industries and the oil marketing companies like IOCL, BPCL and HPCL, because nearly 35 to 40% of these companies' crude requirement are sourced from Russia, and from Russia we usually get a discount of around $3 per barrel, and if they need to shift their source of crude, then obviously this discount will go away, and this $3 per barrel impact could have a direct impact on the marketing margins and the refining margins. Now, analysts expect that for Reliance Industries the EBITDA impact will be around 3%, and for the oil marketing companies the impact could be as high as 10% currently. Now, there are few sectors which are actually not exposed to the US market. In fact, they are insulated. To list them, firstly, it's IT services. Now, they can have an indirect impact if there's an INR depreciation, but direct impact, there won't be any much of an impact for the IT companies. For FMCG, most of them do not have any exposure to the US market. Telecom companies have zero exposure to the US market. Real estate, again, zero exposure to the US market. Banks, insurance, power, steel companies, there are tariffs, but then none of the steel companies in India export any products to the US market. So again, zero exposure. And capital goods like L&T also have no exposure to the US market. So these companies largely stand to not see any negative impact coming in from these tariffs that have been imposed by US.
Got it, Soumit, and very comprehensive list, everything that you need to know as the first rates start ticking on your screen. And it's a negative start, it's a gap down as we had anticipated, 200 plus points lower for the benchmark Nifty 50, and Reliance Industries taking it on the chin, at least the early rates suggest that. We will be talking about the rupee as well. We'll be speaking to Jayesh Mehta of DSP just after a very quick break, so do stay tuned.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio.
Okay, this watch list is more of an optimistic outline, looking at how the pre-open session may pan out. About 5 minutes into the pre-open session, and yes, you are looking at perhaps a 200-point odd dip. Your pain points are going to continue through the day, through the morning, at least through the first half, but the big story is going to be the rupee, which has opened at a 5-month low. I'm going across to Vishwanath Nair to talk a bit about it. Yes, Vishy?
Right, so the rupees come on about 26, 28 basis paisa lower on open. This is the lowest that the rupee has opened since February 10th, at about 87.70 odd. That's where it's trading at this point in time. This was widely expected, of course, that there would be a sharp downward movement in the rupee. This is because of the outcome of the trade deal that is happening at this point in time. Of course, Donald Trump last night coming in and saying a 25% tariff will be applied to India, and on top of that some penalties because of the deals that India has with Russia on energy as well as military equipment. Traders were jittery already yesterday. We saw a very wide movement, about 25 to 30 paisa on the rupee. Yesterday's trade, this was also because of the uncertainty that persists as far as the rupee is concerned. The day before, there were already comments that a 20 to 25% sort of a tariff would be implemented on India. Clearly, their worst fears have come true now, and you're seeing that impact on the rupee.
Quick word from Jayesh Mehta, Vice Chairman and CEO, DSP Finance. Do you expect this to continue, Jayesh? Of course, a positive for exporters and some mitigating factor as this all clears out. But what do you see directionally as far as the rupee is concerned?
I think technically, yes, we haven't seen that much of all the way the impact should be, so which is good. But I think market is also kind of looking at there could be some softness coming in, which is what has happened at most of the places. So that's the reason we didn't really see touching the lower point of 88 plus kind of a number, right? So naturally, 1 or 2 days market will look at it. There is also a fear that at 88, RBI will also come out strongly to sell. But again, if this is going to last for a longer period of time, then we will see a new low. Otherwise, this is more or less kind of settled. People are expecting the things could change, which is what has happened with most of the country. You start with higher tariff and all that, and when you finally sit down on the table, it comes down lower. But that's the hope trade, I would say, rather than anything else. And at the same time, we have continuous selling from FPI, if you really look at last 1 month, right? So that's also not helping the rupee to a greater extent. And if this US things last for long, I'm not sure at what level will RBI will kind of intervene very heavily. So I think they will also intervene, but very, very softly, just to provide some liquidity. Beyond that, I don't really, look at them to intervene big time.
So therefore, then if you mentioned the hope trade, right? If there is no resolution to that effect in the next 48 hours, which is by the time the currency market stopped trading on Friday, do you reckon that we could see substantially lower levels, or the extent or the bulk of the damage is done already?
No, we can see further lowering from here, because positioning wise also people have been short dollar rupee. Then we don't know. People will kind of start guessing it. People will take the reverse position. People will start guessing it whether central bank will really intervene or not, right? So from that perspective, we may see, another 50, 70 paisa kind of move happening if this continues for a longer period.
Jayesh, we'll leave it at that. Thank you so much for coming in and giving us this very quick perspective. Very important to have you today. So thank you for your time. As the pre-open rates have settled, we are likely to start off about 1% lower. So slightly worse off than what the implied open may have indicated about an hour ago. So bear that in mind. But keep an eye out for the ones with the, perceived highest exposure, right? So Welspun is starting off about 6% lower. You have KPR Mills and some of those other textile companies starting off lower. Vari is about 3% lower. Zentech, by the way, for completely different reasons, continues to grind lower, and very few pockets in the green currently. So that's the long and short of how the pre-open looks like on the top 500 stocks. Slightly beyond that, there could be more downticks as well. But time for the big brokerage call of the day, and Jefferies has released a note on Welspun Living, and no surprise that the stock has been downgraded to a hold on account of the tariff headwinds. How much of this tariff overhang is going to cost the company? I think Mahima should be joining us any moment from now to talk about this. Okay, she is ready. Mahima, take it away.
Right, so, Neeraj, as you rightly mentioned, Jefferies has downgraded Welspun Living to hold and given a target price of 130, which is almost the price at which it closed yesterday. They're saying that tariff headwinds will persist longer than what was expected. Q1 earnings also suggest weakening of overall consumer demand in the US. Plus, demand scenario could worsen because of this higher tariff. Indian players would likely have limited advantage relative to China and potentially be at a disadvantage to players like Pakistan, is what the note is saying. Plus, Welspun has a very high exposure when it comes to the US exports. It's almost 65% of the total revenue. So, the major impact will be on this textile company. Tariff rate would also create significant headwinds, both in terms of volumes as well as margins because of demand going down, and plus they might have to absorb the overall tariff cost. Management shared muted near-term outlook on demand with pressures likely to continue in the near term. They've already told that in their yesterday's con call. And Jefferies has cut the EPS target for FY26 by around 15%. So that's a big EPS cut as tariff headwinds extend longer than earlier anticipated. So this is the overall view of what Jefferies has over Welspun Living and why they've downgraded the counter.
Okay, so Welspun in pain as expected. Shrikant, on some of these, are you seeing recovery trade or a contra trade possible? And LT Foods as well, I would add to a Welspun, a KPR Mills, a Vaibhav Global, a Wari Energies. Would you look at any of these right now, or this is a clear let's stay away till things clear?
No, I think it is better to stay away from taking any specific position in these stocks which are likely affected. And it is better to focus on those companies which are really doing well in their overall business, and they can do well in the and they are more specific to domestic story. So I think it is better to stay away from taking right now any contra position in these stocks.
Change when the markets open in 3 minutes time, but it looks like it's going to be a poor breadth. There's just one Nifty 50 stock that is in the green post the pre-open session, and that is Mahindra and Mahindra. The rest of the stocks are in the red, and you have only 9 out of 500 stocks of the Nifty 500 that are trading in the green. Among them, GVTND is looking like it's got a strong start. HEG posts its numbers. Again, a positive start. You have Sagility that is up about 1.4%, but not really too much else. Zentech, another 5% down today, and no buyers in the stock, only sellers. LT Foods also losing about 3.8%. Initial rates, of course, this could settle, but it looks like it's going to be a tough situation. Parag bhai, we've spoken about the fact that this could be a little bit of a short-term negative. Are you spotting any moves today, something like a Welspun Living, something like an LT Foods, that you would venture into because there's a dip that could settle later?
No, as I said, as we discussed, Navin Fluorine is something which has also high export, or Atul Limited, for example. This kind of companies can be looked at on if they decline more than 2-3% or 4%, because some of these chemicals which they make are not possible to be made in India, made in US, as Puneet was also saying, or some refrigerant gases, for example, SRF. Navin Fluorine, all those companies make. These are not possible to be made in US. So I would say that if this company decline too much, then there's an opportunity, including Atul. But there are some companies which are seriously, for example, this textile company which you said, the numbers also were not that great, and so and this pain will continue. So even for some of the auto component companies which are competing with the companies where some of those competitors have a plant in US. So they'll definitely become uncompetitive if this 25% duty plus penalty, whatever, stays. But I am hoping, or this is my hope, that is a pressure tactic, which I told yesterday evening also. And they want to stop. They want to actually pressurize Russia to come on the table and stop doing Ukraine war. And and plus Trump has also said that within a week we'll come to know, and we are still negotiating with India. So I would say that some of these outcomes which we are discussing right now will change.
Parag bhai,
Yeah.
sorry, I'll have to intervene here because the markets are about to start, but I get your point. I take on board your point. Let's see when the change happens. But thank you so much for joining in today. Shrikant, stay on. We'll be just taking a quick opening thought from you. But the market starting off on expected lines, about 180, 190 points lower. Banks, relatively domestic, right? So therefore, not too much of a direct impact. But I wonder if IT is seeing some bit of pressure today. Yet again, actually, it's pretty okay. Maybe the impact is at the broader end of the spectrum, mid caps and small caps very quickly. 1% lower for the mid cap index, small cap index, which is a peppering of these names. Yes, under more pressure. Let's get the heat map up on the screen. You'll probably not see too much on the Nifty. But yes, what you're seeing on the Nifty is that one lone star, which is also just about 0.5% higher. Otherwise, it's a tick of red across. Tata Motors, for acquisition reasons, down. Reliance, because of the tariff reasons, down. Then there is a Titan, Eicher, Reddy's, etc. No big bang dip or hit on pharma. That's the other interesting observation, that the top loser is down 2%, not because of tariff reasons, and only one pharma stock in the top 10 losers. Well, that tells you a story about how the market is likely taking it. We're off the lows straight away as well, but early days. Let's wait and watch how this counts. Tepid start.
Yeah, Shrikant's technical pick there on the top with Eternal. Because I suppose the thinking is no matter what happens, people are still going to order their food and order their groceries online. That domestic move doesn't end. Think domestic right now. Mid cap 150, 1.5%. This is going to be painful. We'll get the market breadth up in a bit when we can and we have enough data. The small cap 250 also 1.5%. Let's pull up the sectoral heat map. This is going to be a sector specific hit. Two things are happening here. No one believes that Trump is going to finally settle at 25%. He himself says negotiations are still on. The second thing is that the impact on India and GDP relatively in larger terms is not frankly that much. So let's not panic about it. Oil and gas is down for entirely different reasons. I mean, crude has dipped again another $2 or so overnight because of these Russia sanctions and the threat there. So which is why you're seeing that play out. Nifty consumer durable also down. I mean, everything is in the red right now. It's only relatively who's less hit. FMCG stocks would be in that category. Remember, HUL will also report today. So watch out for that. Nifty Finance Bank. So all of your domestic focused sectors are doing relatively okay. And here, underline the word relatively is what I'm talking about. Let's pull up the advanced decline ratio. Yes, the breadth will be quite negative starting off, and you can expect that. One stock in the 30 stock Sensex is in the green, 3 in the Nifty, and overall on the NSE, of course, you're seeing a very, very skewed kind of advanced decline ratio. Let's take a look at stock-specific action, and I'm going to start with results because at the end of the day, that's what matters once this tariff dust settles. Mahindra & Mahindra is the first stock that I want to talk about. Despite good results, 1.5% down, and this could be some of the tariff flow going through. Interglobe was on our list. We told you they did well in a turbulent quarter, and in that context were good. So is Aster DM. So you're not seeing too much of a hit on some of these counters. Sagility, again a decent set of numbers. CAMS not quite so. CAMS was definitely painful. Sagility 4.5% up. I mean, they deserve a different set of applause. Be 4.5% up on a day like this. CAMS has seen non-mutual fund revenues dip a fair bit, so that's also 4.5% down. Tariff impact. Let's pull up some of the textile stocks. Vardhaman, Wellspun, KPR Mills among them. LT Foods because of high exports to the US, basmati rice largely, all of them down in the red. Wellspun worst hit because of that Jeffries note as well. It was our big brokerage call this morning if you tuned in. KPR Mills, Wari Energies, Gland Pharma, some of these with exposure to the US seeing pain coming in. Wari Energy is about 4.5% down right now. So you're going to see these all through, and I think picking the stocks that could recover the fastest or that are relatively tariff immune would be key today.
Yeah, you said it. And speaking of recoveries, Navin Fluorine, we spoke about this. It could potentially have an impact on account of tariffs, but the numbers were particularly good. And so therefore, from the low point that it saw in the pre-open session, it was down about 3% at the start. It has recovered quite dramatically. It's currently trading up over 1% or so. But I do want to ask about HEG, which is up about 6%, reacting to numbers. Shrikant Chauhan, any trade here? This is a stock, of course, that has very seasonal performances on the earnings front, and it sees spurts of performance on the stock front as well. Is there a trade here? Shrikant?
Yeah. Yes, the stock has crossed its important resistance level at 560, 565. And whenever we see some activity in HEG or graphite, most of the time we see trending sort of activity. And this time also, despite of weakness in the market, the stock has broken 560. So I'm expecting stock to move towards the levels of maybe 600, 610 in the near term. We should look for adding stock at current levels, more on dips because the market is under pressure. So in case if there is any weakness close to 560, 65 levels, certainly we should look for adding some more position for HEG. We are bullish on it.
Absolute pleasure as always having you, Shrikant. Thanks so much for joining in. We're joined now by Saurabh Mukherjee, who's the founder and CIO of Marcellus Investment Manager. Saurabh, as always, thanks so much for taking the time and good morning to you. I wonder how much attention you're paying to everything that is coming from the White House and from Donald Trump's Truth Social account, because that seems to be where the news breaks nowadays in the United States. And there's quite a bit of pressure tactics seemingly on India to sign a trade deal.
Yeah, I think this must be a precedent to sort of tailor-made for journalism. I have to say, for financial journalism, there's always every day something for you guys to discuss. I think like everybody else on your channel,
that and comedy, Saurabh.
Yeah, so I mean, you can't ask for a better package, right? Drama and comedy together every morning for the global financial audience. But in all seriousness, this does look like brinkmanship. What struck me was the fact that it's come less than 24 hours before the deadline. So it's very interesting that he made this announcement 24 hours before his own self-imposed 31st July deadline. And that's what I think makes it so clear that this is a pressure tactic. My reckoning is in the next couple of months, India and America will crack a deal. We will end up, I strongly suspect India will end up with tariffs better than the 25% angle. I think Parag Bhai mentioned the Russia angle, and it's pretty clear that Trump is using this as a way to browbeat India into reducing its purchase of Russian oil. I'm not so sure that will succeed. I think India quite rightly buys Russian oil because it's cheaper than the stuff available from elsewhere in the world. So it's not something we'll do a lot of trading around. If some of the companies that we like, for example, Divi's Lab has been a big holding for many years. If that comes off dramatically, we'll buy some more of it. But I don't see anybody in the right mind deciding to sell high quality names like Divi's Lab on the back of this. In any case, I think IT, pharma, electronics, I think will be exempt. Even if this 25% tariff were to go through, it's high chances that the three big Indian exports to America, pharma, electronics, and IT will be completely exempt from this. So you're largely focusing on small pockets of pain such as textiles and auto. And whilst we have some exposure there, for example, we are shareholders in Sona Comstar. Again, if Sona Comstar comes off dramatically on the back of an announcement like today, we'll think of buying. So it's not a sell trigger for us by any stretch of the imagination. It's par for the course. We've all got accustomed to this. In fact, our global compounder strategy actively looks to buy on the back of the American president's tariff threats. We bought heavily through April when Liberation Day was announced. American stocks came off. We bought American stocks heavily through April and are sitting pretty on those gains through May, June, July. So Taco, Trump always chickens out as a well-established trade in America. I suspect will soon become a well-established trade in India.
Saurabh, hi, good morning. Yes, this is a lot of, I would say, fun in heavily quoted terms for financial journalists because Trump is keeping us on our toes. What's on this buy list? What's on this tariff hit buy list? Would any of them, for example, textile companies make it to that list? Would it be pharma companies? What do you think is the right way to make the most of what could end up being a taco trade?
So look, I think it is very, very clear that America needs India on two fronts, right? America needs India to reduce its dependence on China for electronics, Apple being the star play there. And America needs India to reduce its dependence on China for active pharmaceutical ingredients. Remember, China still supplies 70-80% of America's API. India supplies the remaining 20-30%. So America clearly wants to diversify away from China in those two areas. It's not evident to me that countries like Vietnam are beyond a point credible alternatives to India, right? So there is a big China plus one trade there. America knows that. America knows that India wants to step into China's big shoes in electronics and pharma/API, and therefore they are leveraging that to say let American agricultural produce and dairy and poultry produce into India, and that's where, as we all know, is the stumbling block. So my reading is there will be a deal that will get done over the next couple of months, and therefore we are resolutely positioned in companies that can play the pharma API play. So Divi's Lab is a big holding for us. In our small cap portfolios, we also have a company which used to be called Ami Organics. It's now called Acuitas. I don't quite know how to pronounce it. ACUTAS. So in our small cap portfolio, we have that. The electronics piece, we have not yet been able to make purchases, right? Clearly, Dixon's is the star play there, but it's eluded us. It's an electronic manufacturing services play has eluded us. We continue to do more work, and if courtesy Mr. Trump, the EMS plays become cheaper, if Dixon tanks, then so much the better. We will think of looking at EMS. There's plenty of good companies in that space. We'll think of looking at buying one. But these are two big trades. I think they will become big parts of the Indian market, EMS and API. These will become big parts of the Indian market in the years to come. And I think the trade deal will eventually get done.
By the way, the markets are steady at that 0.5% downtick. So bear that in mind, with banks also now kind of putting that little bit of pressure, 0.5%, more than 0.5% now for the Nifty Bank as well. Saurabh, there is a fair degree of chatter around how in these uncertain times, and God knows this is only the first 6 months, the next 3.5 years also promise to be uncertain, that it might be better to focus a lot on domestic plays as well. So if you're looking at pharma, could people look at domestic CDM or a domestic foremost players, or some of the other buckets which are largely insulated from the global uncertainty? Would that be a good way to approach the portfolio construct right now?
So I think yes and no, in the sense that even if you were to look at domestic, I think we are an economy which has, leaving aside America, we have other strong linkages with the global economy. So it's difficult to say that let's completely leave the world aside and focus on India alone, because it doesn't work like that. And in any case, even if we were to focus on domestic stocks, the domestic economy is not in the greatest of shape, right? If one were to say, let's forget the world outside, focus on India only, I would say domestic capital goods companies would be the area of interest. That's an area we're looking at carefully. My reading is we are in a domestic consumption downturn, which will last for a few quarters yet. I think the job situation is fragile, and that's leading to an extended downturn in consumption. I think domestic consumption rates or savings rates will have to go up, which means consumption will come off, I think, in the next few quarters, if not the few years. And therefore, if one is to focus on India, then domestic capital goods plays would be the place to look at. Corporate India, as we know, for the first time in its history, corporate India has net cash, right? And that net cash will get expended. That will get expended as the capex cycle begins. I think L&T's results 2 days ago were heartening in that regard, because L&T announced a big thermal power order, BTG order from a domestic power generator. I hope that sort of triggers the beginning of a private sector capex boom in our country.
Speaking of results, since you mentioned Larsen & Toubro, Saurabh, I'm just wondering, we've got most large companies that have posted already. What is the scorecard looking like for you? Is it more disappointing than anything else? Of course, there are pockets. There are pockets that are bright. Larsen & Toubro is one of them. But are you more disappointed than not?
No, I think we've been expecting this. By and large, for the last 4 results, we've been able to grow EPS in our portfolio by around 10-11%, whereas Nifty EPS growth has been around the 4-5% mark, right? So courtesy the strength of our franchises, e.g., I'll just give a simple example, HDFC Bank, right? As the rest of the banking and NBFC sector copes with asset quality stress, it's HDFC Bank's champion credentials on underwriting are coming through. And this is exactly what I've seen in market cycles, right? When there is euphoria, then nobody wants to buy thoroughbreds like HDFC Bank. People would rather buy a third-rate lender which looks optically cheaper. And then inevitably, when the economy slows down, that's when the thoroughbreds credentials come to the fore. And HDFC Bank is able to chug out EPS growth or a Lab is able to chug out EPS growth, or a Pidilite is able to chug out growth in difficult markets, in difficult economic circumstances, and therefore quality reasserts itself. So I think the quality reassertion trade is very much back on in India in the last, especially the last 2 quarters. And given geopolitics, given the domestic consumption downturn, I think the quality trade will stay on for the next few quarters. And I can't but cheer that, right? That's been our style of investing. Our style of investing took a back seat in the euphoric years after COVID. That's when people migrated to value. But as euphoria subsides, quality is coming back.
Okay, Saurabh, just a couple of more minutes with you, please. I want to introduce Vikas Khemani also to this conversation that we're having this morning. It's an important one to temper the concerns that you're seeing in the market. And the concerns are valid because it's feeling like a bit of betrayal, for a better word. Vikas Khemani, I want to know what your thoughts are. We spent an inordinate amount of time trying to hammer out a deal and then to summarily just, be handed over some formula and then the back and forth on it. Do you think that the weakness we're seeing in the markets right now is an opportunity or it could get worse? Vikas, the question's for you if you can hear me.
Yes, I lost the last part of the question. I don't know if you can
my question
that.
is, do you think that the weakness we're seeing in the markets right now is an opportunity or things could get worse?
So I think, first of all, see, whenever these kind of negotiations happen in such two large economies, these kind of things are bound to expect. Let's not forget our UK negotiation lasted more than a year and a half, right? And of course, if you have to give away a lot of things, access to the Indian markets easily, I think those negotiations can be done very easily. So I think fact is that our government has done a great job in terms of protecting the interest of a lot of other segments. You can't kind of just agree to certain things and give away a lot of other segments because there's long-term implications. So I think these kind of tactics are par for course happens in a long negotiation, long kind of trade agreements. So I'm not structurally negative at all. I mean, this is, in my opinion, first of all, not a permanent outcome. It can be there for a quarter or two, but I am quite confident that the eventual outcome will be sorted out. There will be negotiations from both sides. Both US and India need each other. There's no denial on that. And I am quite sure that this will happen. Having said that, there are some segments which might get impacted in a shorter term, but which is a very, very minuscule part of the market overall. Overall export to US is very less. And secondly, also impact does not have to be fully on the earnings. In the sense, a lot of tariff will be passed on. In shorter term, there might be some minor impact can be taken on the margins, but I am sure eventually it will be passed on. Just like India controls 45% of the US medicine market in the generic space. I mean, they don't make that with margin to absorb. So it's a question of only a 1 or 2 quarter of time, which happens in many industries all the time. And secondly, I think partly currency depreciation can also provide some cushion, which we have seen. So I think
I'm just going to interrupt you for the latest truth social bomb. Trump has just put out a post. I just want to add that on to what our viewers are understanding right now. He has posted, "I don't care what India does with Russia. They can take their dead economies down together for all I care. We have done very little business with India. Their tariffs are too high, amongst the highest in the world. Likewise, Russia and the USA do almost no business together. Let's keep it that way and tell Medvedev, the failed former president of Russia, who thinks he's still president, to watch his words. He's entering very dangerous territory." I don't know now what's happening and what the context to this is. Has he gotten off some call and then started posting out, and why India is getting dragged into this?
I mean, there's nobody who can call India's economy a dead economy. It is the fastest growing economy in the world. So I'm pretty sure that it is the result of some sort of a conversation that he has had. Possibly.
But it's just ridiculous.
This is ridiculous. This is just ridiculous. To have a post like this is just ridiculous.
And they can take their dead economies down together. I mean, Vikas Khemani, this is just breaking real time. So we're just putting out what we're getting real time. There is measure. There is something to say about measure, the way India responds. We're a mature nation. We deal through proper channels, etc. But now this is becoming vindictive, isn't it?
See, those who know Mr. Trump, I mean, I don't think I need to comment on that. We have seen he operates through Twitter. I mean, we saw what happened between the US and China. for a very long time, and there was kind of retaliation, all those things happened, and then he nicely ate his humble pie and kind of withdrew from all his and nicely sat down on the table and then did the deal. So I think there are lots of rhetorics which happens. I'm so glad that at least our government is not reacting anything in a public domain, working through the normal channels. I think Trump has its own way of putting pressure on through public media. As long as you don't get impacted by the pressure, and which is what I believe, that I think entire Indian media should also act responsibly rather than kind of pronouncing it in a big way. Let government handle it its own way. One thing we must understand: we are a 1.5 billion people market. US cannot afford to ignore that market. They also make a lot of money from India. Apple does sales, Google does, all the IT company does a lot of sales in India. So see, we must understand that both US and China need each other. There's no denial on that. And apart from the normal pressure tactics, which negotiation, every leader has his own style. We all know Mr. Trump's style. So I'm sure it will get sorted out. India has put its firm foot when it comes to importing Russian oil, even in the worst of the times when there was a lot of pressure. So everybody knows US does what suits them all the time, so in India, with this kind of size and scale, has its own way to deal in its own way. They don't need to preach anything that whom should we import oil from anywhere. And I'm not getting into the politics side, but that's the stance our government has taken, and I think I respect that. So I think we should not panic. Have faith in our system, and I'm sure in fullness of time we will find answer.
No, I think 2 or 3 very key things. That one, a measured approach and through the official channels is really good. The other thing to keep in mind is look at where the action is happening as opposed to just post on Truth Social, right? So I believe what's happened is that the White House officials have said that reciprocal tariffs currently in place have exemptions for goods such as semiconductors, steel and pharma that are or could be subject to Section 232 tariffs. That's part one. And while all of this is happening, there was a Reuters report last night, right, which was speaking about how Google is setting up making a $6 billion investment in the state of Andhra Pradesh for making a data center headquarters of some sort, right? 1 gigawatt data center and a power infrastructure. So look at where the money is coming from. And there will be a case of eating the humble pie, so on and so forth. So I think India is actually dignified in trying to respond through the official channel. I kind of completely agree with what Vikas is saying.
No, that's fine. India will respond through official channels, but that doesn't mean that you can give a free pass to commentary like this.
Yes, certainly. No.
And as media, it is also our job to highlight what is happening. We can't say that, oh, it's okay, no one cares what he says. He is the president of the United States as of this moment. And his actions do have consequences. You're seeing it on Indian markets, maybe relatively less. The fact that he's saying this is a dead economy does show a real inability to understand what's happening. And maybe it's empty words.
It's a dislocation from reality, because I very clearly remember a conversation with the three of us, Ben Powell, making a statement, nobody wants to ignore India, and this is the case globally. You're hearing about free trade agreements bilateral agreements being signed by major economies with India, and those that are being negotiated beyond the United States of America. Yeah. And it's very true. You cannot. And Vikas, a statement being made, for example, that apparently Pakistan has reserves of oil, and maybe down the line they will, the US will help Pakistan get those reserves and maybe sell them to India down the line. All of this seems to be scare tactics, pressure tactics, right?
Yeah, so we've seen President Trump, since he has come to the presidency, that how volatile person he is, how publicly, his approach is very, very theatrical and threatening both. So I think there are a lot of times. He's been, which I've never seen in my knowledge of any president's history, who abuses the Fed governor, who is an independent institution. And we've seen all those things, right? But so hence, I would say that markets have started taking that with a pinch of salt. Like I said, have faith in the collective power of the population of both countries and need of each other of country. I'm sure in due course of time, Indian government will do its own work. They will do their own work and figure it out. Can US afford to not import medicines from India? That's a question one has to ask. If there was a time when, if you see 2 years ago, US FDA regulator first time came to India, stayed here for 15 days, met pharma companies. Why did they do that? Because of their regulatory overreach. There was a shortage of medicine in US.
No doubt. Vikas, no doubt that they can't do without us. Okay, I have one question for you, but just allow me to break the story. We have an important story, and then I just want a response from you, Vikas Khemani. So give us a couple of minutes. So we're hearing that the Petroleum Ministry is assessing the impact of potential tariff penalties. That's the exclusive we're getting from government sources. Shrimi, in fact, is joining us with all of those details.
Yeah, so the Petroleum Ministry, Tamanna, is closely examining the implication of potential tariff penalty as it's await the executive order from US at this point of time. In fact, sources tells us that Indian refiners have already diversified their crude sourcing and bringing in oil from suppliers such as US and Brazil, and in an effort to mitigate any kind of supply disruption. But sources do indicating at this point of time that since if the imports from Russia curtail, then that point India may need to further diversify its crude basket. And in fact, they are also saying that this may create some disruption given the point that currently India import 35 to 40% from Russia, and that may interrupt the entire and push up the India energy bill. The sources also indicated that currently they are in talks with the refiners. They will be having a meeting with all the Indian refiners at this point of time. The Petroleum Ministry is having a discussion with all stakeholders. But if you see the numbers, Tamanna, we have seen that crude import from Russia has risen 8 to 10% in last few years, particularly after Russia invasion to Ukraine. So, the bill, if you see from 5.6 billion, it raises up to $58 billion, and that is huge. So that's the concern Petroleum Ministry is raising. However, they are studying and waiting for the executive order on that. In fact, if you remember on the tariff penalty, earlier this month, clearly the US President issued a warning saying that secondary tariff of up to 100% could be levied if countries continue to trade with Russia. And, recently it says that the penalty go up to 500% on India and China since they continue to getting energy supplies
right now
from Russia. So, at this point,
right now they're numbers, but the fact is 35 to 40% of India's crude is coming in from Russia for India, and diversification is always there. Shrimi, good to see some green on the screen, even if it's from you right now in your frame and not on the markets. So thank you for that. So at least we have some green on the screen there. Shrimi Chaudhary there in that Haryali, while as markets are completely red. Vikas Khemani, now this is the tricky bit. The fact is that cheaper crude, relatively cheaper crude, is something that the Indian economy needs. How do you think this moves forward? And would you look at more domestic focused companies while all of this settles in?
I think, see, India, if you ask me, is a very far more domestic economy than export-oriented economy. It's very well known. It is a story of infrastructure build-out. It's a story of consumption. It's a story of import substitution and, of course, related export. The export is a very small driver of this at this point in time. And nothing changes at, we are the youngest demographic country, which is kind of not only producing and consuming. So that continues to remain so. And I don't think this event writes off export story. Let's not, because ultimately India has its own core competence in the segment and sectors, and our tariffs are not worse off than China or anybody else, so that we become extra competitive because of this. So there could be 1 or 2 quarters of displacement, tactical adjustments that happens whenever there's a big policy change, and it will be passed on. So regarding your energy question, I think, again, we will have to wait and watch. Recently, I was hearing interview of our petroleum minister. He had very clearly said that they have already planned many sources of, supply of oil, which they are anyway kind of looking at alternatively as well. And they were sounding very confident that if something were to happen, we have a game plan in place. So I think good part about our government is that they are very, very proactive in the inflation management ever since they have come to the power, whether it is food inflation or energy inflation, anything, And they have done, they understand this very well, that inflation can be a very big risk to our big growth story, which we are, working out. and I'm quite confident that the appropriate measures will be taken to manage that.
Because I'm trying to understand what do you do in a time like this as a public market investor? I mean, is this a good time to sit on the sidelines and wait for the event to pass and have some clarity, or would you preempt the possible outcome which might be lower than 25% and use dips, if any, to your advantage?
The fact that at a market open I'm chatting with you clearly shows that there's no point in reacting anything to that right now.
Sorry, Vikas. I was laughing out so loudly that I missed your answer. Can you repeat that answer again?
So the point is that tells you my approach, that I think never react to these kind of situations. It is not structural in nature. It is tactical. It is not permanent. So, and it is not significant. So, so why to kind of, in fact, that market is only down 0.5% also tells you that it's not significant. Also tells you the response of the market by and large. And anyway, we are in a correction phase of the market for some time. Markets have done well, and hence it's good, nice consolidation to happen. Think about the bigger picture. As an equity investor, you always like to have a situation where RBI cuts rate by 100 basis points and liquidity infusion. That's a great scenario for equities, right? And markets have not still responded because of this whole tariff saga over the last 3, 4, 5 months, right? Once this settles down, how much this would mean, you can assess. So in my opinion, I always say that what RBI governor has done and is doing is far more important than what Trump is doing. And hence, focus on what is happening back home, focus on what is controllable. And I am sure there will be opportunities out of this also, and there will be risk out of this also. You assess your own individual portfolio companies, impact on that, permanent nature, temporary nature, and then make appropriate call. But today, I am sure nobody would have proper information to make appropriate call, structurally speaking. And there's no point in reacting to any tactical thing.
Got it. Because thanks for putting that into perspective in the best possible fashion, especially the last answer. We'll remember this, but really appreciate your time. Thanks for joining in. That's Vikas Khemani. And well, I think that the tone and the messaging said it all. Okay, let's move on to some corporate conversations. KPIT Tech, first one off the block. Revenues came in flat, however, margins saw a dip. Puneet first Johnson with all the details. Puneet.
Well, thanks so much for that. So it was largely a quarter of consolidation for KPIT Tech, and we did have some kind of idea with the weak numbers coming in from all the IT players. Revenue was down in this particular quarter, largely flat to a negative bias, but the company had deal wins about 240 million, and they are anticipating a larger recovery to come in the second half of this year as well. But I'm now joined by Mr. Kishore Patil, the co-founder and the CEO of KPIT Tech. Mr. Patil, a very good morning to you, and thanks so much for joining in. Let me just start off first with what's leading to the optimism for you at KPIT Tech in terms of operational performance, given the weak quarter one for this quarter. What are you seeing right now that makes you so optimistic of a recovery in the second half of this fiscal year?
I think overall, as we have been saying, I think we have a very good pipeline, which we have. You can see the wins have been pretty strong in the last year or so. The point was, which I also mentioned a few times in this, is the clients have limited budget, so they do what they have to do. They have to prioritize. Some of the new wins have come from their prioritization area. And to some extent, it can get cannibalized with some of the existing work. I'm not necessarily saying what we do, but overall, it can impact, the current part also. And this budget limitation was mainly because of the uncertainty and the pressure they are facing. Now, the geopolitical issues, tariff, China, there are multiple issues in the world which can't get settled, everything. But I believe in next quarter, at least some of the fundamental issues will get, there will be more certainty. Issues don't get resolved, but I think what the market is looking for is certainty. Once that certainty happens, I think we believe that many of these deals which we have been, they will start ramping up. I think that's what I'm saying. And I do believe that it should happen in a quarter or so.
Mr. Patil, largely, you are mentioning that deal wins would help you ramp up in the second half, but from clients, we've not seen any kind of discretionary spending. So, essentially, do you see that the ramp up of the current deals, which might take a couple of quarters, will lead you to the growth, or is it that the deal wins that you saw over the last 3 to 4 quarters will now ramp up and lead to growth over quarter 3 and quarter 4 for you?
So, as I always mentioned, I can only talk about my business, which is more to do with actually the product, right? We deal with the product and not generic IT. So, in terms of a product, if you really look at the clients has to take out new products. They have to put new features in the product. So, there is a certain reason why they have to do it, and they have to maintain the existing products. So, I think that is there. Now, what people are looking at is how you can do, and there are certain things, right? As I said, there are budget restrictions. So what they are trying to do is in the current program, how they can add more functionality, how they can give something more to the consumers in the current program, because looking at how much time it takes and how much money it takes, it will take maybe 3 years for them to come out with the new programs. So most of them, then they have pushed out that part to 3 years, and then what they were supposed to do, I think they are trying to accommodate in the current program. And that puts a pressure on in terms of new features to be accommodated in the current architecture, again, the validation and etc. I think those are the opportunities we see. Also, I see the opportunity in the new market as there is a change in the markets. I think people are exploring. Everybody is exploring new market. Everybody is looking at US, but I think there are different challenges. But Europe or any other parts, right? So I think that's another part. So I think we are looking at where there is an opportunity and focusing on that.
Got it.
The other part, as I have mentioned in the earlier, that off-highway and commercial is an area of focus, and we believe that during this year you will start many of them adopting new technologies. So that is the other part I see as a growth from the US perspective specifically, while it is across. So there are specific things, and of course I believe in India story, and there is a lot happening in India. And many OEMs are also eyeing India market.
Sure.
So I think these are some of the opportunities, and we'll tap into those.
Well noted, Mr. Patil. And Puneet, thanks for getting us that conversation. But now, so that's KPIT. Now let's focus on HUL because the numbers are out. Mahima joins in for that review. And Mahima, optically, the revenue seems to be in line, but the bottom line is above estimates.
Yes, absolutely. So it's a good set of numbers, I must say, because HUL has posted a muted set of numbers for quite a few quarters now. A good 7% growth in profits is certainly positive. Revenue also a good uptick of around 4% odd. Margins were expected to be in that range of 22% odd, and they've come at that 22.3% odd, lower end of the band that HUL has already guided for. EBITDA is also almost in line, slightly below the estimates, but overall in terms of where the YY numbers stand, net profit has seen a good growth of 7.6%. EBITDA has seen a flat growth, a slight growth of around 1.3% odd, and margins, as I mentioned earlier, 22.3%. In terms of segmental revenue, home care surprising this time has seen growth, which was one segment of pain because it has seen a degrowth in the past 3 to 4 odd quarters, saw a growth of around 1.8%. Beauty up 11%. This segment has been doing well for HUL in the past 3 odd quarters now, and that has held momentum this quarter as well. Personal care, again, good growth, around 6.4%. Foods, which was a negative growth in the last quarter, has again bounced back in the green territory and up 4.3%. Other segments have also done well, up around 6% odd. So this is the overall view of how HUL earnings have fared, and it's a good set of numbers. Much better than what the street was expecting in terms of PAT. But overall, also muted set of numbers in the past few quarters gives confidence that this quarter is better than what it has done in the past 1 year as well.
Before we get to the analyst comment from Naveen Kulkarni, just Mahima, if you can break down the categories, the segments, because I think the food business seems to have done better.
Yeah, so like I mentioned, food business has seemed to have done better, which is up almost 4.3%, and this was not the case last quarter. This had actually charted a negative territory. It had seen a negative growth of around 2%, but this time it has gone ahead and done well, around 4,000 crores of top line there. In terms of home care, also it's done well, around 1.8% of growth at 5,700 crores. Beauty and well-being has seen a good growth of 11%, and overall personal care has also seen a good growth of around 6.4%. So good segmental growth as well. None of the segments have seen any kind of negative growth. So that's a positive point.
Okay, Mahima, thank you for that. Naveen Kulkarni joins in. He's CIO at Axis Securities. Naveen, very good morning to you and thank you for your time here with us at NDTV Profit. Is this a positive surprise? Is this in line, and does it give you some confidence that at least for the major FMCG companies, things are turning around?
Yeah, so overall, broadly the revenue growth is in the range of around 5%, which is overall okay. Category-wise, I can see that beauty and well-being has done well. Home care has been, let's say, around 2% growth. Personal care has also been okay. In fact, personal care has been good. Foods business has also done well. Home care has been, I would say, that slightly slower. That's why the overall growth rate looks to be in the range of around 5%. Margins seem to be slightly under pressure because some bit of, I think, gross margin pressure has been there. But overall, I would say that these are decent set of numbers. See some bit of improvement on a sequential basis. Things seem to be slightly picking up better than before. Of course, the pace of pickup is not that great. But overall, I would say that things are improving on a sequential basis is what I can see. Some bit of growth is also coming back in categories.
What's your call then? If I mean, FMCG has been struggling for a better part of the year, right, Naveen? Do the numbers give you a thought to kind of change the stance if you had a negative stance on HUL or some of the other FMCG names?
Sorry?
I'm saying, do the results inspire any confidence? Because otherwise FMCG has been, for lack of a better word, pretty insipid.
So I would say that these numbers are getting to be little better, but is there anything which says that it has become significantly better, or are we going to see sharp improvement in nominal growth rate? I don't see that as of now happening. It will take some bit of more time. Maybe second half of this year is where post round about Diwali time, and post that we should actually start making better sense of that. But I would say that at least categories seem to be growing. None of the categories are declining. So there is an all-round improvement is what we have started to witness now. How it sustains and how it picks up is going to be an important aspect that we need to check. But there is improvement, and some bit of encouragement or inspiration can be taken from this kind of results.
Well, Nestle, ITC, how are they racking up right now?
So, of course, HUL compared to Nestle, of course, is cheaper. Nestle results were not that great. ITC is much cheaper. It's completely a different category. It's a regulated category. Profitability there is much higher. Maybe volume growth could be better. So, ITC might be a better stock compared to HUL at this point in time. But, of course, we need to see how that pans out over the next 6 months.
Okay, ITC, HUL, Nestle seems to be the pecking order. Very short break. Thank you for that, Naveen. We're coming back with a conversation with Anish Shah on the numbers. M&M holding out in a very, very tough day and a turbulent market trade because of stellar numbers. That conversation after the break.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Joining us on the show is Dr. Anish Shah, Group CEO and Managing Director at Mahindra Group. Dr. Shah, always a pleasure to speak to you at NDTV Profit. My first question coming to you is, with everything that's happening around, the industry environment is seeming to be muted. Within that, M&M has really delivered well in terms of the first quarter. Outlook is also seeming to be really promising. What is giving you this confidence?
Good morning, Hiral. It's a pleasure to be here with you, and I would give a lot of credit to our teams across all our businesses. This has been one quarter where we've had a very strong performance across a large number of businesses, in fact all of them, and you see that in the results. And this is not just about this quarter. As we look at the last 4 quarters, we've had a profit growth of 35%, 20%, 20%, and 24% now. And we're starting to continue to fire on all cylinders and continue to grow from strength to strength. It has been a tough market. A few of our markets have been muted in their growth, but our teams have delivered a very strong performance in terms of market share. Auto leads the pack with 22% growth in a market that's been relatively flat, resulting in a 5.7 percentage points gain in SUV revenue market share. Farm has got its market share to 45.2%, up 50 basis points. Never easy to grow that much when you're in the 40s for market share. And that is the highest ever that we've ever seen in any quarter in our history. And across our businesses, TechM, Mahindra Finance on a very good path. Life Spaces, Holidays doing very well. Sustain business delivering what it has to, which is a very significant set of goals. Logistics is turning around very nicely and will show a strong growth momentum. Among our smaller growth gems, Excello has shown a very strong revenue growth, and multiple other businesses are on a very good path. So it's really been a combination of all of these businesses coming together and helping us deliver these results.
Right. Exactly. I mean, firing on all engines, Dr. Shah. But the key from here on is, yes, no concerns in the non-automotive segment when you talk about tractors. But a couple of, questions that did come in from analysts as well on the automotive side is that EV is seeing a ramp up, which is a positive, but that's somewhere having an impact on the margin perspective. With that, you're still yet to accrue benefits of the PLI scheme. How does that entire dynamic work in for this year and the coming quarters?
Every new launch for us has an impact on margins in some form. EVs has a greater impact because it's a new platform, and that was an investment. PLI helped us make that investment. So we are on track in terms of what we had planned for. And as we maintained, EV margins will get at par with auto margins as we move on and as we grow volume in EV. So it's something that we feel is essentially par for the course and will allow us to have a stronger presence in the market with a very good set of electric vehicles and a very good set of ICE vehicles at the margins that we feel are reasonable and consistent with what we've done in the past.
Right. How are you looking at the export markets, Dr. Shah? Because you have seen good traction that's coming in terms of South Africa. Australia, you've recently begun. And US has been on the radar, but now with the tariffs coming in at 25%, does the strategy still remain the same, or how would you even look at the US markets?
So we've got a very clear strategy for exports, which is consistent with what we've done for all our businesses, which is focus on a few key areas, do that really well, and then think about doing more beyond that. So our focus right now, beyond the India-like markets, which is Sri Lanka, Nepal, Bangladesh, etc., is really on South Africa, Australia, and Chile. These are markets where we've been present for some time, and with the new products we have, we are targeting a 15 to 20% market share, which is very, very significant in those markets. We are well on track on those markets right now. We will look next at either Southeast Asia or Europe. And the US was planned after that, which really may be 5 to 10 years down the road. So at this point in time, can we feel good about where we are? We feel good about the FTAs that the government has been signing that will allow us to do more. And that's something that I think is, again, on course for us at this point.
Right. And Dr. Shah, that we've spoken about tariffs right now and overall market sentiment commentary, taking into consideration the various businesses that Mahindra Group is in, how would you actually decode a 25% tariff that has been announced?
Hiral, it's not material for us right now, and we are very confident the government has been always focused on ensuring there's a good balance, and that's what they will do. So I'm not really worried about it.
Okay, so that's a positive commentary on that one. From a sentiment perspective, if you have to look at rural versus urban, rural sentiment has continued to be better than urban right now from a market perspective. With the upcoming festive season, the interest rate tax cuts, how are you seeing that pan out from business? Are you seeing that recovery also coming in urban now?
It's a surprise why urban hasn't picked up as yet, because the fundamentals are very much in place. We are seeing more liquidity, we are seeing lending going up to some extent, at least, maybe not as fast as we'd want to. Interest rates have come down, and from all of those perspectives, urban should start picking up. Our sense is it's because of sentiment, and sentiment often requires a few triggers to have that turnaround. Festive season could be a very good trigger. It has been in the past, and I personally feel that the second half of the year will be a strong one for urban India and for the Indian economy overall.
Right. And when it comes to the other crisis that the auto industry was facing was rare earth. How are you seeing an impact in terms of M&M, or is M&M also looking at substitution measures from here on? And secondly, the rising commodity prices, because that is something that could put pressure, particularly steel and precious metals. So again, that dynamic overall.
So Hiral, the silver lining for a crisis is that it makes you stronger. And we learned a lot from the semiconductor crisis. And that has helped us tremendously in rare earths right now, because we've had to find substitutes for various components. And again, our team has done that very well, which has really taken away any concern for us. So at this point, we are not impacted, and there are a few things we still need to close for 2 or 3 quarters out, but we feel good that we will be able to close that as well. With regard to commodity prices, yes, that is a concern. We are seeing a significant increase in steel in particular, and a few other commodities as well. And that's one that we will pass on to the customer. We've taken some price hike already. And we just hope that it doesn't go on too much, because we don't want it to cause inflation once again. But there again, on balance, we feel that it will settle down, and the overall trend from pricing and inflation is good, and commodities is one that stands out, but that again we hope will settle down soon.
Right. Dr. Shah, with regards to the 15th August platform launch, I think this has been something which has been really spoken since quite some time, much awaited. Anything that you could tell us, because that's something which everyone is tracking, and the analyst day which will be slated in November.
I will just say it's an exciting platform, and we look forward to sharing it on August 15th.
Okay, we'll wait for that. And with a peer coming in the form of Tesla. What are you hearing? Because, when we talk to analysts as well, the commentary has been that there are reasons why M&M can actually beat Tesla in India. How would you look at that aspect of competition?
Well, we've got a wonderful set of products, and the feedback we have from customers is very, very strong. And based on that feedback, what we see of products, the only thing I would tell any customer is, please drive our product and then compare it with anything else you want and then make a choice. Many have done that and many have made a choice in favor of Mahindra, but that's the message I would give to all consumers.
Right. Dr. Shah, one last question, not from an auto perspective, but with what's happening in the IT industry. In fact, a very recent commentary that I heard from Mr. C.P. Gurnani as well, where he said, kitne aadmi the, and it explains why TCS's layoffs are a sign that a Sholay era is what is in the offing for the IT sector as a whole. How are you looking at it, and are you seeing concerns that AI is bringing in?
I think, Hiral, the Sholay era was long gone, because the IT industry started with call centers, which is where it was really about headcount. It transitioned from there and has made multiple transitions from there as well. So I would not read too much into TCS's announcement. Sometimes that's required from time to time. That is unfortunate, but I would not read too much into it. I think the industry has shown the resilience to continue to transform, to add value in different ways. Technology continues to be a very significant part of our lives overall, both as consumers as well as companies. And therefore, IT services companies are going to play a key role in every step of transformation that we see in technology that will cause them to continue to transform how they provide the services.
Okay, but Dr. Shah, just a quick one. Will we see a similar action that could happen at a Mahindra IT firm as well? Because that's the way the trend is panning out across the sector. So are you seeing concerns from that area where you could have to take decisions like that?
So we are not seeing concerns at this point in time, and I sincerely hope that we do not have to take any such actions at any point in time in future. We do care for our associates, and at this point, as I said, we don't see any need for that.
Okay, so that's Mahindra and Mahindra. So much news to capture this morning. I mean, before we get to our first story, I have to pull up the HUL chart. What is going on there? Numbers have been greeted with complete cheer from the street. Look at that intraday coming up. Just looking absolutely fantastic. So a strong set of numbers. The commentary coming from the management is enthusing. Just a reminder here, their conference will be at 11:15. We will be live with it. You will hear from the management and our questions to HUL as well. So that's turning out to be a star of the morning on an otherwise weak day. It's a bad day for listings though, and possibly, which is why you're seeing a weak listing for Brigade Hotels. It's listed at a discount of nearly 9%, recovered now 5% down. What are the key risks to watch out for as far as the business is concerned? Anushi's joining in with more.
Right, so if you are looking at a Brigade Hotel Ventures IPO, it's a decline, that is what we are looking at, and as compared to the listing price of 90. And there's a couple of reasons that why we should be focusing on and as to why the street is not cheering this particular IPO. Now, first of all, if you look at the room addition and the ARR growth, that has been comparatively lower than its peer set that we are looking at. And this is over the course of FY22 to 25 data that we've pulled out indicating the same. In fact, apart from the new or inorganic opportunities that the company is eyeing out for, majority of room additions also will take place post FY28 or FY29. So the trajectory of growth in terms of how 26 and 27 pans out is something that we should be watching out for. In fact, if you look at the growth also in terms of revenue, they've derived 63% of revenue from just 4 properties situated in Bangalore. So high concentration is what we are looking at as well. In fact, if they terminate any agreements with Accor or Marriott, that stands as a risk point of view as well. Do note that the company had incurred losses in FY23, so this continuing any subsequent years is something that we should be focusing on. Just about the company now, Brigade Hotel Ventures, it is owner and developer of hotels specifically in key cities in India, across South India, that we are looking at. It has a portfolio of 9 operating hotels with about 1,604 keys and intends to develop 5 additional hotels. Most of the hotels are managed by global hospitality chains as Marriott, Accor and Intercontinental. Their objects of this issue pertain to repaying certain borrowings for its subsidiary as well, SRP Prosperity Hotel Ventures, which is currently loss making as well, and pursuing other inorganic growth opportunities as well. So this is the overall picture that we are building for this IPO.
Yep, and certainly sulking today. Anushri, thanks a lot for that. Let's get in Vaibhav Sanghvi, CEO of Ask Hedge, to talk about how is he viewing the scenario currently. Vaibhav, good having you. Thanks for joining in. You've run a long short fund successfully. I believe you probably still have that option. I would love to know, how are you viewing at that opportunity in the Indian markets currently? If you had a chance to be short, would you be majorly short, or would you believe the bulk of the damage in the last 800-900 point correction is behind us?
See, I think apart from what earnings had to deliver, I think the events, if we kind of line up, then major of the events, to be very honest, are now behind, including your tariffs, geopolitical concerns, and whatever we may name it. I think are something which we are at this point in time, from here onwards, we don't see any of those kind of things kind of coming back. Now, in some sense, we can always say that the worst possible outcome is pretty much on the table. And in light of that is where the markets are. So possibly, I think, with some volatility on the downside, I don't see much of a, further reaction kind of coming, from an Indian market perspective because of this event. Of course, what is more important to monitor is basically what's happening into China, the Chinese policy and the flows which are moving towards China within the emerging markets.
Vaibhav, so, okay, that's an interesting way to think. If the worst of the outcome is on the table, yes, agreed. Are the markets pricing in currently the worst of that outcome, or are the markets thinking that, okay, the worst of the outcome is on the table, but we believe that the eventual outcome will not be as bad?
Of course, see, because worst of the outcome is pretty much on there. Anything which has to happen from here onwards has to be better in that sense. Of course, there are few sectors under Section 232 which may further see some amount of news flow if it comes through. But I think most of it is pretty much off the of the desk in that sense. So markets, in my view, from a sentimental impact perspective, has already factored in the worst of the outcome. I'm not saying that they are factoring in any recovery at this point in time, right? So if there is a positive news, which is either suspension of that tariffs for at least 60 days, 90 days, depending upon how the negotiations kind of come about, then you may see some amount of positive reaction coming back to the market as well.
Okay. Vaibhav, what have you made of the results thus far? I mean, are there any green shoots? Are there any, or are you also in the camp? We were talking to Gautam Duggad of Motilal yesterday, who said that while their estimates are 12%, all the client meetings that he did, most of them said कि 5-6% से ज़्यादा नहीं होगा. Where are you on that argument?
See, I think you are absolutely right. The buy side would love to be a little more conservative than the sell side in that sense. But my view is that I think, more importantly, there is diverse, set of earnings, in the sense that we have seen some weak earnings coming from, IT pack. There is some amount of weak asset quality concerns have, coming from few select banks and probably NBFCs. But apart from that, I think the larger private banks have kind of given a pretty good picture. Larger infra companies have been doing pretty good, and consumption has kind of kickstarted the earnings pretty decent, in line with the pre-quarterly updates as well. So my sense is basically from an index per se, if you look at it, IT we have seen a very huge correction post the kind of numbers. Right. I'm not sure whether we have seen the stabilization as yet, but at some point in time, the free cash flow yield kind of starts to kick in, and probably people will see some amount of valuation which will start getting cheaper. And as trade deals kind of get better or get framed up, you will see some amount of discretionary spend coming back to the IT space as well. So that's a fluid sector which we are still neutral on. Private banks we are turning kind of positive, especially on the larger ones. I think infrastructure companies, along with the capex driven themes, are pretty much on target to kind of deliver those kind of growth numbers. So I would be tilted towards probably double digit kind of earnings. I mean, of course, just touching about double digits. So I'm a little more positive than the other buy side street analysts.
Vaibhav, and this, of course, has just come in. HUL, fantastic numbers. That's moving quite sharply. Eternal doing relatively well, even on a turbulent day. You think the consumption story and domestic focused consumption story is the best bet right now, even as what is happening all over the world and with the trade deal still has time to settle in?
I mean, we have been advocating the whole consumption theme for now a quarter or so. The main reason, of course, is beyond the tariffs and the uncertainty regarding that, is what we are saying is that at this point in time, the central government, the state governments, and the central bank, all of them working together to revive the whole consumption piece. Of course, from a central side, we have tax rebates. From the state side, we have welfare schemes. And lastly, from the monetary policy perspective, we have decrease in rates, decrease in risk weights on the loans, increase in liquidity on an overall basis. My sense is basically everybody focusing on towards reviving the whole consumption piece. Lastly, from a year and a half down the line, we may also see the pay commission kind of changes also trying to get affected in. So when we look at from 12 to 24 months perspective, I think the valuations are pretty okay. I'm not saying they're extremely cheap, but they are pretty okay, which is factoring in pretty subdued growth from a consumption stuff. So my sense is because of the under ownership, the tailwinds from a policy perspective, we would be surprised on the whole consumption aspect over the next 12 to 24 months.
Okay. What amongst consumption? Are you going for premium? Are you feeling a bit enthused seeing the kind of reportage from an HUL, Nestle not that bad, ITC was decent?
So I think it may start with consumer discretionary and especially the newer kind of experiences like travel and tourism, food, restaurants. People want to spend in those kind of areas apart from the consumer electronics. So you may start with discretionary probably, and then on auto within the discretionary, especially on the two-wheeler side, is something which we do think that may gain some amount of traction. And then moving on to staples towards the premiumization theme. So it is that pecking order of you will see the transit coming about from an overall consumption basket.
Vaibhav, where would you be skittish on? I mean, and just one quick word. I don't know how you guys are thinking about positioning in pharma, because there seems to be an exemption. So even if the worst case thing is on the table, pharma is still up in the air, right? Exemption for now. Who knows what happens next? Are you positioning yourself in line with the healthcare index, or are you changing that exposure to pharma by not looking at the US generic exporters, but looking at maybe other healthcare index components? Like diagnostics, like hospitals, what have you?
Absolutely, Neeraj. I think let's understand this one thing very clearly, that US government would not want to antagonize their own citizens by making medicines expensive. I mean, this is the last thing they would probably want. So my sense is basically that this is the last sector. Even if it might get affected, it is the last sector it might get affected. And I don't believe that they would come out with aggressive, tariffs in the whole space. And generics, to be very honest, kind of provide the cheap medicines to them. So in my view, I think this is a sector which may be insulated, as like an IT service sector as well, from the whole tariff piece. In addition to that, my sense is also that looking at the traction from a generic side, looking at the price stability, I think this is a sector, because of the extra pessimism which has had because of Revlimid, we might see some amount of bounce back or bargain buying probably happening here.
Okay, thank you so much, Vaibhav, for joining in. As we wrap up a power-packed session of India Market Open, just want to point out a couple of things. One, HUL's become the star of the late morning trend, and also Indian markets overall. Neeraj, the fact that we're less than 0.75% down after 25% tariff, after statements calling this a dead economy, blah blah, shows the resilience of the Indian markets. This is hardly a reaction to crib about right now. It's showing that he's not being taken seriously. One,
as he shouldn't be,
and secondly, that we're not too concerned.
Yeah, and not too concerned. But yeah, we end with this thing that we appreciate formal dialogues, mutual understanding. That the tone, not necessarily the most inviting.
Yeah, that was not required at all. Well, with that, it's a wrap on India Market Open. Thank you so much for that. Stay tuned. Ask Profit up next.
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो,
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit and my name is Alex Matthew. This show gets you answers to all of your stock-related questions and there are several ways in which you can get in touch with us. Among them, there are two on the screen in front of you, and in fact, you've got the WhatsApp number on the top of the screen and the landline number where you can call us on the bottom of the screen. Now, there's quite a bit that has happened overnight, not least of which is Trump's tariff tantrum. The fact that he's levied a 25% tariff, or at least announced a 25% tariff on India. And there are several statements that he has made in the interim as well. Not too long back, he put a statement out on Truth Social talking about how India and Russia can take their dead economies and, well, effectively get lost. But there's a lot on the earnings front as well that we should be focusing on this morning, and there are a couple of stocks that are in focus, not least of which is HUL. We'll come to that in just a bit, but before we do, let's talk about Sagility and what a set of numbers this company has posted. You have margins that have been under pressure, but it's a positive guidance, and more than anything else, I think the management commentary is what is being sought very closely. So let's bring you that. We've got Ramesh Gopalan, the Group Chief Executive Officer and Managing Director of the company, as well as Doraiswamy Srinivasan. And they're going to be speaking to Puneet. Puneet, take it away.
Let me first start off with, the one key highlight from your results that's very difficult to ignore, and that's the increase in guidance for margins specifically in this particular quarter for FY26. What are you currently seeing on the ground that's leading you to such positive outlook in terms of FY26 at a time where the healthcare-focused industry in the US is seeming to be slightly under pressure? So what's driving this positive momentum?
Thanks, Puneet. Yes, we had a very strong set of numbers in Q1, and that's the momentum that's giving us confidence that FY26 will be a good year for us. A couple of things on the macro, like you said, there's a lot of things happening in the US healthcare, but a lot of them are tailwinds for us as clients come under more cost pressures and margin pressures. They're looking at partners like us to support them in their transformation journeys. And so since we operate in core operations, which is a non-discretionary spend for our clients, it is that area where clients are looking to improve efficiencies and take costs out. And that's where we partner with our clients to help them in their journey. So that's likely to continue, and that's likely to get a lot more impetus with the profitability pressures, and that's why we are confident.
Just to follow up, sir, because you mentioned that a lot of cost takeout deals has been happening in this industry, and it's quite similar to the commentary we're getting from other IT players as well, that the transformative deals are currently on hold, seeing a lot of cost takeout deals, but for them, the margins are quite lower in that. How does that compare for you specifically in terms of raising the EBITDA guidance in this year, despite going to a cost takeout deal model, at least for now?
Look, our business model, again, going back, we run the core operations for our clients, right? So when clients come to us, they obviously want us to run those operations at a lower cost. And they give us the latitude to transform their operations. So we use technology, we use automation, analytics, AI. We deploy them in the operations that we run for our clients. So unlike an IT services company, which actually does the project, we actually deploy those technologies in the operations work that we do for our clients to help them take out cost. And in the process, the client gains, and we also stand to gain in terms of keeping a bit of those efficiencies for ourselves.
And so, we also saw a couple of acquisitions, especially BroadPath in the last year as well. You had mentioned that this could be some kind of margin dilutive, but given this context of increasing the guidance, how does that shape up for this year?
That's still true. The EBITDA margins of BroadPath is lower than Sagility margins. And while we are working on synergy benefits, which will improve their EBITDA margins over a period of time, the dilutive nature of the BroadPath business is still true. If you realize our EBITDA numbers last year were even higher, right? So we had already guided to some dilution in the EBITDA margins because of BroadPath acquisition. But the guidance that we gave last time to what we are saying now is the EBITDA margins could be a tad better than what we had guided in the past.
And it could be in the range of 120 to 150 basis point as was indicated?
Yes, more likely in the 120 basis point range. Yeah.
And so in terms of deal wins as well, that's also been again a very strong one in this particular quarter. Is there any kind of differentiation that you're seeing from, because you had 18 deal wins from existing ones, but also 4 new deal wins from new customers. Is the trajectory similar to, as you mentioned, on cost takeouts as well as efficiency in their existing systems for US right now?
Yes, a lot of focus is on efficiency and cost takeout. But going back to your question, the 18 deal wins from existing clients, that's been the nature of our business. Most of our growth comes from existing clients. And once we build a relationship with a client, we tend to expand that relationship. And so that's played out well for us in the past, and that continues to play out well. But the specific nature of deals that you're talking about, yes, it's outsourcing by the very nature is for clients to get a lower cost. But in the current scenario, that pressure on further reducing the cost is just amplified.
And it's very interesting because while building into your existing clients as well as deepening your experience with them, the new client additions will of course help you in the medium term as well for increasing the aspects. So point well taken. Just one question, and that's been the talk of the town, which has been artificial intelligence, and how is that helping your current business? With your business momentum of reducing cost and as well as improving processes for your clients, has that already been incorporated in your existing deals, or are you being able to charge a slight more premium for the services offered with AI as well as integration of that in your current systems?
Yeah, so it's a little counterintuitive, right? So to your first question, the adoption of AI is gradual, right? So I won't say it's been deployed across the board. Like we've highlighted in the earnings call, we have deployed a number of use cases in our existing clients, and we continue to increase that penetration. To your specific question on how this works out, I'll take you back to the cost takeout, right? If I'm doing a certain piece of work for a client at let's say $X, the client wants me to deploy technology and bring down that X to X minus 10% or 20%, right? And so the question is not getting an incremental revenue because of transformation. It's actually reducing the cost of operations for the client. The way that we are able to retain our margins and grow our margins is we can possibly increase more efficiencies than the efficiencies that we give clients through price reductions. And so part of the effort that we get back basis the efficiencies that we generate also helps us retain our margin. So overall, while the revenue might be cannibalized when you do transformation because you're taking cost out, which means your revenue reduces, it could help you stabilize and improve your margins.
All right, so that's the management of Sagility talking about the road ahead looking much brighter than anticipated, and so that's reflected in the stock price as well. But let's talk about HUL, arguably the stock of the day this morning in the context of the Indian equity market seeing selling pressure. And this is a measured response, if you can call it anything, this morning to the tariff announcement. But really, HUL up about 3.9%, the top gainer on the Nifty 50, and single-handedly pulling the rest of the consumption pack forward as well. The initial print or the bird's eye view of the earnings that were posted not too long back is that the top line was in line and the bottom line was better than anticipated. But who better to give you a sense of what the numbers look under the hood than Mahima Vajrajani, who's gone to attend the HUL conference, which will start very soon. But Mahima, on the sidelines, tell us what you're picking up from the numbers and what specifically you're going to be speaking to the management about.
Right, so Alex, as you rightly mentioned, it's the single stock that's single-handedly pulling the Nifty up, and this is because the investors have shown enthusiasm in the kind of results that it has posted. Good set of numbers, PAT did beat in fact estimates, revenue did meet estimates, margins largely in what the street was expecting, EBITDA almost flat as we speak. Now in terms of, what has worked this quarter, volume growth has bounced back. There's volume growth recovery that's been seen, up 4% on a year-on-year basis, plus the underlying sales growth also at 5% is something that the street is enthused with. Now, in terms of EPS growth as well, double-digit EPS growth is driven by top line, and mid to long-term outlook also remains of a double-digit EPS growth. In terms of the segmental performance, good set of numbers there as well. Home care saw good underlying growth of 4%. Beauty and well-being, good growth of 7%. Personal care, 6% again here. Food, which was a negative growth last quarter, has seen a good growth of 5% this quarter. So all in all, a good set of numbers for sure for HUL, and that's why we're seeing the uptick in stock. In terms of the outlook, price growth to remain in low single-digit range is what the management has said in their press release, and EBITDA margins to remain in the range of 22 to 23%. So guidance is largely maintained in terms of where the EBITDA margin stands. Lastly, in terms of update on ice cream demerger, the demerger is set to be completed by Q4 FY26, as in when they get the regulatory approvals is what the timeline suggests right now.
Okay, Mahima, I know that you're standing at the headquarters. I wonder where the building is because I can't see it behind you. If you can pan the camera and show me the building. And also what I'd like to know from you is what are you going to be focusing on asking the management, because there's going to be a change of guard as well, if I'm correct, and this is pretty much the last conference that the Chief Executive Officer will address.
Right, absolutely. So, Alex, I think the key questions to ask here would be that there are certain FMCG companies that have gone out and said that they are seeing green shoots in the urban recovery, demand recovery. Is that something that the HUL management has also seen? Because HUL being the bellwether in the FMCG staple space, so that's one question that I would want to know about. The second aspect, where there's volume recovery in single digits right now, could that be up in the next few odd quarters with a lot of perks coming in, for example, tax cuts, rate cuts, etc.? So that's the other aspect that I would want to know. And the third part being the competition that's coming in from the unorganized space, especially in the beauty and well-being section, because that's the segment that they're going big on. So that's something that I would want to definitely know from them.
Got it. And we will cut in just a short while, Mahima, to find out what the management has to say to all of that. Thanks so much for joining us as always. Missing you in the studio though. Let's go to our experts today. We've got Kush Bora, founder of kushbora.com, and Avinash Gorakshakar, Director Research at Profit Mart Securities. Gentlemen, thanks so much for taking the time as always. And apologies, we're coming to you quite late. Avinash, very quickly on HUL, what did you make? Okay, so Kush, first I'll come to you on the charts. A pretty measured response in light of what we've heard on the tariff front, but specifically on HUL, it's had a pretty bumper response to the Q1 numbers.
Indeed, Alex, but I think now what happens is that, the stock actually now sits at this resistance mark of 25.50. There seems like there is enough and more momentum for the stock and the volume action also to push it past this resistance mark, and we need that to happen. HUL in particular and FMCG as a sector in general have actually not performed as much. If HUL does make that leap, at least in terms of the price action, then you will see some of the other players like Britannia also participate. So while I'm not gung-ho about the kind of price moves that we are seeing today, because we've seen these rallies fizzle out a couple of times, but it is very interesting, juncture that it is at 25.50. If that is taken out, then yes, this new wave of up move could start in HUL and perhaps in the rest of the FMCG pack as well.
Avinash is with us as well. Avinash, very good morning to you. What did you make of the HUL numbers, and would you buy right now? The stock is up 4%.
Yeah, good morning, Alex. Sorry for the interruption. There was some internet issue, so my apologies. I think clearly, Alex, numbers have been better than what the street expected. And I think, with a good monsoon, I think hopefully the volume growth would kick in. And I think the markets are now looking at more of domestic themes. After Donald Trump's announcement of the tariffs, I think markets are going to be more, positive and structural on domestic themes. Specifically, if you look at the FMCG market, Hindustan Lever is one of those companies which has got a very large product basket, a very strong geographical reach. And hopefully, if the monsoon is good, rural demand picks up, then I think you could see margins also improving. And most importantly, the volume growth kicking in. So I think the September quarter and the second half of this financial year is going to be equally important. And if that sustainability is there in the numbers, then I think you could definitely see a further re-rating for the stock. This is definitely an institutional favorite, but I think if tailwinds indicate, I think the second half should be much better. So I think we continue to be structurally positive here.
Okay, continue to be structurally positive on HUL. And viewers, please bear with us. We're going to start the query segment right now. We had breaking news to deal with, and a lot has happened this morning. But the first question today is Shailaja from Hyderabad asking about Reliance Power, border levels of 65 rupees. Gentlemen, let's run through some of these questions very quickly to make up some time. Kush, on the charts, is this a good point to buy, or would you wait for a dip to add more? She's got 250 shares.
Alex, I would wait. We've seen a lot of action around the around the counter for some time now. The dip started some time ago. While this downtick is on fairly low volumes, there hasn't been much to say that a turnaround is imminent. A couple of immediate support levels. The first one is at 50.5, and if that is broken out, then 46. If those are held, then yes, you could see the counter go sideways. But I wouldn't really advise an accumulation or a buy on Reliance Power just yet.
Okay, so it's an avoid as things stand right now, but it's a hold, right?
More of a hold, Alex, rather than an avoid. I wouldn't put in fresh money, but if you have, you could hold with the levels that I just mentioned.
Got it. All right. Dheeraj from Hyderabad is calling us about Macrotech Developers, which is now called Lodha. Dheeraj, very good morning. How can we help you today?
Sir, I'm holding 145 shares of Lodha at 1285, sir.
Okay.
Sir, should I stay invested in this counter for the next 1 to 2 months, or already I have Sam's shares, sir? So should I add more shares to it?
Okay, but
should I sell both of them and shift to something like JSW?
Dheeraj, you watched this show before, haven't you?
Sir?
Have you watched this show before?
Yes, sir.
Yeah, then you know that we're going to take only one of your questions. Lodha is the question that we will take today. Maybe tomorrow we'll take the other one. 1285 is buy price for Lodha. 1 to 2 months is the time frame. Kush, what's the view on the charts? Real estate has been chop and churn recently.
Alex, I would continue to hold Lodha. The reason being that the entire pack has seen a very sharp downtick, and Lodha now where it sits is at oversold territories and close to the 200 DMA support. So a rebound is imminent. While his buy price is 1285, major resistances come in much higher, 1330, 1350 zones. So a rebound itself could take the stock to his buy price and even slightly higher. I would keep a stop loss near the 1170 mark and continue to hold. And a quick word on CAMS, you could continue to hold that as well with a stop loss around the 3580 mark if that's a positional trade.
This is cheating, yaar. Coach, this is cheating. I have a rule in place. All right.
It said so.
Kanti Bhai has got the next question asking about, all short-term views being sought. Sham Metallics is the name of the counter. 1 month views being sought by Kanti Bhai. What's the view on the charts, Kush?
Alex, I'm not sure if Kanti Bhai has been listening to us on the morning show, especially on Mondays. The reason being Sham Metallics is actually my weekly pick that I share on Monday morning, the India Market Open show. If you see the moves on this one, they've been very encouraging. It's only down because of the market moves that we've seen. But despite that, if you see the moves that it made yesterday, the recovery and the sharp recovery that it made yesterday, very encouraging. So long story short, continue to hold Sham Metallics. For me, a positional stop on this one is at 920. I'm looking at targets of 1018 and 1069. If you don't have it, you could still go ahead and accumulate Sham Metallics at the current levels.
Okay. Tarun has got the next question. He's asking about Ujjivan Small Finance Bank, which he's got 1,000 shares off with more or less 1% profit. So it's very close to the current market price. On the fundamentals, Avinash, would you hold or would you exit at this point?
No, I think, Alex, I would prefer to hold because clearly, whatever pain was there in the microfinance segment, I suggest that, if the investor can hold on for the next, say, 6 to 12 months, typically FY26 should be significantly better as compared to FY25. I think maybe post-September, I think you could see a much better traction in terms of the business, in terms of the asset quality, and in terms of the profit traction. So I think we continue to be positive here, but I think keep a time frame of at least 12 to 15 months.
Got it. All right. The next question is coming in from Kiran. Kiran is calling us from Hyderabad. Hi, Kiran. Very good morning to you. How can we help you today?
Hi, Alex. Good morning, and good morning, Kush and Avinash. I have one question on Timken. Last week, sometime back, I bought 100 shares with the price of 3515. The Kush referred the stock and it was interesting me. I also gone through the couple of things from this company because I already hold Sona, BW and also some other automotive stocks. So that's the reason I feel like this is interesting company. But currently I just want to know whether I need to hold or I need to add some more shares to my portfolio.
And this is a short-term...
This question, sorry to interrupt you, especially this question to Kush.
Got it. I understood. And this is a short-term view that you're seeking for the next month and a half to 2 months?
No, I'm a long-term investor.
You're a long-term investor. All right. So you're looking at the charts and at what point is it a good idea to accumulate this stock? All right. I got the question. Kush, you heard it. He heard it first because you mentioned it. I wonder when that was. But he's bought at levels of 3515. What is a good level to accumulate?
So first up, thank you to Kiran for pointing this specifically to me. This was on 24th of this month, that I put out a call on Timken. In fact, it's after a while that, a call on Timken has been put out. The stock's actually seen a very smart recovery from the lows. I still maintain, that the stock is in a mild uptrend. However, the pace of rise has slowed down largely because what the market is doing. So the first point to Kiran is that, if you do listen to a call and you execute it, it's a good idea to, apply the stop losses as well. But since you're a long-term investor and you want to continue to hold, I would suggest, a deepish kind of a positional stop loss for you, which is just under the 200-day moving average for Timken. That comes in at about 32.25. So continue holding on. The recovery is underway. The fall in the stock has also been because of what's happening in the markets and on fairly low volumes. So yes, once these issues die down, the uptrend on Timken could well continue. But nevertheless, keep a stop loss near the 32.25 mark.
32.25 is where you keep your stop loss. Pay very close attention to the stop loss in any trade that you take. All right, the next question that we're taking is also short term. It's a very small company. Kush, it's Indo Farm Equipment. It's trading at 203 rupees. It's 975 crore market capitalization. And the question is coming in from Suresh, who's saying that he's bought at levels of 203, which is pretty much where the stock is currently at. Would you have any advice that you can give him on the chart?
So, to be completely honest, I have not very closely tracked this one, and it's listed fairly recently, just at the start of this calendar year, so fairly limited data. So you might have to excuse me on this, Alex.
I'm just going to take a chance. Any chance you have a view on this one, Avinash?
Yeah, I think it's basically a tractor manufacturing company and a very large kind of track record. So I think the company has now started delivering good numbers. Hopefully, with a good monsoon, tractor market sales are going to definitely grow quite positively. So I would suggest that if the investor who has asked this question has a time frame of at least 6 to 12 months, I think he should stay invested. He should not worry. Typically, the market for this company is largely the domestic markets, so they don't have any issue, coming in from the US India tariff related kind of headwinds. So at least for the next 6 to 12 months, if you can hold on, you could definitely get a decent risk reward. So continue to be positive here and please hold.
Got it. Hold is a view on Indo Farm. All right, we have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे क्लियर.
हेलो बोलिए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार वो खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Ask Profit. Let's jump straight back into it. We're taking all of your questions. And by the way, if you're just tuning in, the way to get in touch with us, either the WhatsApp number at the top of the screen or you can call us on the landline number at the bottom. The first question on this side of the break is from Venkat Ramani, who's writing in from Bengaluru and asking about Natco Pharma. He's got 950 shares and he's holding 120 shares. He's thinking of holding for a period of 15 months. Kush, what's the view on the charts?
It's a very interesting setup. The stock has actually done rather well, and there is a rising trendline support that the stock is still sitting at despite the kind of cracks that it's seen in the last week or so. So on the whole, my view is to continue to hold Natco Pharma. On the downside, you've got supports near the 920 mark that should act as your stop loss. And on the way up, you're looking at levels of about 1015 once that is taken out, 1050 as well. So Natco Pharma is a very clear hold.
Okay, Natco Pharma is a hold. Suresh from Ludhiana has got the next question. He says that he's a long-term investor and he wants to know whether it's a good idea to enter into some defense stock. And he's named BEL. And if not BEL, which would you suggest? Avinash, at this juncture, a lot of these defense counters have seen a little bit of profit taking. And that's understandable considering the kind of run that they had after Operation Sindoor. Would you say that BEL is still a buy or would you wait for dips? Or any other defense counter?
No, I think Alex, I think he can possibly deploy say 25% as of now because defense companies, despite seeing a little bit of profit booking, valuations are fair to expensive. So I think his choice of Bharat Electronics seems to be fine. He could also look at companies like Bharat Dynamics or Hindustan Aeronautics, because these are the large players which are going to benefit significantly from the government's Make in India policy. All these companies are sitting on an order book which is going to run for at least next to 2 to 3 years. So I think you need to create a long-term portfolio, but I think deploy 25% now. And on a SIP basis, any decline should be used to accumulate these stocks.
Okay. All right. The next counter is on Tejas, or the next question is on Tejas Networks. And Shahul has got this question. He's got 71 shares, but he's holding with a loss of 23%. And he's wondering what to do. Should he buy more or hold or exit? Kush, what's the view on the charts?
So I'd wait this one out, Alex. The stock has actually done phenomenally well, a couple of years, about, up until a year ago. But then it's just fallen off the cliff. Now there are some stiff support zones near the 525, 550 mark, which are, being tested. But if those are broken, I think the long-term trend which the stock was into, might just get broken. Right now, it is actually hitting oversold territories on multiple time frames and could see a rebound. So my suggestion would be a hold. Since it's a positional trade, I would suggest a stop loss around the 550, 525 zone, between that zone, and continue to hold. The stock could witness a rebound from these oversold territories.
Got it. All right. So that's the view on Tejas Network. The next question is from Shrina, who's writing in from Kerala. I have asked her what her buy price is for Jio Financial Services. She says she's got 80 shares and she's wondering whether to keep it or hold for the long term. And I'm also wondering whether she intends to buy more. I have asked her, but she's yet to respond. Avinash, on the fundamentals, what would you say about Jio Financial Services? It's done reasonably well in the recent past.
No, I think, Alex, if the investor has invested in Jio Finance, I think you need to take at least a couple of years in time frame, because this is a business which is going to disrupt the entire financial services market. They have the balance sheet strength. They have, a very strong kind of parent in the form of Reliance Industries. And recent reports indicate that, the management also wants to buy around 4 to 5% stake. So basically, they are going to put in a lot of their own money in the company. So my sense is, the tailwinds in the financial services space are very positive, except for some short-term hiccups. There could be some ups and downs, but otherwise, over the next 2 years, a lot of wealth can get created. So the investor needs to keep a long-term view here if he wants to make a, very good risk reward from current odd levels. So continue to hold.
Continue to hold, but would you buy at this current juncture or would you wait for dips?
No, I think one can buy, say, 25% as of now. See, because clearly with now the market talking about the management putting in a big amount in the company to raise their equity stake, clearly the stock is unlikely to go down in the near term. So I think at the current level, maybe 25-30% can be deployed. And I think use an SIP approach, because over the next 2 years only value could get fructified.
All right. So take a long-term view is a point. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
Good morning, Alex. Good morning to the panel. So I have query on Orient Technologies. So this is data center stocks are now falling, and this stock is creating something like 14% downfall in my portfolio. So my query is whether I can hold or sell now, or it is having some potential, I can add some more.
Okay.
And I'm looking for 1 year overview.
Okay, got it. Kush, on the charts then, he's bought it 363 and he's wondering whether to hold or add more or sell. What's the view?
So, Alex, the structure doesn't look great in particular. But what's happened is that, the stock is now seeing a positive RSI divergence on the daily chart, suggesting that, a rebound could be around the corner. So I would suggest a tight stop loss at the 306 mark. That's a support zone for the stock. And on the rebound, you'd be better off exiting at 330 and about 350 kind of level. So he may not see, profits in his position, considering his buy price is significantly higher. But, if any kind of rebound does come about, then he could exit at a lesser loss. But yes, the 306 stop loss, keep it a strict one. And if it breaks that level, then you're looking at much lower levels below 300 as well. So yeah, with a stop loss, tight stop loss, continue to hold. and exit at any kind of rebounds that you get.
Okay. All right. And then the next question is from Arun, who's writing in from Tamil Nadu. Bought IndusInd Bank at a price of 1,044 in October, and so therefore saw quite a bit of a drop. And then later even bought at 898. At this juncture, we've just seen the earnings come through and it wasn't a pretty picture. Avinash, the question is, how low can it go from this point? Can it get worse, or is it in the price? And would you hold?
No, I think, Alex, the investor has purchased this share at a slightly higher level, and I think rather than booking a capital loss, I can only tell him that you need to now stay invested for the next at least 12 to 18 months. The Q1 number has not been encouraging. A lot of profits have come from treasury gains, and I think the markets are still not comfortable. Unless 1 or 2 quarters come and where we see strong growth, continuation of good asset quality. I think these are things which are going to take time till at least December. So I think he has to remain invested. Otherwise, he'll have to book a big capital loss. So my suggestion is continue to hold, but keep monitoring quarter on quarter kind of performances. And as of now, I don't think the stock is going to go down below these levels. I think the worst seems to have been discounted, but upside will remain, dependent on the next quarter and at least 2 to 3 quarter performance going forward.
Indeed, who comes in to take charge of the bank? There's a bit of a vacuum in place in the corner office currently. There's no chief executive officer. All right, let's take the next caller. We've got Snigdha calling us from Hyderabad. Snigdha, hi, welcome back to the show, and how can we help you today?
Hi, so my query is regarding Tricon. So I have 230 shares at 438 rupees.
Okay.
So I purchased them yesterday. So should I keep invested, or so as there were results today? Or should I shift to any other stock?
What is the time frame that you have in mind, Snigdha?
So 1 to 2 months.
Okay, all right. So Kush, on the chart, she's recently bought 430 is a buy price. It's currently at 433. How is it? No, it cannot be lost, right? The share price is 433. We'll have to get that checked. She's bought at 430 levels. What would you do with this? Would you hold for a month or more?
I think she said her buy price was 438, if I'm not mistaken, or 430. Alex.
Okay, I can read 430 on the screen. So
okay, sure. I'm actually quite intrigued as to why did she buy this stock, because while it's done phenomenally well in the last 3 to 4 years, the recent trend has been actually consolidative, sideways at best. Maybe she's playing for a rebound. So in that case, 424, that's a very strong support zone for the stock. Multiple times the stock has come to those levels, hit them, and then rebounded. So perhaps she's trying to do a range play. In that case, it's a fantastic idea. But that would mean that you keep your stop losses at the range, at the lower end of the range, which is 424. If that is broken, then this consolidative phase could actually shift lower. So keep 424 as your stop loss. On the way up, your targets are 450, and once that is taken out, 465 as well. So yes, lower end of the range, risk reward ratio seems positive, but a strict stop loss at the 424 mark, and continue to hold pre-call.
Okay, the next question is also coming your way. This is on Kalyan Jewelers, and this is from Dr. Venu Verma from Bhimavaram in Andhra Pradesh. Bought at levels of 60 rupees a share. Would you book profit at this point and exit, or would you hold for a year more? What's the view, Kush?
The buy price is 410, right?
Correct. No,
yeah, okay.
Buy price is 60 rupees.
Okay, fair enough.
No, sorry, no, 410.
That's
410.
the quantity.
Apologies, 410. Yeah, sorry, my bad. I haven't looked at the ticker on the screen. It's obvious that you were looking at the ticker, and so you were wondering what I was saying. Yeah, 410 is the buy price.
Absolutely. No, I would continue to hold. First up, let me congratulate him for buying it at 410, because assuming that he's done that in this calendar year, it will be actually the very low, the very near bottom price that he's bought it at. So phenomenal pick, and kudos for him to holding on to this stock as well for the kind of move that it's seen. In fact, it's popped up on our radars as well. For a fresh buy initiation, we haven't done it so, but the structure seems fairly positive. I think you should still continue to hold Kalyan Jewelers. If you go by the recent highs of 800, I think there is some more recovery underway, and very much likely I would still keep a stop loss near the 555 mark, And with the kind of momentum that the stock has got, I would be surprised to see it pass 625, 650 zones as well, in the coming couple of months' time. So Kalyan Jewelers, a very clear hold. Keep a stop loss at 555.
Yeah, all right. Apologies, I hadn't looked at the price, but we eventually got it right. Hopefully that helps you, Doc. All right, the next question is coming in from Shankar Narayan, who's calling us from Bengaluru. Shankar, very good morning to you. How can we help you today?
Very good morning, Mr. Alex. Your evening 4 to 5, never missed that. It's a very beautiful show, especially on TCS retrenchment. You have done an excellent work by that HR also.
Thank you so
really
much.
Really appreciate the good work.
Thank you, sir.
I think you are from Kerala?
I am from Kerala, yes. My family is.
Yeah,
I grew up right here.
I'm from Cochin.
Oh, very nice to know. How can we help you today, though?
Sir, I just wanted to know whether it's the right time to enter the specialty chemicals.
Okay.
I have two stock suggestions, either Indoamines or Acutas, earlier Ami Organics.
Yes.
Renamed as Acutas Chemicals.
Yes.
Whether it's the right time to enter, because one is high PE, other one is low OPM.
Okay. Shankar, you'll have to forgive me because we have to cut across. I'm just hearing that we're starting the HUL press conference. If we have time, we'll try and take the question after. If not, we'll take it tomorrow. Let's cut across and find out what Mr. Rohit Java has to say.
As expected, consumption demand trends for latest 3 months reflected a sequential improvement. However, at a MET level, the consumption environment remains stable, with rural demand continuing to grow ahead of urban demand. Commodities continue to display divergent trends year on year. However, on a sequential basis, we are beginning to observe signs of softening across key materials. Over the past few years, we have accelerated our portfolio transformation journey by making sharper, more strategic portfolio choices. In light of this, we believe it is both timely and relevant to present our progress from a consolidated results perspective. In this backdrop, let me talk about our consolidated performance for the quarter. With a turnover of rupees 16,323 crores, we delivered an underlying sales growth of 5%, driven by an underlying volume growth of 4%. We stepped up investments across different lines of P&L, resulting in an EBITDA margin of 22.8%. While this is a 130 BPS year-on-year decline, it remains in line with our guidance. This has resulted in delivery of broad-based and competitive growth, leading to consistent increase in turnover-weighted market shares. Our profit after tax before exceptional items declined by 5%. However, profit after tax increased by 6%, primarily due to re-estimation of tax provision with respect to potential disallowance of certain expenses pertaining to prior years. Our performance reflects the disciplined execution of our Aspire strategy. The actions we have undertaken to execute our strategy are translating into consistent volume-led growth. We have systematically reshaped our portfolio to focus on higher growth demand spaces. This is evidenced by a significant circa 500 BPS shift towards future core and market maker segment in the last 2 years. As a result, our growth trajectory has steadily improved. In a moderating consumption atmosphere, we have delivered mid-single-digit absolute volume growth in last 5 quarters. Over last few quarters, we have strengthened our market shares driven by sharp focus on channels of the future and acceleration in performance of our large categories such as laundry, skin cleansing, and hair. Since 2021, we have gained circa 250 BPS of turnover-weighted market shares, reinforcing our leadership and emerging stronger from the inflation and deflation cycles. Moving on to our segment performance, Home Care delivered another quarter of robust volume growth. High single-digit UVG translated to 4% USG as we continue to pass on the benefits of lower commodity prices to consumers and ensured competitive pricing. Fabric wash delivered mid-single-digit UVG, while household care delivered double-digit UVG. Our liquids portfolio in home care continued to perform well, delivering sustained double-digit growth. Beauty and Wellbeing delivered 7% USG with a low single-digit UVG, driven by competitive double-digit growth in channels of the future. Hair care grew in mid-single-digit on a strong base, while skin care and color cosmetics grew in low single-digit. With the completion of Minimalist acquisition and acceleration of performance of Oziva, we have now further added an annualized 1,000 crore portfolio in high growth demand spaces. Personal care grew 6% driven by pricing. Skin cleansing delivered mid-single digit growth. Non-hygiene segment continued to accelerate its performance, growing in double digit. Oral care grew in mid-single digit, led by Close-Up. Foods USG was 5%, driven by mid-single digit UVG. Our beverage portfolio, consisting of tea and coffee, delivered double-digit growth. Within that, tea grew in high single digit with positive UVG. Coffee continued to deliver double-digit growth driven by pricing. We continue to strengthen our market leadership in lifestyle nutrition and have seen a sequential improvement in performance in the quarter. Packaged foods delivered mid-single digit volume-led growth, while ice cream business saw a volume-led high single-digit growth for the quarter. Next, let me share an update on ice cream demerger and acquisition of Minimalist. We will convene a meeting of HUL shareholder to consider and approve the ice cream demerger scheme on 12th of August 2025, basis direction from the Honorable National Company Law Tribunal. To recap, a mirror demerger is being proposed here. That is, for every one share held in HUL, shareholders will receive one share in Quality Walls India Limited. This will unlock value for all the shareholders of HUL and give them the flexibility to stay invested in the growth journey of ice cream business. Moving on to Minimalist, we successfully concluded the acquisition of 90.5% stake with a total payout of 2,706 crores. HUL, along with the founders, are now working closely to chart the future course of growth for this brand and the business. Moving to our near-term outlook, our growth guidance remains unchanged. We expect first half of this financial year to be better than second half of last financial year. If commodity prices stay within the current range, we anticipate low single-digit price growth. We are committed to invest across P&L, driven by sequential improvement in gross margin. Consequently, we expect EBITDA to be in the range of 22 to 23%. Looking ahead, we remain firmly committed to driving competitive volume-led growth while creating long-term value for our shareholders. With this, we complete our prepared remarks. We'll take questions.
Good afternoon, gentlemen. I just wanted to, numbers have been in line with expectations. Can you quickly run us through, are we seeing a gradual recovery in urban consumption also? If you could give us an update on that, and the rural momentum also, what that's been like. And the second question, I wanted to sort of understand, recent announcements. What has caused the change in leadership now? Has this sort of been a sudden decision, or has it been a gradual one? If you could just quickly update us on that. And also, Mr. Tiwari, does this mean that you are also going to be leaving soon?
Yeah. So let me pick up the urban, rural, and consumption atmosphere, then get.
And I'll take the other two questions.
Yeah. So overall, we had mentioned that the macro atmosphere for consumption is looking more positive. The amount of liquidity increased in the country, number one. The lower inflation, which has been really hurting for the last few years, that is now much better, including food inflation. We have seen positive news in terms of taxation relief in the country. And if I add all those things put together and then take the factor of monsoon, which has been pretty good last year, and also encouraging monsoon in the current year. If I add all those factors put together, overall macro atmosphere looks encouraging. Equally, as I mentioned, internally in the company, we have strengthened our core portfolio and further improved our future core market maker. So overall consumption climate, the sequential improvement that we have seen, we expect it to be sustained, the gradual recovery that we've seen. And even for our business, very similar conversation. The growth has been for FMCG industry led by rural, where rural growth has been ahead of urban. Again, the same conversation, when inflation reduces and agriculture comes better, it helps a large portion of the rural income. So FMCG growth overall, hence I mentioned in summary, has improved sequentially, and we expect this sequential improvement to be sustained. And for leadership changes?
Look, let's first address the question on my movement. Yeah. I've spent 37 years with Unilever, a large part of that with HUL and also with Unilever. So personally, I've come to a stage in my career, and you would agree that 37 years is a long time, that I want to now do something else in the second stage of my career and life, different from what I've done the last 37 years. So it's been on my mind for some time. And we came to a decision collectively with the company that this would be about the right time. Why? Because while the last 2 years have been pretty tough from a macro and a consumption context, I feel quite fulfilled and validated that we have grown in these last 2 years competitively, despite the consumption strains. We have grown it by volume. Not just that, we've also shifted the portfolio. We made the right changes on our portfolio, made it more future fit. And importantly, I'm very happy that we've set this SPIRE strategy, which is really simple but quite valid for us, which is just about moving our portfolio to faster growth spaces and channels. And the strategy has been socialized, it's delivering. In fact, in this quarter results, it's in exactly the same shape as we would have expected it. And we are very committed as a company to continuously stay on that path of investing for the future, and because we know that it's generating results. So I feel it's about the right time. We have a very good, ready successor. Priya is another homegrown talent like me. She has spent more than a quarter century in the company. She's been on the management committee for 7 years, on the Unilever executive for 3-4 years. She's headed big global businesses, B&W or Beauty and Wellbeing. You know that 2 years ago I split the division and made B&W a specific division because that's really a driver of value growth. So she's also therefore absolutely well casted to drive that forward. And our talent bench is seamless. Whether it be functions or in the general management, we always are grooming people, and she was ready and I was ready, and therefore we've taken the decision. So it's a well-considered, deliberated, thoughtful decision. Both of us are lifers in a sense of this company, and I'm cheering for her and the company, and I'm feeling pretty good about charting my next path, and also feeling good that Priya's in charge.
Right. And Mr. Tiwari, we've also heard that you're probably also going to be moving on to a global role going forward also. If you could tell us, is that happening? What is the plan there?
Yeah, as you see, I continue to be CFO of Hindustan Unilever, and if and when there's any announcement to be done, we will inform. For now, I'm very clearly focused on my key priorities. Number one is to drive the growth of the business and to support Priya as she lands in the business as a new CEO.
Ritesh and Rohit, both of you, congratulations. I think, we were discussing earlier also that HUL is the only counter that's keeping the Nifty in check today, and that's reflected in the results as well. Just want to get a sense on the volume growth, because this quarter there's been volume recovery and it's a good quarter per se. You're saying that, the price growth going forward is going to be in, that single digits. So do you think that volume growth from now will be better than what you've done this quarter, because there are clear signs of rural picking up? There are FMCG companies that have gone ahead and said that there are urban green shoots that also are being seen. So volume growth, can we expect that to be in high single digits going forward?
See, overall, as I mentioned that over last almost 12 months time, it's a stable atmosphere where we've seen improvement over the last few years, and especially last 12 months time, and that consumption climates remain stable. We are seeing some uptick in last 3 months time. More, of course, we have to understand that rural continues to be encouraging. So all the economical factors which are supporting growth are present. We expect the improvement to be sustained. And overall, if I talk about the growth of Hindustan Unilever, since the outlook for pricing is low single digit, commodities are range bound, so the growth will be volume led. And we are always very clear that when we drive growth, growth has to be competitive, which means growth ahead of the market. We spoke in the current results that the growth has been competitive. We gained turnover basis market share, not only in last 12 months time, but also in last 5 years time. And that's a pretty strong performance, and that remains the focus for us. So expect sustained gradual recovery, and we have to ensure that as HUL we keep growing ahead of the market and keep gaining share.
Just so what Ritesh spoke about is the macro, right? And we said that last time also, that we expected macro, all the actions taken by the government, and with inflation being so at 2% levels, we are investing for that macro, right? And we were investing ahead of the curve. There are also strongly internal factors. We are driving the growth by allocating resources to our future core and market makers portfolio, and to future growth channels. So we see us doing quite well in those spaces. So, and that's a large part of our business now. And increasingly every quarter, as that proportion gets bigger, the growth of our total average growth will start to become even more, I would say, easier, because we'll be in the faster growth spaces. So it's not a one quarter thing. So we're very happy with this quarter results, right? But there'll be good quarters, bad quarters, average quarters. We will stay on this path. And it's the strategic consistency, the long-term nature of this game you should expect from HUL, because we are fighting for the big future where every category that we operate in is a low per capitas. All categories are premiumizing. People are improving their quality of life. So we are betting on a prosperous, developed India, not just only for short term. So I'm just appealing all of you to sort of look at the long-term opportunity in this market that remains extremely exciting. Probably the only market of this scale in the world that will continue to be of this attraction for many, many years going forwards.
Just follow up on the leadership change that you were talking about. You've known Priya for quite a while now. Just want to get a sense that is there going to be some change in terms of how strategy will be adopted by her? Because, leadership could be different for different people. Any kind of color there, if there are early signs of picking up there?
So I think, let me just take that question. So look, the strategy is about moving our business to faster growth spaces and faster growth channels, benefits, brands, segments, channels. So, I mean, it's very obvious, fact that you should basically go where growth is. So I don't think that's going to change. The color and shape of the specific nuances, they have to be in line with the changing conditions. So we should never call strategy as it's not a fixed thing. It's evolutionary. But the broad direction of competitive volume-led growth is what we're going for. As you said, price growth will be lower than, say, in the past. We're going for growing in the faster growth channels and benefit segments. We are about increasing the premiumization of our portfolio. That is continuously increasing. In fact, the last 2 years that I've been in this role itself, we have moved our portfolio by almost 5% more towards future current market makers. And that just shows you the direction of travel. And I'm quite certain that's going to remain Priya's focus. Specifics of all of this will have to be customized to the conditions she will find herself in the quarters and the years to come.
रोहित सर, मेरा सवाल आपसे है, 37 ईयर आपने HUL को दिया.
All right, there you go. Rohit Jawa and the management of HUL speaking to NDTV Profit at the conference, and the stock reacting up about 3.4%. Incidentally, that was probably Rohit Jawa's last press conference as the Chief Executive Officer of HUL, and he was speaking about the times to come and who's going to take charge, what the strategy is going to be. Stay tuned for a lot of analysis on HUL and everything else, but up next is Know Your Company, and we're talking about JBM Auto. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम, एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on
Hello and welcome to NDTV Profit. You're watching Know Your Company, that's KYC. Today on our radar is a JBM Auto. Joining me is Puneet as well, who tracks the sector pretty closely. But let's first understand, Puneet, in terms of why a JBM Auto and what are the key questions we want answers to from the management. On number one, how this pure play EV bus maker is actually navigating demand in this scenario where competition is really high. On number two, the company is a pure beneficiary of government schemes like PM E-Bus Seva. So how are they even looking at servicing the private sector space from here on? Because concentration with the government is really high. And the competition which is increasing with legacy players now scaling up, how are they looking at navigating that aspect of maintaining their current market share, which is in that range of around 30 to 35%? And very lastly, what is the strategy going to be of the management to go ahead and reduce costs by insourcing components amongst others? Because right now, the major reliance is in terms of semiconductors as well as batteries, where there could be a concern. So these are the key questions that we want answers to from the management. But let's quickly understand what the company does. When you talk about JBM Auto, it's part of the JBM Group, a global conglomerate from India, operating into auto components and the equipment space. They offer EV charging infrastructure, e-mobility and battery, and they're committed to become net zero by 2040.
Well, the other one is aspects of JBM Auto is about the three key segments for the company, right? So let's put that across as well for this. Specifically, we have seen components division being one of the new ones, which is to watch out for in terms of margins as well. The other one is tool room division. Now this includes the component side of the bit, and majority of the revenue for JBM Auto now comes from the OEM division. So that's about tool room. You have tools, dies, as well as molds for auto as well as non-auto sectors, Let's quickly look at the third key segment, which is the OEM division for the company. This is the main one because it designs, manufactures, supports buses, including the maintenance of the operations, which is something that the company has been doing as well. Let me quickly go across to the product line as well, which involves the EV business of the company. They have 9 platforms currently, which has 16 different variants of buses. This include luxury coaches, intercity buses, as well as tarmac buses, which are used at the airports for that use. We also have some staff and city school buses, and this is a segment that has started to grow now over the last 12 to 18 months because of the first time the demand coming back for schools as well. But Hiral, what about the EV aggregates part of the business?
In terms of EV aggregates, what they're doing is they're looking at advanced Li-ion batteries for EVs as well as the ESS and solar space. Secondly, what the features included are fast charging, long life, as well as waterproofing. So that's the major features that they're looking at when you talk about EV aggregation from here on. What's interesting is the product line, Puneet, right?
Yep, it includes, of course, the other auto components, and since it is a EV bus manufacturer, all these, including chassis, suspension, and safety system, is what the company is manufacturing currently. They also do some other part of the tooling operation, as well as connected solutions, as well as the charging infra, which is, of course, the 1000 DC chargers which they are currently giving, and these are all connected solutions which lead to the actual sales as well. But talk to us about the business model as well.
An interesting business model because you're considering 4 aspects. One is the integrated e-mobility aspect, which actually focuses on components, EVs, batteries, charging, as well as the services that they provide. On number 2, you're talking about EMAS, which is a subscription-based mobility feature which they give. Secondly, they're looking at fleet management as well and digital fleet integration. Thirdly, when you talk about JBM Everse, this is mainly dealing into EVs, batteries, charging, and the digital fleet integration that we spoke about. And lastly, it's digitization in terms of their business model, where they are looking at AI, Industry 4.0, smart factories, and telematics. So that's in terms of the business model. But again, what's important is to look at how the revenue split works, Puneet.
Well, definitely. And this is specifically for quarter 4. And in quarter 4, we do see a lot of sales of components, specifically for businesses that have built in. So we have seen components become the roughly 50% of the company's revenue. But the OEM division has been driving the growth momentum for the company. And that essentially is the main division for the company, which of course sells the whole bus together. The other two, like tool room, is a very small part, but the components business is driven by the sales of the OEMs. And hence these two are some of the key ones to watch out for.
Yeah, and from a geographical perspective, domestic is majority 95%, 5% is exports. It's going to be interesting how they're able to meet the demand in the export markets as well from here on, and whether they're able to grow that share from export perspective, because your OEMs in India are now expanding from an export perspective. So that's going to be a key area to watch out for. But let's look at the big picture, Puneet.
Well, capital intensive business to say the least, Hiral, and they have been expanding capacity in this particular time frame. And although they have significant market share in the e-bus segment, we are now seeing competition come up, and we'll just talk about that in a little bit, from the likes of Ashok Leyland amongst others. Company's current market cap stays at 15,000 crores, and the growth strategy hinges on India's EV revolution going forward as well.
Right, so let's now quickly look at all the rating parameters that we are watching out for. Firstly, we'll have an income statement check, the balance sheet check, cash flow, return ratios. Moving on, shareholding, street credentials, outlook, and the valuation picture this time around is going to be a must when it comes to a JBM Auto. So let's start, Puneet, with the income statement. How are you looking at it?
Well, the growth has been strong for the company over the last 3 to 4 years. From roughly about FY22, the company did about 3,000 crores of revenue. That increased subsequently to 5,400 crores. And what's interesting is also the margin profile. From roughly 10%, the company has navigated and gone up to 12% now in FY25, while profits as well have been growing at a slower pace compared to revenue. Revenue has grown at 20% CAGR, while profits have grown at 11%. But given the company's capital intensive nature, to say the least, we've given this a thumbs up currently, and that's largely because of the company's profile of growing the business steadily over the last 3 to 4 years. And we can see that in the company's quarterly performance as well, because when you see over the last 3 to 4 quarters, the margin trajectory, as mentioned, But in Q1 of FY25, the company had roughly about 1140 crores in revenue. That subsequently increased by 10% to 1254 crores in Q1 of FY26, which was just announced yesterday in terms of results. EBITDA as well, it has been a slight dip of about 8% on a YOY basis, and we'll speak to the management of what led to those factors, as well as something like the profits, which have actually grown from 34 crores to 39 crores on a year-on-year basis. So despite having a decent jump in profits on a YOY basis, we've seen the EBITDA going down a bit in this particular quarter, and that's led by some cost involvement as well. But when you look at the margin trajectory, and we put that picture out just right now, from 10.4% in FY22, steadily increasing to about almost 12% in FY25. This is just for the first quarter, and we'll see that in margin just be onwards and upwards from the 9.6% as well. But the balance sheet strength is the other one to talk about.
So yes, there is somewhat of strength in terms of the balance sheet, and hence we are still giving it a neutral, because the concern is the sharp increase that we've seen in the debt to equity. That's the concerning area. If you talk about their equity base, that's remained absolutely stable over the last 3 years at around 24 odd crores. If you talk about their borrowings, they have been increasing. If you see, from a 1676 odd crores, it's gone up. So it's gone up as well to almost 2600 odd crores. So there is a rise in the debt to equity, which is sharp. If you talk about the debt to EBITDA, that's almost around 3.9 times for a JBM Auto. So the question is about whether the company will be able to service its debt. And the debt turnover ratio is lower, which is indicating that the collection efficiencies is something which is not great, and that is what is impacting the cash flows as well. And you talk about the debtor days, that has also increased sharply. So the high debt from a fast EV or a OEM scale up is something which you should be looking at, which is a risk. And the working capital and cash flow strain on the e-bus orders is what you should be looking at.
Well, the other one's, cash flow aspect, and here as well, similar to balance sheet, we've given this neutral rating largely because of the slow progress on that aspect. Now, cash flow from operations were roughly about 484 crores in FY23. That subsequently fell in FY24, and while there has been some recovery, it's still away from those levels. So that will be one key metric to watch out for. Cash flow from EBITDA, operational EBITDA as well, the CFO to EBITDA metric as we call it, that as well has come down below the 100%, and it's almost down 50% from the FY23 levels. So that could be one of the key concerns, because cash flow from operations to EBITDA, if that's above 100%, that's a key metric we look at. So we could see some impact there. The net cash flow position has improved, but it's not improving in line with the company's debt as well as the cash levels as well. So hence we've given this another neutral rating as well in this particular aspect.
And we have another neutral that's coming in for the other parameter, which is the return ratios. You know what's interesting is it's steady in that 12 to 14% kind of a band. But the question over here is, for an Indian company who's into this segment, is there a potential for a better ROC? Because you're usually looking at that range of around 60 to 20%. That's that range we should be looking at. 12 to 14% steady, and hence a neutral rating there.
And it's the shareholding largely, nothing too much to complain here. A big thumbs up. 67.5% has been maintained over the last 3 to 4 years. We've seen the public ownership increase and being maintained at 30% in this particular time frame. So giving this a straight thumbs up of maintaining that positive momentum and confidence by the promoters in the business.
Right. In terms of the street credentials also, I mean, it's a neutral rating that we are looking at. Reason being is, there is degrowth on a YTD basis. The stock has underperformed around 15 to 17%. But if you have to look at the last 5 years, 17 times is the kind of returns investors have made as well. So long term, a good return. Short term seems to see pain.
Just finally, very quickly on outlook and valuations. Outlook, largely management has highlighted the battery manufacturing plant to help the insourcing. That will be a key benefit, while increasing the capacity utilization to match up with the order book as well. Very quickly on valuations as well, Hirar.
Right, so that's with regards to where valuations are concerned. Outlook is what you're looking at, where you're talking about battery manufacturing plant that will help sourcing, is what they've said. and the capacity utilization is what is going to improve. And if you have to compare it in terms of valuations, as Puneet mentioned, we're looking at around 84 times on an Electra and a JBM, which is 74 times. So that's the trailing PE we should be looking at. But let's quickly just look at the final performance rating. If you check in terms of your income statement, it's a thumbs up. Balance sheet, cash flow, return ratios are a neutral. You're talking about shareholding, which is a thumbs up. Street credentials, outlook is a neutral, and valuation is a down. So the KYC rating that NDTV Profit has given a JBM Auto is a 5 on 8 so far. But now let's get in. Nishant Arya, Vice Chairman and Managing Director at JBM Auto. Nishant, morning and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. Hiral Dadia here. My first question coming to you is, if you have to look at overall numbers as well and the way things are moving, what's the kind of outlook that you have from here on for FY26 and 27? Are you seeing similar kind of range, or do you think there will be some bit of outperformance?
No, because last few years we've been investing quite consistently in our technology, in our capacity, in creating new products. So I think this year from that perspective would be quite transformational. And already if you see in the Q1, we have really ensured that we have been focusing on about 14% plus EBITDA, and which is higher than the previous quarter and on YOY basis as well. At the same time, we are enhancing the asset utilization because having a very good order book, a lot of deliveries are going to happen in this year. So definitely the top line would increase substantially. Plus, we are seeing very good traction from a lot of our private customers, and we have come up with our electric coaches. And electric coaches and electric intercity is gaining a lot of interest in the market, and we are delivering those buses as well. So a combination of all these things, and we have launched our new generation batteries. So the new generation batteries are receiving a very good promising interest from the market. So we're getting an edge on that as well.
So Nishant, my question over here is, you said, yes, private orders you are looking at, but your majority concentration is in terms of government orders. That's number one. Two, taking that large order book that you already have in place, delayed execution has led to working capital and receivables which are piling up for the company, which is evident from the balance sheet. How are you expected to maneuver that risk from here on?
No, so what is happening is that we have been one of the very few companies which has been able to address the rare earth magnet challenge, because we were seeing that is something which could come up, and we created strategic inventory. So that is why you would see that in the upcoming 2 quarters also we would not have any impact basis that because of the strategic inventory which we created. Parallelly, we have tried to ensure that we have very resilient supply chains across the world with our global suppliers. So basis that this has taken place, and now with enhanced deliveries, even with the little sluggish market in the automotive sector currently, we have jumped up by more than 36% in our top line on the EV side of it. So clearly the market and the company is moving in the right direction, given the kind of execution of different orders we have.
Nishant, a very good morning to you, and thanks so much for joining in. It's Puneet this side. So largely Q1 is generally a slightly weaker quarter in terms of just starting off this year as well. So for this year, do you anticipate both the growth metrics to continue, which started late last year? Because in this year, we have seen commentary coming from other EV bus makers as well. In terms of growth, opportunity has been strong. So do you see that you will be participating more in terms of tenders, or do you think that this year will largely be the consumption of the order book, as you mentioned?
No, so definitely we will keep participating in tenders which we see as strategic opportunities, and we will focus on execution, because as you see that all such projects have 1.5 to 2 years of gestation period for its turnaround to happen. Given the kind of infrastructure requirements in the bus depots, the contractual engagements and agreements to be in place, and everything else to be executed based on the routes and the complete planning which every city has to undergo. So I think that is something which we are focusing on. on a constant basis now. Yeah.
And Mr. Arya, just in terms of what's the company's strategy for participating in tenders? Are you looking to maintain the buses for the next 10 to 12 years, or similar to the other players' strategy, do you just want to sell the bus outright and not maintain it for this particular time frame?
No, so we are doing a combination of both because we have received a lot of support. As you see, we are amongst the only companies in the country to have Asian Development Bank and AIIB, global MFIs who are supporting us, and now we will be inking few other big partnerships which will be ensuring the growth, and also a lot of deleveraging will also happen in this year. Which will ensure that the company is getting more and more healthier, and we are on track for that.
Right. Nishant, if I have to look at the debt to EBITDA is pretty much high at around 3.9 times. The debt turnover ratio is low, which is indicating collection efficiencies, which is impacting cash flows. But if I have to look at the overall cash flow as well, slight improvement that has come in from what it was in the last 2 years to FY25. What's the plan with regards to debt servicing? Are things changing? How are you looking at that aspect?
No, so in this year, definitely, as I said, we'd be reducing our debt. And as the company would start generating a lot more positive cash flows in this year, that would also enhance the capacity for further growth and enhance the profitability as well.
And how much are you looking at that number to be in terms of positive cash flow?
No, so we are trying to see that definitely about 20% more than last year as a bare minimum. And we would be trying to see that close to 100% of ops to EBITDA is what we want to see by the end of this year, or let's say first half of next financial year.
Mr. Arya, just a couple of questions. In terms of battery insourcing, what's the current ramp up of that facility of ramping up battery production? And separately, how much are you currently utilizing in your own manufacturing of EV buses? How much is currently insourced from your own battery plant?
No, so 100% of our batteries are insourced, and our current capacity has been enhanced to 6 gigawatt. And which has just happened at the end of last financial year. And recently, we have also seen a huge order book which has been created from the energy storage business, because our battery facility is well equipped for catering to different segments within automotive, whether it's buses or other segments. And now we are going to utilize it for energy storage applications as well. So the utilization would be going up significantly in this year.
And how much for that out of the 6 gigawatt? I'm guessing not all of it will be constructed right now, right? So what is the operational battery gigawatt capacity, and what's the utilization?
That's
is it
the
around
operational
20?
Capacity, Puneet, yeah.
So is the utilization over 30%, or is it hovering around that number right now?
So this year, what we are targeting is we should have about 1/3 capacity utilization, yes.
Okay. Nishant, how are you looking at the export side of the business? It's still 6% of your revenues. Though you have the India-UK FTA, which could probably help the company from here on. I know you had said that you would be looking at UK opportunities only from FY27. So what is that angle? How much? And do you see any barriers on that end?
I think since the FTA has just been inked in the last couple of months and further details have just been rolled out, we would be looking forward to understand more in detail and then really make a plan. And that's the reason I had mentioned that things will fructify and actions would start rolling in from the next financial year. And we will be using this financial year to really develop our strategy and make inroads into those markets there for our products. Yeah.
Okay, so nothing as of now. So when you're talking about inroads as well, you have mentioned about 4 new products that you would be looking at. Any details on that you could give our viewers? And secondly, if you have to talk about inorganic growth opportunities, anything that is on the anvil that could be signed in the next 3 to 6 months?
Nothing concrete as of now. So the products, if I talk about, we are quite focused on our a global electric coach, which is called Galaxy, and that has been very well received by our global customers. And that was launched recently also in Germany and European market. Plus, we are seeing great traction for the city buses, and there is a clear opportunity which lies for a lot of customized solutions in the intercity category, in staff category, and tarmac category for the European market. Yes.
Mr. Arya, just one on capacity as well for the buses. You have roughly about 20,000 that you can manufacture annually. Just looking at the number from Vahan specifically that got actually registered was just under 1,000. So if you can just give us some clarification on registrations of those buses and the order book execution. Is it largely over the next 2 to 3 years that you want to, your order book of about 5,000 buses, and you can give that number as well. So in terms of current capacity at 20,000, the actual Vahan and registrations, and in terms of execution over the next 2 to 3 years, how will that turn up in terms of your order book execution?
So our current order book, which we had shared also beginning of this year, was about 11,000 buses, out of which we have executed in the last year and first quarter of this year. So currently our order book is at about 8,500 to 9,000 buses, which is available to us. And we had also supplied a lot of buses to Telangana state, in addition to Delhi, Gujarat and other places. So Telangana state is not covered under the Vahan data for some reason. And there are about 500 odd buses which have been supplied in the last few months are not a part of that. But that is a part of our revenues and deliveries. And
Nishant, a quick interruption here. Out of this 11,000, what percentage is government and what percentage is private? Because private does mention that they do face challenges accessing a JBM auto because your concentration is government.
No, so our split out of 11,000 is approximately 70-30. So we have 30% private sector and about 70% on the government side currently. Yeah.
Got it. I think lots that we need to watch out for. 11,000 order book split between government and private in that 70 to 30 range as well. But thank you, Nishant, so much for joining us on the show on Know Your Company at NDTV Profit. Thank you from Puneet, the team that put the show together, and myself. In fact, lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome to NDTV Profit. You're joining us on this special broadcast where we're discussing Punjab National Bank's Q1 FY26 results. Of course, the bank has reported a dip in its net profit, but this is largely because of a deferred tax liability which got added to the first quarter. But other than that, the operational numbers are actually looking quite strong as far as Punjab National Bank is concerned. A net interest income growth of about 36%. If you were to look at where the operating profit is, that is up about 8%. The provisions are down 50%. Gross NPA ratio as well, down 17 basis points on a quarter-on-quarter basis. While net NPA ratio is holding strong at 0.38%. I have with me Mr. Ashok Chandra, the MD and CEO of Punjab National Bank. Mr. Chandra, welcome to this conversation. I want to start the entire thing with the profit and the deferred tax liability. Now, when I looked at the notes to accounts, it said that you've opted for a lower tax regime, and because of which there's a deferred tax liability which is getting added to the profit before tax. And that is why the profit after tax has dipped. Can you tell us a little bit about the thought process behind going for this lower tax regime?
See, we were having the old tax regime up to 31/3/25, and whatever the MAT benefit was available, we have consumed everything. And since there was no benefit going to be there from the old tax regime and paying the higher tax, so we thought that this is the right time to move from the old tax to new tax regime, to save at least around 10% the tax outgo. And when we decided that we are going to move it in this particular financial year, so we thought let us do it in the first quarter itself, because anyway this amount was to be said. So I think that is the one decision the entire top management has taken, and board approved that. Based on that, we have gone for the old tax to new tax regime. And thereby, I think on the going forward, every quarter, if we take that minimum 7,000 crore of operating profit will be there in the system, I think 700 crore net profit will jump just because of a movement from the old tax to new tax regime. So that was the one right move bank has taken. And if you see the number, despite the movement from the old tax to new tax, and having 5,000 crore plus the tax liability, still we have posted a decent net profit of 1,675 crore.
Understood, sir. Just coming to the net interest income portion of your P&L, 36% increase. I'm just trying to understand how you're able to do that, because most other banks are reporting much lower growth, or in fact, some of them have actually reported a degrowth because there was the RBI rate cut that came in. Cumulatively about 75 basis points have already gone down. So I'm just trying to understand how you're able to grow that.
In fact, that impact has come on our book also. And basically, if you see the actual number, NII has grown by 1% YOY. Because that impact was going to come, because 100 basis point cut is there on our all the repo linked the book size now. So in fact, in our bank also, the net interest income, if you see, the financial year 26, it was 10,578 crore. And there is a dip over Q4. The marginal dip is there. So that impact is there on our book also. But since we have said our some high cost deposit in the first quarter of this financial year, and we have also said a sizable number of the low yielding advances. So this is one strategy bank has started from Q4 of 24-25, and 25-26 also we have continued that. And that is the reason, despite there is a 100 basis point cut in our repo linked rates, I think we are still holding to our NII, which we were there in the last few quarters.
Understood. But on the net interest margin side, there's been a reduction. So that is largely attributed to the rate cut, I'm assuming.
Yes. Yeah.
Okay.
And I'm expecting, I think last time also I had mentioned that the impact will be there in the Q1 and Q2. Most of these the deposits are getting repriced now, and definitely from the Q3 onwards there will be improvement in the NIM, sir.
Okay, sir. Coming to the advances portfolio, there 11% odd growth on the total advances. Having said that, your international book is growing much faster, whether it's on advances or deposits. So I just wanted to understand what is happening on the international side, sir.
We have three outlets. One is the London, we have DIFC Dubai, and Gift City, Gandhinagar also we have our branch. And all these three branches are getting good number of proposals. Of course, margin is very, very thin. And that is the reason, if you see, our domestic NIM is 2.84%, but global NIM is 2.70%. But we are getting good proposals. So we are, even if the thin margin is there, we are taking up those proposals from Dubai and the Gift City also. And we are building good books now.
All right. So, Punjab National Bank is widely known as one of the premier lenders, even when it comes to MSMEs or exporters out there. I'm just trying to understand, because we've heard about the tariffs that are coming in from the US. Is there any anxiety amongst your borrowers at all about their ability to sell to the US customer?
I think this announcement has just come yesterday, and we are also going to analyze our portfolio. And then we will have the discussion with our export group also, houses, corporates, and we will find out what needs to be done now, because let us wait and see that how within few days, how it pans out. And Government of India is also looking into those things. And I think another 3-4 days, this entire things will be clear. And then I will be in a position to give you the correct status and correct number.
All right. When it comes to the deposits or the liability side of the story, I'm just looking at the CASA ratio. That's actually holding quite strong at 37%. That has not gone down that sharply. How are you able to get your customers to still continue to give you that CASA? Because a lot of banks have reported that coming down because there's a cut in the savings rate.
We had come out with good SB, the products now, and 12th of April this year, that was our foundation day, we have revamped our total CASA product, all the segment, and we have come out with good products under the women. We have a special product for the youth, a special product for the senior citizen, pensioners, a special product for the defense people and Agniveer. We have a special product, the salary, non-salary, and a very good product for the farmers. So today we have the segment-wise special products, and we are seeing the good traction happening across those segments. I think if I can share the number in the last 3 months, we have mobilized under these new schemes more than 13 lakh accounts, and we have added more than 2,500 crore of fresh SB deposit. So our SB individual is growing fast and it is giving a good result now. In fact, we were expecting that CASA to grow, but there are three components are there: SB individual, the institutional deposits, and current account. So there is a fall in the institutional deposit, and that is the impact happening across the CASA. And because of those drop in the institutional deposit, overall CASA is not growing at the speed which we were expecting that. But the core SB individual, there is a good growth because of the revamped schemes and the digital penetration.
All right. A couple of questions around the your guidance on FY26 when it comes to advances, deposits, margins. You said Q3 margins are likely to start improving. That and on your recovery as well as slippages. If there's any guidance that you want to give, sir.
Yeah, so credit growth, we had given the guidance and we are still holding that. We will be growing at 11 to 12% in this financial year. Deposit growth, we are expecting 9 to 10%. Of course, we have in this quarter itself, we are grown at 12.86%. CASA share, we are expecting that we will be growing more than 38%, and we are at 37% in this quarter itself. And NIM, we are expecting that it will be between 2.8 to 2.9%. Gross NPA, we are expecting, and we will be doing that. It will be below 3%. And net NPA, it will be 0.35%. The recovery number, which we have indicated, it should be 16,000 crore. And we are already on track now. And I am very much confident that 16,000 crore of total recovery, we are going to do it in this financial year. And ROA, if I can talk about, it is we are expecting that it will be above 1%. Slippages ratio, it is well under control. We are expecting that it will be below 1%, and already we are at 0.71%. So whatever the guidance we have given on the different parameters, I think we are going to meet those guidance, and rather we will cross those guidance.
All right. One last question, and that is with respect to the upcoming monetary policy announcement on the 6th of August. We are expecting to hear. Is there an expectation of a further rate cut, either this policy or the upcoming policy in October? What is your sense?
I think I will wait and watch. Let RBI decide that. It is their domain. And whatever that comes out, then we will firm up our strategy and we will work upon that.
All right, Mr. Chandra, I hope to hear from you on the day of the policy then. Thank you so much for taking the time out and speaking to us, Mr. Chandra. Thank you.
Thank you.
All right, and there you have it. That was the management of PNB talking about their first quarter earnings. But tell you what, let's go across from one management to another. Take a look at some more earnings. Then Kamal Kishore Chatiwal, the MD of Indraprasth Gas, talks to us about his numbers. Before we do that, let's take a look at some of the numbers as well. The revenue, in fact, has seen a decline of just about 0.9%, and the EBITDA has risen 3.5%. When you take a look at the margins as well, they've expanded to 13.1% versus 12.5%. And you do have the net profit. That figure has also risen 2% thereabout. Let's also take it across to the management, discuss all of this with him. Thank you so much for taking time out and joining us this afternoon. First things first, I wanted to talk to you about your volume and margins, because they're at the lower end of the guidance. What impacted these numbers in the first quarter? Talk to us about your unit margins as well. Is there any scope of expansion that you see?
Yeah, a very good afternoon to the viewers of NDTV Profit. Now, the results, if you analyze deeply as compared to the last quarter on quarter, if you see, the volumes are flat. But as you know, the CGD sector, the first quarter is the weakest. So that would be better that if you compare last year Q1. So as compared to that, our volumes have expanded by around 6%. Yes, you're right that the margin from 7.4 has, in the third quarter of last year, has gone down to 4.84. And in that, we have guided that the intermediate, our first step would be to come into the 6 to 7 range. And then in the 7 to 8 range, that is our long-term guidance for IGL, 7 to 8 rupees per SCM. So right now we are at 6.16, and we have postponed some of the decisions related to price hike and other things, simply because in March we had a public consultation document regarding uniform tariff, and now that the landmark order has been notified, although the final numbers are yet to be announced, but the order has been notified wherein the CNG and the domestic PNG segment would be in zone 1 tariff. So we are awaiting that, and that would be a big trigger for the margin expansion. So that should automatically bring us into the 7 to 8 range.
All right, then point taken, but I also wanted to talk about what you've mentioned. As per your internal estimate, how much of a margin benefit are you in fact penciling in, can you see, from the implementation of the uniform tariffs as well then?
Well, it will be entirely speculative if we do anything, but we are expecting a benefit of, you can say, 1 rupee plus minus 30 paisa per SCM.
All right, then talk to us about your volume guidance as well. The figure that you've quoted, you're confident of achieving 10 MMS CD of exit volumes for financial year 26. Do you think it's achievable? Are you going to be revising it downward? What's your sense when it comes to the volumes then?
No. We will not be revising it downward. We are very confident. If you see last year also, we were at 8.64. Now we are at 9.13. And with new stations getting commissioned, even the LNG also 2-3 more stations will be getting commissioned. So we will be exiting the year at around 10 million.
All right, and I also wanted to talk about your gas cost portfolio then. From the first quarter to the second quarter, what has been the change that you've seen in the gas cost portfolio? And gas cost, of course, is cheaper in the second quarter compared to first quarter. Can you give us a little bit more of a confirmation on that? How much is the APM allocation at this point in time?
You see, from the last year, if you compare, our gas cost has gone up by almost $1, you can say, the 3.6 rupees kind of numbers, the overall average gas cost. And from this quarter, almost it has been the same. The allocation has been the same. Exchange rate is more or less stable. And the prices of RLNG and the domestic are almost same. In one quarter, it was less, that 6.4 number was there. But again, that has gone up to 6.7, 6.8. It has again hit the ceiling. So more or less, it will remain the same. And we expect some new well gas to come or HPHT gas to come. So that will marginally increase the cost. But with this tariff regulation and some VAT resolution in some of the states, we expect the gas cost to come down slightly more.
All right, and I also wanted to get a sense of your gas requirement coming from the spot market. How much of your volumes are on medium, long-term or spot LNG then?
You see, we don't have any spot. We all are long-term and short-term, because we are now, you can say, 100% of our volumes are tied up. And any spot advantage would be there. We have the strategies to take advantage of that. Right now, there is no advantage in spot purchase. So we are relying on our medium and long-term contracts.
All right, then next I also wanted to talk about something that has been a cause of concern for you, because the proposed EV policy for the National Capital, Delhi, poses a big threat to your volumes. Has there been any conversation that you've had with the government about this? And given the timelines are aggressive, how much of a success do you see of the same getting implemented then?
You see, regarding EV, we have been in discussion with the government, and our stance has been that the vehicle emission should be the criteria and not the type of fuel that they are using. Right now, the EV, is 75 to 80% being charged by coal and gas-fired power. So the source of the charging is not green as of now. So that should be the criteria, that overall emission levels, that should be the criteria rather than the type of fuel that they are using. So with that in mind, and we feel that both the fuels will be coexisting, and maybe the kind of push the CNG has, especially in the passenger vehicle segment, this should continue. And EV will also have a space in the entire mobility sector. So, but we feel that CNG has a lot of scope, given that the number of CNG stations across the country have crossed 8,300, and the target is 20,000 in next 2-3 years. So that reduces a kind of range anxiety and other factors, the availability of the fuel. So if those stations come up, then I think the conversion would be from diesel, petrol to CNG more, and some of that will go to the EV also. And in any case, we are in the mass market segment. The CNG is in the mass market segment. In a high-end segment, there is no CNG variant. So there is, I think that segment is the one that will be converting to EV fully maybe.
All right, then, point taken. Thank you for helping us out with that timeline. I also wanted to, speaking of discussions, talk about the discussions that you've had with UP and Rajasthan state government as well. When it comes to the volume offtake tie-up for highway buses, is there anything that is finalized there?
Yes. There has been some positive development in that the UP government has given us some buses, even the space in their depots to have exclusive stations. So 200 odd buses they have given. Uttarakhand has also brought 200 odd buses. Rajasthan, we are doing a pilot with them to demonstrate the benefits of CNG. So once that is successful, they will be ordering more buses. So these 3 states we have been discussing with that, and Haryana also we are following up on the same lines of UP and Uttarakhand. So we are in discussion with them that some of the state governments are coming out with these policies, and they can simply copy that and get the benefit. And also the fact that Delhi now that only Euro 6 would be allowed, so some of their buses can get converted to CNG to be allowed to enter the Delhi.
Well, yes, absolutely. And that is a development that we'll watch out for, right? But the next thing that I wanted to talk to you about, in fact, the last thing that I wanted to talk to you about before we let you go is about the new geographical areas. Can you tell us a little more about these geographical areas? Are they profitable at this point in time also?
Yes. Right now, all our geographical areas are EBITDA positive, except for Banda, which has just started and a very low volumes are there. And we are just laying the network there. Except for Banda, all our GAs are EBITDA positive. Because in some of the GAs, we have taken some price hike, and some of the state governments have also helped by reducing VAT. So combined effect of both is that the GAs have become positive.
All right, then, thank you so much for taking time out and joining us this afternoon and giving us a sense when it comes to your earnings fine print as well as the road ahead. But tell you what, let's move on then. Let's take a look at Keynes Tech, because that is one counter that is buzzing away. Of course, you've seen recovery come in as far as the Nifty is also concerned, has recovered from day's low. And at this point in time, there are about 5 sectors that are holding on to a tinge of green as we speak. Keynes Tech is one counter that is buzzing away in trade at this point in time. On the back of this con-call commentary that we've in fact received, maintains FY26 guidance as well of to the tune of about 45 billion rupees. They've also gone ahead and indicated higher margins for financial 26. So that's also something that they've talked about. Some strong commentary coming in as far as their margins are also concerned. Other than that, they also expect to see similar margin levels as the first quarter. That's also something that they've talked about. In fact, the management has also talked about how they're working out financial solution for excess receivables by the end of the first half of the financial year, and they're also aiming to lower the working capital days to about 70 to 80 days by the end of FY26. So that's also something that they've talked about, but that's Keynes Tech that is buzzing away in trade. But tell you what, with that, we're completely out of time on this edition of this show. Thank you so much for tuning in.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, बाहर हो या नियर, सब कुछ दिखे क्लियर।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of
and welcome to NDTV Profit. You're watching Profit Buzzers. I'm Hiral Dadia, and with me is Puneet Javeri. An interesting recovery, Puneet, that we're seeing in terms of markets. If you talk about Nifty 50 and the broader markets almost 150 points recovery. Nifty 50, we're now above that 24,800 mark. Initially, the concern was that we opened below 24,700. We are nearly at the day's highest levels, though in the negative still. Let's quickly look at individual sectors, because it's mainly FMCG which has seen a major recovery, taking into consideration the way HUL commentary has come in on the back of margins. So that's the top gaining sector, followed by media. Consumption is up in trade, private bank index, and the rural index is up. Oil and gas is the one trading under pressure, and it's Reliance Industries which is actually pulling the oil and gas index lower. Defense continues to be under pressure. Real estate, healthcare, pharma, a few of the other ones which are under pressure as well. Auto is an interesting one to watch out for, because you have auto sales numbers that will start trickling in from tomorrow's session. But overall, an interesting day of trade in terms of companies as well. Greaves Cotton, HEG, Keynes, Nucleus, Sagility are few of the ones which are seeing some smart moves, few of them reacting to numbers. Hitachi Energy is under pressure, Power Industries, Sonata Software reacting to numbers. Welspun Living on the back of the tariffs is under pressure. Aarti Industries, Reddington, and a Hind Copper, which is seeing a good run over the last couple of trading sessions, is down and about in trade, Puneet.
Well, definitely, and let's also pull up a stock like SIS very quickly. It's reported a decent set of numbers in this particular quarter. Stock also up almost 1.6%. But let's also get in Mr. Dheeraj Singh, who's the CEO of the company. Mr. Singh, a very good afternoon to you, and thanks so much for joining in today. It's Puneet this side. In terms of performance, sir, it was a steady quarter to say the least. While the India business continues to, grow at a decent pace and is now contributing almost 50% of the EBITDA margins as well. How do you see the growth for this particular year? Do you see that in terms of India performance to drive mainly for SIS this year?
Let me first correct. The EBITDA contribution from India is almost 70% now. So revenue contribution is about 60% and EBITDA contribution from India is 70%. Definitely our focus is on India and the growth is here, and we are seeing that in numbers also. Having said that, even international are doing much better on the growth side. Last year was a record year when we secured more than 100 million Aussie dollars of new sales. And a lot of that is getting translated into revenues for this year. But India growth will definitely surpass the international. On an average, we are in line with our guidance of about 14% growth for the year.
Okay. Mr. Singh, good afternoon. This is Hiral on this side. So if you're talking about, a 14% growth from here on, what is the segment that is going to drive growth, and what's the kind of margin accretion you're going to see on that aspect?
So on the growth, all three segments, the international security, India security, and facility management will continue to be strong. On the margin side, facility management is seeing the biggest uptick. It has grown on a year basis from 4.2 to 4.8% margin now. In rupee terms, it's delivered more than 28% EBITDA growth. And we see this trend continuing for the next 3 quarters for the facility management. Security business in India had consolidated last year at about 5.4%. We are holding there. And towards the 3rd or 4th quarter, there will be further improvements on the India security. On the international margin side, this quarter has been under pressure for 2-3 reasons. One is we are starting a lot of the defense contracts, which have a lot of initial setup costs. Also, the last quarter, there were government grants in Singapore, which didn't come in this quarter. So because of these reasons, the margin was depressed in the Q1, but we are working actively on the international margin to get it back towards the 4%. So the margin percentage will continue to see some uptick from here, and the revenue growth remains strong.
Mr. Singh, in terms of international, and just a follow-up question, you mentioned that there are some startup costs initially for that segment, and because of the defense contract, as you said, don't you see that as the growth happens, you'll have new orders, and that startup cost can happen again once you receive those new orders in the second half? So could you just give some quantification on that as well?
You're right. There are two differences. One is last year was an exemplary year, which is good, because we won more than $100 million. And so that has a slightly more skewed impact in terms of the new raisings. Also, some of the contracts like defense sector, which were a large part of a contract, they require more investment upfront. So while you're correct that every new contract will have some setup costs, but this was a more exceptional quarter.
Mr. Singh, if you have to look at compounded growth in terms of your revenue and EBITDA, are you expecting to continue in that 13 to 15% kind of range, or with all the positives that we are talking about right now, it could outpace that kind of a number?
So at this in June run rate basis, we are all-time high for India security, more than 500 crores per month. We are more than 500 for international business, also security. We are more than 200 crores all-time high for facility management. So all three segments are firing at an all-time high right now. On a run rate basis, we are more than 14,500 crore as of now. With some inorganic that we hope M&A to happen within the second half of this year, we expect to be in the range of 15% or even higher.
All right. Thank you, Mr. Singh, so much for speaking to us at NDTV Profit. So that's the management of SIS. Let's quickly pull up the stock and see what the counter is doing in trade as we speak. Gains of 1.7%. It has cooled off from the day's highest levels as we speak. But moving on. HUL, that's the stock of the day as well, because the kind of gains that are coming in, some cooling off, but 3.5% up move, and this is on the back of the positive commentary that we've heard on the margins. The revenues have been in line. The profit has beat street estimates as well. Overall, if you talk about the volume recovery, that is going to be the key factor to watch out for. They've said that they will focus on volume growth going forward from here on, and the gross margins are expected to expand. If you talk about the demand, that has been also seeing a pickup on a sequential basis. In terms of the press conference, what they've said is that they're seeing an encouraging macro environment, and the demand trends are also improving. Raw material prices have softened, and that is what will aid margins going ahead. And they've strengthened market share via modern trade channels. If you talk about the overall volume growth as well on a consolidated basis, underlying volume growth of around 4%, sales growth of around 5%, and double-digit EPS growth. That is what has driven by top line, and in the mid to long term, that is what will drive your EPS growth. And they've said that the demerger in terms of the ice cream business will be completed by the fourth quarter of FY26, and the EBITDA will remain in that 22 to 23% range. The price growth is expected to remain in low single digits. In fact, let's quickly hear in what the management had to say at the presser as well.
Just to follow up on the leadership change that you were talking about, you've known Priya for quite a while now. Just want to get a sense that is there going to be some change in terms of how strategy will be adopted by her? Because, you know, leadership could be different for different people. Any kind of color there, you know, if there are early signs of picking up there?
So I think, let me just take that question. So look, the strategy is about moving our business to faster growth spaces and faster growth channels, benefits, brands, segments, channels. So, I mean, it's very obvious, fact that you should basically go where growth is. So I don't think that's going to change. The color and shape of the specific nuances, they have to be in line with the changing conditions. So we should never call strategy as it's not a fixed thing. It's evolutionary. But the broad direction of competitive volume-led growth is what we're going for. As you said, price growth will be lower than, say, in the past. We're going for growing in the faster growth channels and benefit segments. We are about increasing the premiumization of our portfolio. That is continuously increasing. In fact, the last 2 years that I've been in this role itself, we have moved our portfolio by almost 5% more towards future current market makers, and that just shows you the direction of travel, and I'm quite certain that's going to remain Priya's focus. Specifics of all of this will have to be customized to the conditions she will find herself in the quarters and the years to come.
Well, that was the management of HUL and a key result, because we've seen some from Colgate, which has disappointed the street heavily. So all eyes were on HUL and a really strong number coming into this particular quarter. Let's now look at another counter. KPIT Tech is in focus now. On the back of their Q1 earnings. Now specifically, we had seen in this particular quarter that it was a subdued result, to say the least. But let's get in my colleague Jasmeet to talk more about this aspect. Jasmeet.
Well, right, yes, thank you for that. Let me quickly grab down the result and tell you all the key highlights and key numbers of this particular company. When you look at the key takeaways, the revenue remains flat and the margins under pressure. The company, though, reports a 20th consecutive year of increased revenue growth. When you look at the CC growth, it has come at minus 3.2%, and excluding one-off income, the net profits are down by 17.2%. Talking about the other key highlights of the company, the other income is down 65% compared to Q4 of the year. When you look at the return from the JV, it has reported a loss of 5 crore versus a profit of 14.1 crore in the Q4. When you look at the exchange losses, they have come up to 24 crores in the Q1, and the revenue from the entire Asian market is down by 8%. When you look at the deal wins, company has signed a strong key of deal wins where they have signed $241 million versus that of $280 million in the previous quarter. When you look at the key financial and the key numbers of the company, the revenue is up 0.68%, is roughly flat. When you look at the EBIT, it's down 10.9%. The margins have been down by 194 basis points, and the profits are down 29.75%. This is before the exceptional items. So these are the stocks to keep in the radar.
Thanks so much for that, Jasmeet. But in fact, we spoke to the management, Mr. Kishore Patil, the co-founder and the CEO of the company. Let's listen into what he had to say.
I think overall, as we have been saying, I think we have a very good pipeline, which we have. You can see the wins have been pretty strong in the last year or so. The point was, which I also mentioned a few times in this, is the clients have limited budget, so they do what they have to do. They have to prioritize. Some of the new wins have come from their prioritization area. And to some extent, it can get cannibalized with some of the existing work. I'm not necessarily saying what we do, but overall, it can impact, the current part also. And this budget limitation was mainly because of the uncertainty and the pressure they are facing. Now, the geopolitical issues, tariff, China, there are multiple issues in the world which can't get settled, everything. But I believe in next quarter, at least some of the fundamental issues will get, there will be more certainty. Issues don't get resolved, but I think what the market is looking for is certainty. Once that certainty happens, I think we believe that many of these deals which we have been, they will start ramping up. I think that's what I'm saying. And I do believe that it should happen in a quarter or so.
That's the management of KPIT Tech, the stock under pressure with cuts of 1.5% coming in there. But another stock that is in focus is Sagility. 18% jump in growth is what they've reported so far. And if you talk about the overall business as well, what they've said is that pricing pressure will increase with rising Medicare utilizations. The stock too seeing gains of nearly 9%. Jasmeet, a quick takeaway in terms of what the company has said and what is the guidance looking like?
Well, right. Thank you for that. Yes, the margins have been under pressure, but management has given a positive set of guidance going ahead. When you look at the tailwinds, there are strong tailwinds for higher outsourcing in the clinical segment. There will be pricing pressure when it comes to Medicare utilization. Now, let's quickly go to the margin guidance. The management has raised the overall margin guidance to be above 24% compared to it was at the range of 23 to 24% the previous quarter. When you look at the other revenue growth guidance, they have maintained from low to mid-teens. Going ahead, understanding the numbers, the revenue is down 2%, but the EBIT is down 12%. When you look at the EBIT margin, they have come out 14.8% versus that of 16.5% in the previous quarter. The net profit is down 18.2%. So this is to keep in the radar and watch out how the stocks react in the day going ahead.
Thanks so much for that, Jasmeet. And in a tough quarter for the IT players, this company has actually increased their EBITDA guidance. So it's definitely one where the street is rewarding that particular aspect. But Hindustan Aeronautics Limited is also in focus. They've kicked off major collaborations and capacity ramp-ups to fuel India's aerospace ambitions. My colleague Anushi is now joining in to give us more on this. Anushi.
Hi Puneet, what we are looking at is company has signed a manufacturing license, and this is with General Electric GE that we are looking at, and this pertains for the production of the G414 engines, aero engines for the LCA Mk2. Now this is an important development considering what they had said in their earlier con call. Also these discussions were already ongoing, but it was pertaining to the amount of technology transfer which is going to happen along with pricing that they were discussing and finalizing on what's the update here. So this coming in the annual report is something which is to be highlighted and focused on. Now they expect this LCA Mk2 certification to be completed in 2029. This is of course with the trials happening in the next 1 to 2 years onwards as well. It's the amount of technology transfer which is there, which is important to keep an eye out for. But other than that, the company has also signed a long-term agreement with Safran Aircraft Engines, and this is for the export of ring forgings for the LEAP engines that we are looking at. So important update over here. Considering all these developments which are taking place, the company has also announced a 14,000 to 15,000 crore of capex plan for the next 5 years. Now this includes expanding the manufacturing facilities and setting up repair and overhaul facilities also for the development of infrastructure for LCA Mk2 for this GE414 engines, along with Indian multi-role helicopter engines as well. So an important update for HAL that we should be watching out for.
Okay, so that's an interesting update. Capex plans crucial from here on. Thank you, Anushi, for all of that. One interesting counter, Puneet, that we have to talk about is Kaynes Technologies, a smart set of numbers. The reaction also pretty smart, 10.5%, 11%, and I think it's the conference call commentary which has actually enthused investors from here on. And I think the outlook is going to be crucial. In fact, let's get in Jairam P. Sampath, whole-time director and CFO at Kaynes Technologies. Jairam, good afternoon and welcome to the show, and a pleasure to speak to you at NDTV Profit as always. My first question coming to you is, all of us have seen how the first quarter has been. The market has reacted accordingly in terms of the stock price as well. What the street is now interested in is this kind of performance expected to continue in the coming quarters, and what is it that will lead to the kind of guidance that you've indicated for FY26?
Absolutely. Thank you for having me here. Always a pleasure to talk to you here. So basically there are two parts to this guidance. One is the revenue, the other is the profitability improvement. So we think that we will achieve the revenue guidance that we have given for the whole year, about 4,500 crores. So typically during the year, the sales increase every month from April onwards, every quarter the sales increase. And so what is really distinctive this quarter is that we have been able to get to a higher level of profitability. And that has been across the board in all the various sectors that we have been there, driven primarily by the first quarter by the gross margins that we get. And of course, going forward, operating leverages will also kick in. So we are quite confident that both the trends, the numbers that we have talked about in terms of revenue numbers for the whole year and on a consolidated basis exceeding about 4,500 crores, plus the EBITDA we had talked about 15.6%. I think it will be north of that number at minimum. So, right, and the evidence for this is that there's been a healthy growth in our order books and a lot of new client acquisitions, which we really can't talk about in names, but we've had some significant client acquisitions. And these are all in different areas, including industrial, automotive, railways, then also aerospace, etc. And also we have made some small investments in the area of outer space and defense, etc., to further our ability to service the booming sector of high-tech electronics, which is in the service of the nation too. So all in all, I see this year as a turning point in terms of putting it in a different trajectory, both profitability-wise and sales-wise, and we stand by the numbers that we have talked about.
Good afternoon, Mr. Sampath. It's Puneet this side, and thanks so much for joining in. So, since you said you're standing by the numbers, so I'm guessing you're reaffirming your guidance of about 4,500 crores in terms of revenue And I think last year you were roughly about 2,800 crores. So that's good to know. And just a follow-up on quarter one, because we've seen a very strong growth in terms of margins, but revenue profile was slightly muted compared to what we were building in. So is that some of the key orders or some executions that have moved to quarter two? Is that what's happened? And if you could just give some color on that.
No, I think it's just that the April numbers typically are muted. So it's the impact of that particular number, and June has picked up, so we are quite confident now. Of course, we have seen the July numbers too, and once it's audited, we'll present the first half year. So there is no specific reason for any, let's say, specific reduction in sales or anything of that kind. So we are also a diversified portfolio, so we do adjust our portfolio a little bit. Supposing a particular industry does not do well, then we pull in orders from the other side. So that exercise takes a bit of time. I'm sure you can see in the markets different. We serve automotive, we serve industrial, electric vehicles, railways, defense, aerospace, etc., medical electronics, and also IT, IoT. So specific sector-wise, there could be some, let's say, headwinds that people can see. And as you know, the first quarter has been a little iffy from the global cues and from the from the perspective of what we call the geopolitical muscling around, right? So we have overcome all that and still a decent number in our opinion. And in the second quarter, we'll make up. So far by the year of by the September quarter, no, we'll probably be on par in terms of revenue growth too. Of course, we will keep the growth in profitability intact too. So the good news here is that we started on a good foot as far as profitability is concerned. So the EBITDA numbers have grown by about 69%, which is more than the guidance that we had given. So I think going forward, we would probably have even better sales than what we had predicted.
So, Mr. Sampath, because we've seen in the last year as well, you needed about 900 to 1,000 crores of revenue in quarter four to meet the last year's guidance, and you did that. So you were about at 572 crores in the September quarter last year. So should we expect a substantial growth from that number?
Yeah, I think if I were to hazard a guess, it would be excess of about 1,000 crores in the second quarter. So we would, so this makeup happens. See, the customer orders flow and the shipment don't go by just the quarterly profile alone. So it's a continuous process. So we think that will pick up there, and we would see a significant growth over that number last September.
Jairam, what is the order book looking like, and for how many years are you seeing visibility on that front in terms of revenues? How much will flow in out of it in FY26 and how much in FY27? So
typically the order book is worth about 1.5 years, typically on a rolling 12-month period basis. And we see a lot of, so there is two parts of the order book. One, what is there in our system, which is what we declare. These are the orders confirmed by customers, and then they are ready for execution over up to about 5 years time frame. But most of the orders get executed in about 1.5 years time frame. The other part of the order book is also new businesses or new awards of businesses that we have won from new customers. So that would be something like $40-50 million worth of businesses, which are probably not part of this particular order book. Consider that as a seed, right? So that also grows. So firstly, customers would give you a pilot order, and then they back it up with regular production orders and so on. So I think the order book growth will continue in the medium term, little faster than probably the growth in sales itself. So that we are able to reach the number of FY28 $1 billion that we had committed, and maybe exceed that too.
Mr. Sampath, the other key update that you had also mentioned in your conference call was about the OSAT and the PCB facility both being in quite an advanced stage essentially from the last quarter. So what is the current timeline that you're anticipating? Because you rightly said $1 billion in terms of revenue, and some portion of that was from OSAT. Do you expect that the OSAT business will be operational by quarter 4 of this year, and any outlook on the PCB business as well?
Very much, very much. So as far as OSAT is concerned, we had earlier had 2 anchor clients. Now we have added a third one. and the machines everything has been ordered, and hopefully you will start seeing the pilot production happening sometime in Q3 and commercial shipments happening in Q4. So we are quite confident that this year we will post whatever number we put, a modest 100 crore target, and I think that certainly should be possible. As far as PC board is concerned, we also have a good kind of client traction, and we would probably start shipping from April of next year, first quarter. So we are on schedule as far as these are concerned, and probably in FY27 you will see a bulk of the capacity being utilized, and then significant amount of business being done. So by FY28, earlier we had talked about 2,000 crores between these two businesses. Maybe we'll exceed that too.
Okay. Jairam, when it comes to expansion in the global markets, you have looked at acquisitions. You're talking about Digicom, you're talking about August Electronics in Canada. This means that, yes, the exposure with regards to exports is going to increase in terms of total revenues. Where are you seeing it in FY26? And if US markets is going to be a key driver as well from here on, how are you seeing the impact of tariffs?
Yeah, so that's the trick here. So if you make it in India and sell it to US, they will impose tariff. But if you make it in US and sell it in the US, there's no tariff. So that really is the thing that we guessed earlier on, and when we talked to people and so on, we said that we will invest in US for manufacturing facilities in the high-tech area, so that we don't see too much of impact of these tariffs. So the tariffs are applicable if you manufacture outside the country and then bring it into the US. But if you manufacture inside the US, they don't care. So from that perspective, I think it's a good thing that our strategy of acquiring two companies, and maybe some more will acquire during this year, so that we have a critical mass of companies, delivering value in areas which are complementary to our existing areas, sitting inside US. So yeah, tariff not too much, but there are some exports that we do. Obviously, the semicon is one major export, but generally semicon, etc., is kept outside the tariff barriers by all countries, because otherwise it will completely make everything topsy-turvy. And also not a huge number. They are more running for other more value-added products and services, right? So as far as semicon exports are concerned, we don't see any problem. The third aspect that we must see in exports is that what is the other choice that global OEMs have? If supposing they put equal tariff on India and Malaysia, for instance, or India and Thailand, for instance, or India and any other country for that matter, who are also sources for these people, in which case it gets neutralized. It's just that those companies would drive a hard bargain on pricing, for which we are prepared. We'll do some cost reductions and so on. So yeah, so that's the reality bite on the tariff business. I don't think it will significantly impact. If at all anything, it will hasten our ability to do things in the US. We will probably acquire more companies there and then increase the business. So distinguishing between export and geography business, we would rather do factory business inside. We set a factory in the US and then do businesses there. There are many such good opportunities available. And of course, semicon and PC board exports will continue. And then there are some other exports that happen, critical exports, which are by the nature of, let's say, consumption domestically, but just goes outside and comes back. So they are neutralized, right?
Right.
If there are reciprocal tariffs, so we don't see in actual end-to-end calculation. I don't think that's a driving factor to the business.
Right. Mr. Sampath, just the last couple of questions. You've seen a very strong EBITDA margin in this particular quarter, and you expect that to sustain. But largely your new ventures like OSAT and PCB will come in Q4 and then subsequently in FY27. So what's actually led the margin to grow in this particular quarter, and is that largely because of the industrial segment? And just one more on ROCE and ROE. How do you see that trajectory with the current investments? Will the new ventures also have a subsequent positive impact on these two numbers?
Yeah. So as far as the EBITDA number is concerned, obviously it's driven by, there are different blends that drive it. The first blend is whether different companies that we work with, India geography, let's say North America geography, etc. The second blend is how much of automotive, how much of EV, how much of industrial. So obviously, you rightly pointed out, industrial has been a tad higher than usual. So we do have good products there, and fairly good EBITDA numbers are being shown there. And we think that will continue. Just to tell you honestly, every sector we have had improvement in gross margins. This is on the back of cost reduction efforts that we have undertaken over the last 2 years. So that is also driving. So the EBITDA is driven by blend, then EBITDA is driven by improvement in gross margins, and the third EBITDA third portion of improvement is coming because of operating leverage as you sell more and more in each quarter. So the denominator becomes smaller, and so the numerator increases, profits increase, and then you turn out better EBITDA. So you will have EBITDA due to gross margins, due to blend of different products, and also due to improvement in operating leverage.
That's interesting.
For the next 2-3 years, you will see an upward movement. Yeah.
Absolutely. And valuations, Jairam, are very expensive. So I think investors are now watching out as to when Keynes will get to that 25-30% ROE bracket as well. And that's what the street is watching out for from here on. But thank you so much.
FY26, FY27, yes.
Thank you so much. Thank you for joining in. But we'll quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Perception about the products in all the segments, and especially leadership in total cost of ownership in heavy commercial vehicles. In buses, they aim to continue the leadership in intercity segment and also build on the number 2 position in city buses and get into a significantly better position there. In powertrain, they want to certainly be the last man standing in internal combustion engines. But in addition to that, in the recent past, good investments have been done in electric powertrain also. So all in all, a very good geographical complementarity in terms of markets. The markets that we play and the markets where Iveco plays very complementary to each other. The product portfolio is also very complementary to each other in terms of the pricing range, and capabilities are also very complementary. So they have strong technology investments in powertrain, in electrification, in hydrogen, in ADAS, SDV, and complemented with the Indian frugal engineering capability, design to value capability. I think these capabilities put together will bring strong competitiveness for both the businesses together. So this in brief is the strategic rationale, and we've already identified significant set of synergies which can deliver improvement in top line. So there are some revenue synergies wherein we can launch Iveco products in India or the markets where Tata Motors is strong. We can launch Tata Motors product in the markets where Iveco is strong, especially Latin America. We've also identified optimization on capital expenditure by combining some of the R&D projects. And finally, by using design to value capabilities, reducing complexity, we can also get out operational expenditure out of the two companies to therefore deliver on a conservative basis around 0.5% of FCF on FY28 combined revenue. So that's the strategic rationale for this acquisition move. Now we open the forum for questions from you.
Maybe just one to set the context for the Q&A. I think we've been engaging with the analysts. There's a lot of questions that we've been receiving. I think the crux of the question is why this transaction, why now, and what happens from here. These are broadly the 3 buckets from which these questions fall. Let me take that right away so that we can optimize the timing. I think firstly, commercial vehicle business, we should understand it is very different from the passenger vehicle business. It's a very steady business. Disruption levels are slow and gradual and not highly intense. It's a business where it takes a lot of time to build because you need to have a portfolio, you need to have the customers, you need to have the service network and the residual values that need to be established over long periods of time. You need a strong financing arm. So it is a very gradual, it's almost like a game of chess. You need to ensure area by area, you strengthen yourself and move forward. And therefore, the only way for you to grow substantially is to also ensure that you inorganic becomes an important part of the milestone, number one.
Yeah, so that's the management of Tata Motors giving details in terms of the acquisition that they have made as well, which is Iveco. And clearly, they have 75% revenues from EU, 12% from South Africa, and they're looking at some 5% CAGR growth to come in, that the stock has now turned slightly positive, pretty much dilly-dally. But let's also get an Osho Krishnan to talk to us about individual stocks. Osho, before we talk about markets, a quick view in terms of Tata Motors, because the kind of correction that it saw in yesterday's session, there is some bit of stability in today's day of trade. Would you say you could see further strength from here on? What are charts indicating?
Very good afternoon, Hiran. Yes, technically, we are witnessing a kind of a consolidation or sideways movement in Tata Motors. So there has been no positive development as such as of now. So I'm expecting that the counter can see some kind of further stagnation towards the zone of 650 followed by 700. So this is the broader range for the counter. 650 is expected to act as a very strong support, while 700 has seen a kind of a resistance for the counter. So I expect that once this range is broken out, then only we can see some kind of positive momentum or negative continuation in the near term. But overall, the view is sideways to negative until we see a decisive breakthrough above the zone of 700.
Okay, so that's with regards to Tata Motors. How are you looking at overall markets, Osho, right now? Because we did see some bit of weakness on the back of trade tariffs in the morning, but the kind of recovery that has come in is really smart. Little over 900 points in terms of the Sensex. If you see in terms of Nifty 50 as well, if you just pull up that chart and you have Bank Nifty, which is now seeing gains of 164 points, Nifty 50 at the day's highest levels, hit that 24,900 mark. What should the trade in the second half of the trading session look like, and what should that strategy be now?
See, overall, I was expecting that today's session would be volatile, apart from the tariff news that has given a very strong selling off or has given a gap down opening to the market. But overall, it was expected that market will be having a volatile movement. Why? Because of developments that we have seen over a period of time. So overall, the market was into very oversold terrain. So the derivative parameters have already highlighted that the market have been into a very strong oversold terrain, and one can expect some kind of short covering in today's trading session. But today it has been a different picture, because we have seen a very strong sell-off in the initial or at the opening, and from there onwards there has been a kind of a smart recovery. So there has been both technical and fundamental or macro factor that has factored in today's trading session. But technically, if I have to say, then 24,900, 30,950, which is the 50-day exponential moving average and even the 61.8% Fibonacci retracement zone. So I expect this to act as a very strong resistance, because overall the setup is still on the negative side. So I expect until we see a reclaim on a sustainable manner above 25,000 zone, one should look for selling opportunities on any kind of a rally. So now 24,950 will be a crucial juncture for Nifty. If it not break above the zone of 950, then one can even look for intraday sell in Nifty or even the key indices also. So I'm not having a very strong optimistic view from here onwards. But yes, today's move has been totally different than what was expected in the market.
Interesting. Markets are really looking and reacting in a different way versus what was expected. So Osho, in this kind of a market, what would your top picks be? It can be sell calls or it can be buy calls. If you have to look at top three.
See, overall, I will be focusing more on the buying side, because looking at the traction that we have seen in pharma space, there has been very positive development in last couple of trading weeks. So I will be having my stay or my say in the buying view only, because we already have seen the market have corrected strongly from the higher zone. So I expect that from here onwards, one should look for buying opportunities and should maintain very exclusivity in stock selection. So from pharma space, I am having a bullish approach in Oro Pharma. Currently, it is hovering around 1155 to 1160 kind of a zone. So this is a current levels where one could try to accumulate the counter. On the lower end, 1120 should be kept as a stop loss for short-term traders, while I am expecting a target of nearly 1210 on a very short-term perspective. But a breakthrough above 1200, 1210 can provide a very strong momentum in the coming period also. And other counter which also is looking very positive to me is SBI Life. So SBI Life, after giving its quarterly earning, was into a positive terrain. Currently, the counter is hovering above the short-term moving average. So I expect that in the coming period, this counter can see some kind of positive traction from here onwards. So I'm expecting 1880 to 1900 as immediate target, while on the lower end, 1810 should be kept as a stop loss from short-term traders.
Osho, a quick view. ATG, a buy with the kind of up move that you've seen right now. The stock is up nearly 11 to 12% on the back of strong earnings. Would you still recommend a buy?
Which counter you have asked?
ATG.
Yes, HEG, I expect that this counter can see some kind of further continued momentum because the counter have given a kind of a very strong breakout above the zone of 550. But again, one should not become very much complacent, and for fresh bets, one should look for some kind of cool off because at current levels, risk reward is not favorable, but definitely a bullish momentum in this counter. So I expect any dip towards the zone of 580 or 590 can be seen as a buying opportunity, keeping a strict stop loss of 540. On the higher end, on positional basis, 640 to 45 will be the immediate target.
Strong one. Thank you, Osho, for that. Stay with us. In fact, Manish Gulati, Executive Director at HEG, now joins in for a conversation. Manish, good afternoon and welcome to the show. Hiral on this side, always a pleasure to speak to you. Strong performance driven by low material costs. Profits have surged on a sequential basis. Revenues are up and you're looking at capacity expansion. What is working now?
Hello, good to speak to you. You see, the capacity expansion which we have planned is on the basis of that we are very upbeat about the new electric arc furnaces coming all over the world. And we anticipate an increase in demand in the coming near to medium term future. So we feel that it is about time that we take this plunge and expand further from 100,000 to 115,000. We recently expanded from 80 to 100,000. And this would take 2.5 years to set up, and probably we'll be ready with the new production in the start of 2028. So that would, we think, would be time when some new electric arc furnaces would be on the ground, because we can see them that they are getting constructed. About 11 million has already come, and in the next 2025 to 2027, about 50 to 60 million metric tons will come. So that's the rationale for this expansion we are planning.
So when you're talking about the expansion as well, what's the plan with regards to funding it? How are you looking at the investment part of this expansion?
This money will be spent over a period of 2.5 years.
Okay.
So we don't need all the 650 crores today. So it will be mostly from internal accruals, because of course we'll be earning in the next 2 years, and maybe if required, we'll take some loans as well.
Okay, and any bifurcation that you have right now as to what percentage will be internal accruals and what percentage will be loans, and the kind of potential contribution this expansion will do to your top line once it's executed?
Mostly internal accruals. That's what I said. This money will be spent over 2.5 years. And the percentage, I mean, we are adding another 15% to our capacity. So whatever tonnage, that extra tonnage which gets sold from out of expansion, will pay off. We will have a quick payback. I don't foresee that this is going to be a very big problem, because this is about the lowest ebb of the market where we are. So things we feel are only going to improve from here.
Okay. How are you seeing the impact of Resonec, which is a leading graphite electrode producer who's going to exit China and Malaysia, who exited, in fact, in May 2025? Any rub-off effect that we are seeing?
The supply is from the supply side correction is helpful, and it would help when the demand grows. But whatever our understanding is that they were not running well anyway, so their management might have decided to close them. But in coming years, when the demand comes up, then these plants won't be there.
And overall, if you have to look at revenue and margin guidance for FY 26, 27 and 28, I want to look at 3 years, because when it comes to a company like HEG and especially a Graphite India as well, we've always seen a good cycle that comes in once it starts. So what is that outlook looking like going ahead? And what are the export opportunities also that you're seeing?
25, 26, at least for the first half, the margins are going to be where what you saw for the first quarter. But 26, 27, 27, 28, we certainly expect that the margins will be better on the back of improved pricing. You have seen that these kind of prices are not viable to anybody in the industry. So that's the reason of these closures and this and that. So we think that those 2 years should be good.
So strong moves that could be expected. Thank you, Manish, so much for joining us on the show and sharing the views. So that's the management of HEG. And with the HEG, you're seeing a rub-off effect on a Graphite India as well. That stock also seeing some good gains in trade today. Osho, one quick question that I want to take with you is in terms of, few of the small cap names that are buzzing in trade as well. IGI, Schneider, Phase and Green Panel. Anything that looks interesting from these names which you could recommend? Osho, you're on mute.
Oh, I'm really sorry. Schneider is into the radar because this counter have seen a very strong breakthrough, and in the last couple of trading sessions, we have seen a very strong movement from the zone of 940. So I expect the momentum to continue in this counter because this has been backed by very strong or decent volumes and has been definitely positive developments on the technical front. So I expect that the momentum can continue on the higher end. The target that one can expect from short to medium term perspective is nearly 1060 to 1075. That will be the first target that one can expect in this counter.
Okay, so that's with regards to Schneider. Thank you, Osho, so much for joining us on the show and sharing the views. In fact, moving on, with growing concerns over tariff penalties and unstable Russian crude flows, India's Petroleum Ministry is reassessing sourcing strategies. Diversification efforts, including imports from the US and Brazil, signal a shift in energy diplomacy as the nation braces for a potential spike in costs and global price volatility. Shrimi joins us with the details. Shrimi, over to you.
Well, Petroleum Ministry is clearly closely examining the implication of this tariff penalty, and in fact they are awaiting the final executive order to understand the implication. Meanwhile, they are saying that they have diversified crude portfolio, and if need be, if the supply being cut from Russia, they are going to further diversify its crude basket. But at the same time, they are raising concern that if the tariff-led impact continues to be there, it could disrupt the entire global supply, and that is something India is watching out at this point of time. And if you remember the tariff penalty earlier this month, warning came from US of imposing secondary tariff up to 100% on countries who are trading with Russia. And in fact, latest they said that tariff could go up to 500%, especially on India and China as they continue to get supplies from Russia as far as energy and military supplies are concerned. So they are watching this move, and this is important also as we import 35 to 40% crude from Russia, and in past few years it has risen to 8 to 10%, from $5.6 billion to $56 billion is what the latest number. So that is clearly concerning, but at the same time Indian authorities are going to have more alternative sources if they are, if there is any kind of supply cut from the Russia, is what ministry indicating at this point.
Yes, so direction is what the ministry is awaiting, and the government seems to be on wait and watch mode. Thank you, Shrimi, for getting us all the details, but completely out of time. With that, it's a wrap on this edition of Profit Buzzers. In fact, lots more lined up on the other side. Stay tuned to get in Somit Sarkar and Anushi Vakharia, who will talk to you about all the small cap buzzers in trade today.
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on
welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm your host Anushri Vakharia, and with me is Somit Sarkar. Now, the important highlight of the day is, of course, the markets. Now, if you look at the benchmark indices, Nifty 50 in the green is what we are seeing. The day started off on a volatile note in the red after the kind of global cues that we had in picture. But of course, focus remains on the mid cap and the small cap indices. And as usual, we have Hiral standing by to break that down for us.
Thank you, Anushi, for that. The kind of recovery that we are seeing in terms of the benchmarks, you have that recovery that's coming in terms of broader markets as well. But the small cap index continues to trade under pressure with cuts of 0.2%. That's the BSE small cap. Let's quickly look at the NSE small cap 250 as well. Even that has seen a recovery from the day's lowest levels. If we can have the NSE small cap 250 chart, because that will tell you where that index is there. There you go, at the day's highs with cuts of around 0.1% coming in there. Let's quickly look at individual stocks now on the back of an earnings impact. HEG, Graphite India and Keynes. Graphite is moving on the back of HEG numbers. Keynes also a strong commentary that's coming in terms of guidance. You have Sagility, Navin Fluorine and Greaves Cotton. All of these companies also reacting to numbers. In fact, Navin Fluorine has cooled off, but Sagility and Greaves Cotton up in that range of almost 10%. And you have a Sonata Software and Nucleus Software that has reported numbers. Nucleus, 13% up move. Sonata Software under pressure with cuts of around 5.5% coming in there. Two companies that are buzzing in the terms of tariff impact on the downtrick. Welspun Living and Gokuldas Exports down in that range of almost 5 to 6% in trade. IGI is an interesting one. After a strong move in terms of yesterday's session, the street is seeing profit booking there, 4.5% on IGI. Schneider continues the upward trajectory for a second consecutive day, 5% up move today. FaZe and Green Panel are two other names which are seeing some strong moves. 8 to 10, 11% is the kind of cuts that we're seeing on both these counters as well. So again, a lot of individual stock-specific action is what you're seeing in the broader markets. You have the small cap indices which have recovered, but they continue to trade in the red.
For that, Hiral, in fact, let me pull out the sectoral indices as well, since we're talking about what's happening with the market. So in case of all the sectors that we are seeing currently in focus, now we have the Nifty FMCG right at the top, seeing gains of over 1.9%. We are also seeing Nifty Media in traction, about 0.9% of an uptick over there. However, on the losing side, Nifty Oil and Gas and Nifty Pharma in pressure, seeing cuts of around 0.8%. But Somit, the important story in picture is Tata Steel, right?
Yes, Tata Steel did report their Q1 numbers. The results were a beat compared to what the street was expecting. The net profits surged nearly 57% on a Q-on-Q basis. The company also invested close to 3,800 crore rupees in capital expenditure and acquired Nilchal Ispat Nigam. We are joined by the TV Narendra, the CEO and MD of Tata Steel. Let's listen into what he has to say.
We summarize the quarter, of course, for us, but is it possible to kind of predict what could happen in the quarters ahead on the back of what's happened in quarter one, simply because the world is in such a state of flux?
Yeah. Thanks, Neeraj, for having me on the show. Yes, we are an industry which is always impacted by geopolitical events, so we are never short of excitement, so to speak. So, as far as the trade actions are concerned, we are more impacted by what Trump does with Europe and with the UK, because that's where we sell most of our steel into the US from. We don't sell any steel from India to the US. So we are not impacted directly by the actions that President Trump has announced yesterday. Of course, indirectly, we may get impacted because some of our customers may be exporting their products to the US. But I think it's still a bit early to comment, because obviously, the trade discussions are going on, and we'll wait to see what the conclusion is. But yes, we are always planning to maximize sales in the domestic markets, in the geographies that we are in, so that we are less impacted by what happens across the world.
Okay, since we've invoked that, can I just first squeeze in a question on this and then move on to what for Tata Steel specifically, because of the results and then the fundamental outlook. Sure. But a broad opinion is that the worst is on the table, which is 25%, and the eventual negotiations will lead to a number which is better. Assuming that is the hypothesis and the outcome per se, is it, from a business perspective, is it acceptable having a 15% or maybe between a 15 and a 20% tariff rate eventually?
I think that is the new reality we have to live with. I think EU is already realizing that they had pretty much zero import duty kind of access into the US. That world is behind us, at least as far as the US is concerned. I think increasingly across the world, arising out of this, as well as the geopolitical risks of having a lot of material moving across borders, we are seeing geographies trying to build self-sufficiency, or what we call Atmanirbharta in India, whether it's Europe, whether what's happening in the US just now, what's happening in China. So there's no reason why India should not continue in this direction as we're doing today. So we need to protect ourselves first. Yes, international markets are there to help us scale up, but everyone is taking care of their interests, so we have to take care of ours as well. So I think this is a new reality we have to deal with and find a way around it.
Now, how do you sum up your quarter, sir? I mean, largely in line. I mean, most of the takes that I've gotten say that it's in line to a healthy beat. One of the brokerages also mentioned that. And with the presumption that that's how it's turned out. But because we know that prices, at least one of your peers was telling me that prices in April and May did very well, but June and early part of July was some moderation. So how do you see pricing trends, and thereby what could happen in the near term?
So as far as pricing is concerned, we believe the Q2 realizations for Tata Steel in India will be about 2,000 rupees lower than the Q1 realizations, okay, because of the softness that you just described in June and July. But what is interesting is in the last 1 week, the prices in China have gone up about $40 because of the actions that the Chinese government has announced and is expected to take to manage capacities and unprofitable production. So that is what's happening in India. This is typically a lean quarter because of the monsoons and a dip in the construction activity. But the next quarter is expected to be strong. It's a festival quarter. Monsoons will be over, and it looks like it's a good monsoon. So we will see the continued pickup in the rural markets. So we are quite bullish about the rest of the year. As far as Europe is concerned, the prices will be more flat, will not be showing any drop during this quarter, maybe a slight increase. So going back to the guidance, prices lower in India, flat in Europe, or slightly on the higher side in Europe. Volumes will be much better in Q2 and Q3 and Q4 compared to Q1. So volumes will be on a positive. And most importantly, the cost takeout plans that we had announced are on track. We had said that 11,500 crores of cost takeouts across the geographies. So we are on track for that. The Q1 plan has been pretty much met, and we expect to meet the Q2, Q3, and Q4 plans. So we are basically focusing on what is in our control, which is the volumes and the costs. Prices are not in our control. We will be there to respond to what happens in the market.
Got it. Yeah, in fact, so it's an interesting point that you mentioned, Mr. Narendran, because for most analysts as well who track your business, right, the cost transformation program, the US-EU trade deal, and China steel spreads, which people believe are improving. I would love your thoughts there. But those are the three key catalysts going ahead, aside of all the other factors that you spoke. Now, what weightage do you reckon from a businessman perspective, which of these three or a combination of a couple of them hold the biggest bang for the buck from a business perspective?
I think the biggest impact is, of course, what happens in China. Because, the cost takeout is finite, right? You can take out 11,500 crores, you can take out some more, but it's not infinite. Whereas if you look at steel prices and if you look at the long-term average of steel prices is around $600. We've not seen $600 for a long time, right? So that's largely because China is exporting 100 million tons a year. And so today, I'm talking of international prices. International prices of steel are in the $500, $520 range, right? So there is a lot of potential upside there if China brings more discipline into its production, stops exporting at prices at which they lose money, and distort trade flows. So I think if some actions are taken there, certainly you will see a movement of steel prices towards long-term averages, which will have the most impact amongst the three that you said. The trade actions, I believe, will settle. People will learn to live with it. Some of these impacts are going to be passed on to the customers in the US, because from Europe, they buy steels from us which are not made in the US. So if there is an import duty, they either end up bearing that import duty or at least sharing part of that import duty with us. So that to me is less of an issue. And of course, cost is a very important thing from our point of view, because like I said, that's something we control, we can take action on. So we'll continue to focus on that, but the opportunity there is finite.
Okay. And since, I mean, China spreads important, China demand situation important, a lot of people attaching a lot of weight, considering the recent uptick in performance on the European side of your business, to what your commentary is like for Q2 and H2 on the European side of the business. Maybe you spoke about it very briefly. Could you elaborate a bit on that? How do you see that picture for the next 9 months?
So, we had a tough year in Netherlands about 2 years back. And since then, we've been on a recovery mode. Netherlands, if you look at it, has traditionally been a EBITDA positive, cash positive business, right? And it will continue to be that way. So this year, Q1 is positive, cash positive, EBITDA positive. Q2, Q3, and Q4 will also continue in that line. So we are less concerned about Netherlands from a profitability point of view. There are issues there we are dealing with, and there are these cost takeout actions we will do. UK has traditionally been the problem child for us. A lot of effort has been put in over the last decade or so, but I think we are coming closer and closer to an era where the UK can take care of itself. It can be EBITDA and cash positive. We are not yet there. As you can see, the EBITDA, negative EBITDA, which used to be in the range of maybe 300 to 500 million pounds negative EBITDA per year. Last quarter was 40, the quarter before, or rather this quarter was, Q1 was 40, Q4 was 80 million negative EBITDA. So we're seeing that we are moving in the right direction, and we certainly expect to be EBITDA positive by the end of the year in UK. So once we do that, then the European business is pretty much taking care of itself. And that's the direction we are moving towards, despite very difficult market conditions. So these are not good times by any stretch of imagination as far as markets are concerned. And if we are able to be EBITDA positive in these difficult times, that augurs well for us for the future.
I can imagine. My final question, Mr. Narendran, and amidst such volatility, because if US suddenly, after making the market ready for whatever they had spoken about copper for all this while, suddenly excludes copper from that list and the prices plunge, then how difficult must it be to run the metals business is anybody's guess, really. But thankfully, I'm not in your shoes. But just one question on the input costs as well, Mr. Narendran. How do you see those shaping up? Is it possible to kind of take a 6-month, 9-month view there, or are you playing it by the day, if you will?
So if you look at coking coal, which is for us the most important input both in Europe and in India, we expect this quarter consumption to be about $10 lower than Q1. Q1 was about $10-15 lower than Q4. So that trend continues. Coking coal prices have stayed in the $170 to $190, $195 range, which is good for us. It's a big part of our cost, 25 to 35% of our costs. That market is not very liquid, but China, who's a big consumer of coking coal, has diversified beyond Australia, who's a major supplier for us in India. And hence the coking coal prices have stayed where they are. So we are expecting it to be in that range, maybe touching 200 at some point in time, but not shooting up to the $250, $300 that we've seen in the past. As far as iron ore is concerned, there's more liquidity in the market, doesn't impact us directly in India. Has an impact on our costs, particularly in Netherlands. In UK, we've stopped the blast furnaces, so we don't depend on iron ore prices. Iron ore prices are more range bound in the $85 to $100, $105 range because there's a lot of new supply coming in Western Africa. The Simandou mine is expected to produce about 100 million tons over the next few years. So that's a new mine which is being commissioned now, ramping up. So iron ore will be range bound in the $80 to $105 range, and we expect it to stay that way.
Back to the markets. That was the conversation that we were having with the management of Tata Steel, but quickly addressing Ambuja Cements, which is flashing on the screen below. Now, if you look at the revenue, that's about a 22% of an uptick in the first quarter. This is on a YOY basis that we are looking this comparison at. EBITDA about 39% of an increase. Margins stood at 15.9% as compared to 13.9%. So a healthy growth that we are looking at over here as well. While net profits saw about a 51% of an increase. So that's the picture that we are seeing for Ambuja Cements, currently up over 0.45 0.45% in trade. But interesting is what's happening in the small cap space again. And we are in conversation with Sanjay Shah, the Chairman and Managing Director of Prudent Corporate Advisory Services, which came out with their first quarter numbers. Welcome to the show, Mr. Shah. First of all, want to understand your overall assessment of the first quarter. In terms of margins, it's where we did see about a bit of a contraction, and this, I believe, is on account of higher employee costs. Give us an overall breakdown on this quarter.
So first of all, thank you for having me on the call. Overall, I think it has been a very, very good quarter. If you look at on a YY basis, our revenue gone up by 17% and my profit after tax has also gone up by 17.1%. Now, you might be seeing on the first quarter some amount of pressure on the employee side. The main reason is there has been some amount of reversal on the full year provisioning in last quarter. That is the reason your last quarter base was reasonably lower. However, if I tell you that our fixed cost in the current year, when we did the review of our salary for entire employee base, it has gone up by 15-16%. And keeping in mind the other variable component, we are pretty comfortable that full year increase in the employee cost would be in the range, our guided range of about 20%. So I think in the full year, you'll see that the pressure would not be that significantly larger.
Mr. Shah, just wanted to get your overall sense in terms of what's happening with the AUM trends also, especially considering the market trends that we're looking at have been on the volatile side in this last 1 or 2 months or so. So just can you give us a breakdown on that as well?
So frankly, from an AUM point of view, always look for two things, because my AUM is comprised of mark-to-market gain and the net sales. If you look at last 12 months, our AUM has gone up by 20,000 crore from 90,000 crore to 117,000 crore. In last 12 months, we got the mark-to-market gain of 11%, while the net sales was roughly about 8-9%. So, however, if you look at last quarter, my net sales was reasonably in the range of 2,500 crore, but the mark-to-market gain was very, very strong. And that's the reason I think my AUM has gone up by 23%. Now, if I tell you about the sentiment on the ground, I think the April, May and the June also was some amount of subdued environment was there. But post this recovery in the first quarter, as far as your market is concerned, we've been seeing again a good uptick on the retail sentiment. So retail sentiment was reasonably subdued. However, my SIP number was growing steadily. So if you look at the June quarter, we ended at 996 crore. And when I'm talking to you now, I'm close to about 1,040 crore. So we did probably we are going to end this month with almost about 60 crore of new SIP in the month of July. So overall ground level, things are absolutely under control.
Okay, and quick one, Mr. Shah, over here. Just want to understand your insurance distribution mix as well. Is that expected to see an uptick?
Yeah, so insurance is normally a business where last quarter is always very, very strong. So when somebody asks me about the insurance, normally we say that if you distribute full year income of insurance into 4 quarters, first quarter will be 15%, second and third quarter will be 25, and last quarter will be 35%. On the business front, if you look at, I think we are strongly poised as far as general insurance is concerned, and on a quarter-on-quarter basis compared to last year, my general insurance premium collection has gone up by almost 50%. Life insurance, we believe that we'll have a good traction as the year progresses. So overall, we believe insurance is going to be very, very strong in the current year.
Okay, so that's the management of Prudent Corp. Thank you, Mr. Shah, for joining in. But now let's put spotlight on Indian metals and ferroalloys. We have the management joining, that's Subhrikant Panda, managing director of the company, as well as former president of FICCI as well. Welcome to the show, Subhrikant. My first question to you is about the quarter gone by. Now, overall, we are looking at a muted set of numbers. Just want to understand your picture on how the quarter was and how is the expected recovery in the subsequent quarters.
Good afternoon. It's good to be on the show. So actually, if you look at our Q1 FY26 numbers, you can look at it as a glass half full or half empty. Depends upon the perspective. Because certainly, if we look at it year on year, then our numbers are slightly muted. But if you look at it from the immediate preceding quarter, the numbers are substantially better. So just to give you a little bit of an perspective on it. Clearly, what has happened in H2 of FY25 is that, as the reciprocal tariff related disruptions worked its way into the global trade ecosystem, that had a lot of, impact on commodity prices in general. And added to that was, of course, also the slowdown in China, which, as you know, is the world's largest producer of stainless steel as well as ferrochrome. So all of that had an effect in pulling down our Q4 FY25 numbers sharply. And we reported actually about 13% EBITDA, which is one of the lowest in recent times. But prices had reached a level which were unviable, and we had therefore, in the immediate aftermath in our interactions, indicated that we expect a recovery in price, which is what has happened. So actually, as I said, this process of recovery is still underway. As far as Q2 is concerned, while I'll be very careful not to give any guidance, but what is publicly available information is that the benchmark price in Europe and elsewhere has moved up by a further 3 to 3.5%. So we are seeing that recovery underway. Demand does seem to be slightly, an issue at the moment because of all that is happening. And as soon as a little bit of, demand recovery sets in, I think you will see a noticeable improvement. In our case, I must clarify that, we are a very competitive and resilient producer because we have our own captive mines and power generation. And of course, we sell against long-term contracts, which means that offtake is not an issue for us at all. And the pricing is every quarter or every month, depending upon the customer.
Okay, so that's the overall picture that we are seeing for the quarters ahead as well. Just want your update on a couple of ongoing projects that you have in hand. What is happening there? What are the kind of capex plans how much have you deployed, and what's in the envelope that we should be watching out for?
So we are already a leading producer in India, producing about 260,000 tons of ferrochrome. And the Kalinganagar Greenfield project is a 100,000 tons per annum expansion where construction work is going on. It's 2 furnaces. We expect to commission the first furnace in June 2026. So that's less than a year away now. And the second furnace in 2 to 3 months thereafter. So that's on that project, the capex outlay is roughly 900 crores, which includes, of course, not just the smelters, but a waste heat recovery power plant as well, along with certain, development costs included in a greenfield site, plus, of course, the land acquisition. That apart, we are, spending a significant amount of money, upwards of 1,000 crores, of course, over 4 to 5 years, on increasing our chromo raising. So currently, we were at about 6 lakh tons for a few years. In FY25, we crossed 7 lakh tons for the first of ore raising for the first time. In phase 1, we will be going up to 9 lakh tons, which will support our ferrochrome expansion. And but this capex will eventually take us in about 4 years to 12 lakh tons, which will support the second phase of expansion. Apart from that, we also have a 160 crore capex towards diversification into ethanol. It's a 120 KLD plant we're putting up. So it's it's something that we're getting into a fast growing sector, but the intent is to gainfully utilize land and other infrastructure, mainly bulk raw material handling, which is available at one of our sites called Tharubali in southern Odisha.
Okay, thank you so much, Subrikant, for joining in. So that's the perspective that we are seeing for Indian metal, alloy and ferros in focus. But that's all the time that we had in this edition of Small Cap Buzzers. Stay tuned for India Market Close coming up next.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Welcome. You're watching India Market Close at NDTV Profit. I'm Mahima Vachhrajani and with me is Neeraj Shah. Well, clearly markets have shrugged off the tariff moves and that is reflected in the way Nifty has bounced back up 0.24% as we speak, and significant amount of bounce back from the start of trade. If you can try to pull up the line chart, there you go. We're off from the day's highest a tad bit, but trading quite high in the trade, and the bounce back is significant, almost over the 300 odd points in the Nifty 50. The Nifty Bank also, let's try to pull that up and see where it's hovering at, and also then pull up the Nifty 50 heat map. There you go, the Nifty Bank up 0.3% as well. Let's pull up the Nifty 50 heat map. I think it's HUL that's stealing the show today for sure, up 4% on the back of its earnings. I think it's volume growth that's worked for this counter. Geo Financial doing well in trade today, up 3%. Eternal seeing gains of what to what percent after 3 or 4 days of muted growth. Kotak Mahindra Bank also doing well in trade today. JSW Steel, ITC, Nestle, a lot of consumption names doing well on the back of the commentary that HUL management has given. There's Dr. Reddy's, which is down around 1%. Reliance down 0.8%. Maruti ahead of its earnings, down by about 0.7%. Tata Steel on the back of earnings, 0.6% down. Titan seeing some amount of pressure there as well. Let's also try to pull up the advanced decline ratio and see how that has moved, because that's going to be an interesting thing to watch out for. There you go. The kind of chart that you're seeing is narrowing by the hour, but overall, if we see, there are around 1,000 odd advances, we can say, to around 1,200 odd declines or 1,300 odd declines. So moreover, it's slightly more than that 1:1 odd ratio. So that's with regards to where advanced decline ratio stands. Let's also quickly pull up the sectoral heat map before I go on to Neeraj for the broader markets. And Nifty FMCG clearly stealing the show today, up 1.8%. Consumption doing well. Nifty Media up 0.5%. Private banks have bounced back, up 0.5%. But oil and gas remains under pressure on the back of tariff. Pharma under pressure as well, and overall Nifty Realty continues to be under pressure 2 days straight in a row after seeing a good gain on Monday. But the broader market still a tad bit under pressure.
Yeah, but off the lows of the day, which is actually
yeah.
a really good sign, right? So mid caps 0.5%, small caps, they were down 1.4% on open, just about 0.29%. Quite stunning, really, what's happening at the broader end of the spectrum as well. So the key takeaway is markets have recouped days losses, look like ending positively, which is actually a very good sign. I must say, Mahima, we should take credit for it because we spoke about it on open. A very strong reaction to decent results and commentary seen today, and we'll talk about that. I mean, HUL is a classic example, but even broader down, I think Sagility, Keynes, etc. We'll talk about that. And lastly, we're seeing the tariff impacted stocks stay under pressure. Very likely that until clarity emerges, you would probably, people would not want to flock to those. So that's the key point. Now, earnings impact being seen on Keynes Tech as well as Sagility, both of them. And we spoke to both the managements, by the way. You'll hear some sound bites from both today on the show. The cycle seems to be turning for these guys. So HEG results were solid. I think both HEG and Graphite India and even in the US, Graphtech have actually done really well. So is the cycle turning is the key question. Again, something that we'll highlight on the show. Vansh will come and talk about it. NBFCs are trading higher, which is actually a positive sign as well. So these are a few and far spaces in between, Mahima, which seem to be doing well for themselves.
Right, absolutely. And, to take this conversation ahead and as to see how markets are doing, we're joined by Mr. Mueller. And we'll take his view as to how, he's seeing the entire, tariff thing being played out.
Actually, more important than that, Mahima, I would love to know from Christian as what's his worldview currently, considering that we are past 6 months and another 6 months to go. Christian, great having you. Thanks for taking the time out and being with us. How do you see the investing landscape from your lens right now, considering that there is, for lack of a better word, a fair degree of uncertainty still there, even if you account that the tariff issue is now well and truly known?
Yeah, thanks for having me and good afternoon. I think you're absolutely right. It's quite unusual if you consider that we're still having so much uncertainty on tariffs, still bad headlines, but markets are shrugging this off. And I think it comes down a lot to, we've been calling it the Goldilocks scenario that investors have shifted towards. And there's really like three drivers. The first one is that at the Liberation Day, the trade policy uncertainty was so high and the concerns were so high. And since then, the momentum on trade policy uncertainty has actually been down. So things have gotten less bad. You've had a deal in Europe, you've had a deal in China, you've had generally like occasional escalations, but eventually there was always a deal. So the market has moved on a bit from trading the uncertainty around trade policy and possibly focusing more on the impacts. A bit what you said earlier, they look at specific winners and losers, but not necessarily the impacts on the market level. And the other two things that have gotten us to the Goldilocks regime is the fact that the data, like the hard data, like labor markets, earnings, all of those things have been reasonably good, especially in the US. So unemployment rates are low, profits are good. The earnings season in the second quarter has been good, obviously led by tech. So that has actually made the market relax on equities. And the last thing, which is really important, that has gotten us to this friendly backdrop, at least globally, is the fact that inflation and inflation expectations and monetary policy expectations have shifted more dovish at the same time. So putting all of that together, I think, you are in a reasonably friendly Goldilocks backdrop. The key fear we have is that in the second half, that will be challenged.
Christian, if one considers the earnings and the commentary that have come in from the tech biggies, and overnight, I think we've heard from two of the largest companies, including Meta, right, that their spending power on AI seems to be on. And does that mean that for the longest time, as people have been saying that let's look at the market beyond the top 7 tech companies, but that may not be the case because almost every quarter they come out, or every half year they come out with an earnings report as well as commentary, which makes people or investors believe that there is still more upside to earnings and thereby to asset prices.
Yeah, I think now they're leading. There's a very narrow, concentrated market rally, which actually has been fundamentally kind of supported. So you're absolutely right. Meta and Microsoft, they had good earnings. In general, these tech companies, they're spending, they're doing well on their top line. So they're protecting margins. Their profitability as of now looks fine. In the medium term, we all have to ask questions. If you invest so much, can you maintain your profitability? Can you maintain your return on equity? But for now, they're fine. And the hope is, of course, that as these kind of parts of the market are leading the equity market higher, there's going to be some spillovers because you're easing financial conditions. The S&P 500, if it goes up, is good for the US economy. It's good for the rest of the index. So the hope now is, of course, with this kind of rally in equities, are you getting a bit of spillover to small and mid caps, spill over to other parts of the economy that can kind of be pulled along? And that remains to be seen. We're not that optimistic. And I think one thing that worries us a bit is that a lot of the rally we've seen in equities has been driven by valuations. If you look at earnings revisions, they have been globally and also in the US generally been down into the second quarter. So you've essentially beaten expectations that have come down before. So I think the healthiest equity rally is usually when you have earnings revisions being positive at the same time.
Kristen, how are you viewing the Asian markets per se, and what's your stance with regards to where Indian markets stand?
So you mean in India or in general?
In general, Asian markets as well as India.
So I think generally, like, our view has been focus on diversification. So focus on active kind of opportunities beyond the US. That doesn't mean that we're bearish on the Magnificent Seven, but you got to ask yourself what else is in the US, and are there opportunities outside of the US that might actually be giving you the same kind of business model, the same opportunity to maybe diversify yourself a bit. from valuations that are higher, from profitability that are higher. So small and mid caps arguably are one way to diversify, not just in the US, but globally. We've certainly seen in Europe small and mid caps do quite well. And the reason for that is that they are more domestic. Like a big problem you've seen is that the weaker dollar has hit a lot of exporters. So you have like a double negative whammy. You have like tariff uncertainty that is hitting global exporters in Europe, and you have the strong euro or the weaker dollar. And as a result of that, small and mid caps in Europe have been a very good way to kind of be a bit more domestic, be a bit less exposed to tariffs and the currency. And I can see that being a bit of a narrative that might be true in other markets as well, where I think the largest companies, they're often the most international, where smaller companies might be more domestic and give you more opportunities that are insulated. So that can make sense to extend the diversification across the regions.
Christian, the data that we have right now shows that FIs have been incessantly on the sell side, at least in India. Maybe they are going for Korea because of the valuations currently, and there is a bit of a load up there, or some other markets. But in India, there has been significant selling, 92 or 93 days of the total number of days traded thus far in 2025 has been net selling. What's your view? I mean, when does global money find its way back into India?
Yeah, I think you're right. Our EM strategy team have also been more neutral on India, because you've had macro headwinds, you've had kind of relatively elevated valuations, you have uncertainty on trade that doesn't help. And I think the way to get international investors to come back to India, in my view, is to refocus on the longer term structural economic fundamentals, which I think are still very favorable, both in the EM context, but also in the global kind of equity market complex. You still have a lot of economic growth potential. And I think the most important thing is to have the cyclical picture stabilize to kind of make the market focus on the longer term picture again. And I think that really means that the most important thing is positive earnings revisions. As I mentioned earlier, it's most healthy if you generate a positive earnings revision momentum. Our team have been saying that this is something to be expected next year in India. So it could take a bit of time to get international investors to come back to India if it takes that long. But I would certainly argue that the longer term economic story of India, with a lot of the asset allocation in clients that we speak to, is well understood and generally subscribed to. But the shorter term cyclical picture is something they're not comfortable with.
And how does the cycle change, Christian? I mean, does it happen because the global economy has a rising tide carrying all boats along with it? Or does India do something? Because we've seen the Reserve Bank of India come out and really loosen the rates, right, per se. And the government has been kind of putting its head behind trying to do private capex as well as tax cuts leading to consumption. So what changes the picture?
I think you're right. It's not easy for India to decouple from the global economy. So certainly it would help for the global economy to shrug off the trade war and move on towards a kind of more normal state. We do have major fiscal stimulus in Germany, and we have major spending in Europe. We have the big, beautiful bill supporting the fiscal picture in the US. So once we have gone through the negative impacts from tariffs, which are still feeding into economic data in the second half, you would expect a large part of the global economy to start to re-accelerate a bit. And that is something that clearly would help sentiment to be more optimistic on the cyclical picture in emerging markets in India as well. I mean, specifically, as you were saying, the RBI cutting aggressively is helping. I mean, certainly the idea is that if you are kind of in a kind of slowing growth environment, central bank kind of support can mobilize liquidity, can buffer the economy, and can stabilize things. But I think certainly, and this is not just true for India, it's for most economies, it's very tough to decouple from the global picture currently.
Okay. Christian, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thanks for having me.
Well, that's the Goldman Sachs view, and cyclical picture not looking as great, but longer term looks very positive.
Absolutely. We now try to shift towards the Indian markets, and the company that we're talking to today is an interesting one. It's Tips Music, and we have Kumar Taurani, who's the managing director of Tips Music, joining us now. Mr. Taurani, hi, and welcome to NDTV Profit. A very good afternoon to you. On the back of earnings, I was just going through your con call as well as your earnings overall. It's been a decent set of numbers, but just want to get a sense of what are the kind of hits and misses that you've seen this quarter. According to your internal expectation, what has worked and what has not worked?
So I missed your first portion. Can you repeat this question?
Yeah, I'm saying, Mr. Taurani, according to you, for you, this quarter, as per your internal expectations, what has worked, what has not worked, what are the hits and misses?
Touchwood, everything is working for Tips. Our repertoire is doing well. Even new releases is doing well. Industry is going in a transition phase where we are shifting from free streaming to a paid streaming, subscription based. So that is a little bit of problem, but rest is fine.
In a con call, you've gone ahead and tweaked your guidance for your top line to around 20, from that plus 30% mark to 20 to 30%. Just want to understand as to what's the reason behind that, and do you think that you're taking a conservative approach here, or you'll be able to cross that 30% mark?
Actually, yes, I'm taking a very conservative approach. I want to give a true picture to the my shareholders. And what I see today, I'm definitely doing 20%, but I'm still focusing and trying. And there is a scope. We can do even 30%. So, and that is our target. And we are very focused on our business. I feel we will definitely try and achieve that.
Even in terms of YouTube views, this particular quarter they've dipped around 8 to 9%, and this is because short form content is really picking up. It's YouTube Shorts that are actually picking up and taking views from long form content. And YouTube Shorts for a lot of accounts right now are not being monetized as well. Just wanted your understanding as to how are you planning to tackle this per se, because at one given point of time, your YouTube Shorts probably are not monetizing, but at the same time, they're probably bringing you more viewers as well. So how is that, working out for you, and what's the strategy in place?
See, I feel this YouTube or Reels or all these players, short format content platforms, they are putting a habit in the consumer. Okay, you use my content, but ultimately they will come with a solution of having some kind of a revenue share with them. And that is the industry. And we also at Tips, we talk to them, Baba, this lump sum won't go long term. You have to come up with a model where we can make more money. And it has to be advertising driven or subscription driven, or maybe you have a blue tick or that kind of a tick and you get money from Instagram. Or I don't feel any droppage will be there. Entire community on these platforms will join in and pay money. So maybe next 1-2 years, actually, as I mentioned earlier, industry is going transition phase. We are in a transition phase where from free to start taking subscription or devise a model where we can make money. So that's happening overall, basically.
Okay. In terms of your overall spends, in terms of content acquisition, you've said around 25 to 28% of your total revenue you'll be spending in that content acquisition, and if required, you would raise that by around 3 to 4%. Just want to understand how does that overall impact your margins, and what are the kind of what's the kind of range of margins that you're expecting in FY26?
See, we try, as earlier we used to say 30%. This year we giving guidelines of 20% definitely. But still, as I mentioned earlier, our repertoire catalog is really doing well. And we have many good new releases this year we have acquired. That will also come this year. So I'm assuring my shareholders 20% will be definite happen. And I will 100%, we are putting, entire team is putting pressure that we can have a 30% this year as well.
Mr. Taurani, one last question. You're sitting on a cash of roughly 300 plus odd crores. Just want to understand how do you plan to deploy that? Probably, maybe content acquisition, of course, is one of the things that you'll put to use. You'll put the cash to use. But any kind of acquisitions probably on the cards?
Yeah, we have eyes open and ears open. So we want, if we get a proper good offer or anything, we will definitely do. Otherwise, what we are doing from last 2-3 years, if you see, we give heavy dividends. Whatever we have earned last year, we give entire money as dividend this year. And we do interim dividends, 3 interim dividends. Last year also we did 1 buyback and 3 interim dividends, and we given 136 crores, which we made previous year. And this year, March closing 25, we have made 166. We give 166 in this entire interim year, this year in 3 quarters.
Mr. Taurani, thank you so much, for taking out the time and giving us all those insights and speaking with us at NDTV Profit.
Thank you. Namaste.
Namaste. All right, we've also Kush Bora joining us now, founder of kushbora.com. Kush, hi, a very good afternoon to you. Markets have bounced back clearly. What are your views with respect to where the Nifty 50 stands? And now is the time when you take a trade?
Hi, Mahima. First of all, very good afternoon to you and to all the viewers. I mean, the first question is, what tariffs, right? Look at the kind of moves that the markets have made. They simply looks like it's an expiry move that, we are, dancing to on our own accord, and nothing really much to do with, with the tariff announcement that came about. So yes, I think this is more of an expiry trade. In fact, the market move, Mahima, is in line with what we've been discussing for the last 2 days, which is, a short covering trade for levels of 24,900 and 25,000. I think the real challenge for market starts now, whether it's able to cross and sustain above that 25,000 mark. But if you've listened to our conversations, made that short covering trade, and you're sitting in any kind of profit, not a bad idea to take some money home and maybe wait for tomorrow, maybe even Monday, to see how markets react from here on, and then decide the course of action. So for now, I think the markets have had a stellar recovery from those 24,600 odd levels. But now's the real challenge, and you wouldn't want to take a trade at the higher end of the range close to a resistance level. So yeah, if you've got any profits, take some money off the table and wait for tomorrow, perhaps even Monday.
And what about your picks for the day? What would you go ahead and buy?
Given the market volatility, I'm going with a long and a short. AGI Greenpack, this stock, we discussed a couple of sessions ago in market volatility. It did hit the stop loss, but with the kind of accumulation and the rebound that you're seeing, it just reinforces our positive view on the stock. So for levels of 995, 1020 with the stop loss around the 950 mark, you could consider AGI Green on the long side. On the short side, IREDA, the stock has seen some sharp sell-off. Every rise has been taken as an opportunity to sell. A lower high, lower low formation for more than about a month now, nearly, except for a few sessions here or there. So yes, IREDA, you can carry on as a short trade for the August series as well. 146, 143 are your targets. 151 is where you place that stop loss.
Okay, so that's a buy on AGI Greenpack and a sell on IREDA that Kush has on his list today. All right, with that, it's time to slip into a very short break, but do stay tuned to NDTV Profit. Up next, we'll bring you all the chatter behind the dealing rooms in our segment, Heard on the Street.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Back with India Market Close right here on NDTV Profit. It's the time of the show when we do the dealing room chatter, but Sun Pharma numbers are out, so let's just address them first before we do that dealing room chatter. And almost on online items, the numbers seem to be ahead, except for the bottom line, which is probably impacted by one-offs. Varsha Johnson to dissect these numbers more. Varsha.
Right, thank you so much for that. So yes, overall it was a beat except the profit numbers. If I want to talk about gross sales were up almost 10%. India formulation sales were up 13.9% and US formulation sales, if you see, was up 1.4%. If you see the EBITDA margins were almost at 29%. while the estimates were at 28%. And a profit before exceptional items, if you see, was up 16.6%, and adjusted net profit was up only 5.7%. Overall, if you see, net profit was down because of the increase in R&D expenses, and because of US sales, if you see, was down. US sales was not as better, which was expected. So the other thing is emerging markets formulation. If you see, the sales were up 5.1%, and rest of world formulation sales were up 15.5%, and R&D investments stood at almost 6.5% of sales. So overall, yes, beat on operational front, but net profit is a mess.
Okay, Varsha, thanks for that. Thanks for getting us that update. Sun Pharma lying flat in trade. But what is being heard on the street? I think that's the key question. And it's that time, literally that time of the show, a minute more than usual. But Sumit Johnson with all the chatter from the dealing room. Sumit, what have you found out today? Incidentally, you spoke about Sun yesterday.
Well, yes, Sun Pharma, yeah, the numbers are pretty much good with what the street was estimating, at least on the operational front is what we are getting from Varsha. Well, stocks that are in focus today, firstly it's Delivery and Thermax. Dealers are indicating that there are buy flows on institutional desk in trade today, and this is on anticipation of strong Q1 numbers, and specifically for Delivery, dealers are indicating that the margins are expected to be on the stronger side. For GE Power India, there are buy flows on large HNI desk. Now Q1 numbers are expected to be a turnaround quarter for the company. In fact, the company could report an EBITDA positive is what dealers are indicating. For ITC, dealers are indicating there are buy flows on DI desk. ITC relatively, if you see, it's a pure play domestic focused company, and is domestic focused company, and hence there is buying strength that we are seeing when it comes to ITC. And lastly, when it comes to all cargo logistics, there's a buzz of some positive corporate development that could be announced soon from the company's side, and hence we have seen this perk up in trade for all cargo. It was down around 1%, currently it's up 1.2% in trade.
Soumit, thank you so much for giving us all those cover and whatever you're hearing on the street. As always, we are also joined by Aditya Shah on this side of the show. Aditya, hi, a very good afternoon to you. I'll take your quick take on Sun Pharma first. If you've had the chance to look at the numbers, what's your first reading like?
Okay, you said the numbers first, but I'm not too positive on generic side of the business. I see the tariffs coming, although the tariffs have exempted the pharma company, but with the tariff coming in this week, we want to go down to the United States. And in the competition there in the generic space, I don't think I want to look at the generic space. I will more at the CDMO space. CDMO for many companies is looking exceptionally well. That is a space that I will watch out for, not the generic.
Okay. Well, that is Sun, of course, but the market recovery today is also good. Although now it's completely flattening out, and the expiry moves may be behind us. The question only is that can we actually build on from here, or will the market sulk a little bit at these levels? Now, the recovery in tech today is pretty stellar. And Kush Bora, I would love to understand from you whether do the charts indicate that IT is making or attempting to make some kind of a bottom here?
So, Neeraj, a couple of things. The reason why we're seeing a move in IT, and especially some of the large cap names as well, has to do with two things. One, this is the expiry day today, and we have seen funny things happen on expiry. What do I mean by that? Often you see a kind of a trade reversal. So, if for the entire month, if the sector or the stock has been shorted, you'll see some covering come in, some rollover activity starting, and that's the kind of move that you're seeing. Secondly, you look at something like a TCS, even an Infosys for that matter, but more so TCS, gone into oversold territories, so some rebound expected. So I think this is more of a technical factor, or at least a couple of technical factors playing on the IT stocks, which are showing some kind of green. Despite that, you see some of these big names haven't been able to take out any near-term highs that they made in the last 2 or 3 sessions. So I wouldn't read too much into it. I would certainly need more data and much stronger price action to say that any kind of bottom is in place or bottoming out trade can be considered in IT. So no, I'd still consider with that. I'll still continue with that. Wait on the sidelines, perhaps even short on rise kind of a move on IT.
Okay. Coach, any view on Zuari Agro? Second day of stellar gains, up 16%, and it's gaining by the time. Look at the chart. It's a very interesting chart there as well. The spike during the day has been quite significant and trading almost 6% higher at its day's almost high point. Most team left there.
हो गया ये वाला ट्रेड हो गया this is done and dusted. It's gone deep into overheated territories. The only consolation factor for anyone who's holding this, and I would say if you're holding, continue to hold with a trailing stop loss at 320. And the only reason I say that is because the volumes on all three sessions when the stock has moved higher, including today, have been rising. So which means there is still some interest. So it's only for someone who has an existing position in it, keep a trailing stop loss at 320. But this trade is done and dusted for anyone who looks at a fresh buy. Don't look for a fresh buy. Hold with a trailing stop loss of 320. That's all I can say.
That's the view with regards to where Zuari Agro stands. Now on to NDTV Profits exclusive. Sources suggest that Income Tax Department searches Nuvama Wealth's premises. Agni joins us now from the premise itself to give us some details.
Right, so we are standing here outside the Nuvama office in Mumbai's BKC. Sources tell us that income tax officials are going through search operations within the offices behind us. 12 to 15 personnel have been here for over half an hour, and we don't know what the details of the searches are, but people are being asked to go home. As you can see behind me, or maybe not, but people are being leaving windows. So this is a developing story. Do stay tuned for more.
Okay, this is a developing story and we'll bring you the details as and when they unwrap. But Aditya, Imami is one of the counters that's seeing stellar gains on the back of its earnings, up 7%. And FMCG companies, Nifty FMCG in fact is the, star of the show today. I just want to get a sense because it's not just the numbers, it's also the commentary that's coming in from the management that's, bringing enthusiasm in the investors. What's your view with regards to where Imami stands?
So I don't track Imami per se, so they're not able to counter. But from my perspective, the FMCG or FMCG counters are very defensive counters. Whenever there's something wrong in the market or with respect to the tariffs, fund managers tend to pay very defensive and move towards domestic facing consumer stocks. So from my perspective, all of these stocks are really very expensive, and investors need to be really very careful when they invest in any of these companies.
Okay, so that's with regards to where Imami stands. But the other stock that is in focus and arguably the stock of the day today is Kaynes Technology. The share is up more than 9% right now in trade, and Puneet joins us with all the details as to what's worked for the counter. Puneet, what are you picking up?
Well, thanks so much for that. So some key comments made in the conference call today morning has been driving the stock today. Let's first quickly look at the numbers. 673 crores of revenue is what the company reported, with EBITDA margins at 16.8% in this particular quarter. That was a very strong number compared to roughly the 13 to 14% range that they generally operate in. Let's quickly look at the net profit as well. It was up 46% in this particular time frame, and that was led by the EBITDA margin profile of the company. Now, I want to just talk about the 6 key takeaways from the conference call, which is likely driving the stock today. The first one is that it's maintaining its revenue guidance of 4,500 crores for this year. Now, they've done roughly about 673 crores in terms of revenue. So, over the next 3 quarters, they will have to record 3,900 crores of revenue, and the management seems very, very confident of achieving that number. The second one is of indicating of higher margins for this particular time frame. They've indicated that the 16.8% is sustainable in each of the next 3 quarters, which will indicate almost an 80% jump in EBITDA if they're able to do that for FY26. The third key highlight is the OSAT facility. Now, this is a semiconductor aspect which was expected to come on stream somewhere around FY27. The management has said that the construction has been going on ahead of schedule and is now expected to be completed by December of 2025 itself. So, the revenue trajectory could start by Q4 and an eventual ramp up in FY27. The fourth key highlight is the PCB plant, another completion expected in January 2026 itself. And this will probably have a positive impact on the company's revenue targets of about 8,000 odd crores in FY28. Could see some material, upside in FY27 itself. And finally, the last couple of ones is on management's guidance to lowering the working capital days to 70 to 80 days. That has been one of the key pain points as well. Now, finally, in terms of guidance, and I just want to highlight that very quickly, 4,500 crores they've already done. 673 crores in Q1 has been achieved. So they will have to, expecting the management, we spoke to them today, and what they are expecting is that they'll record 1,000 crores of revenues in Q2 of FY26, which is a jump of almost 45% from the same time last year. So it seems to be that Q4 in this year will see a high growth, but on the way to achieve this stupendous guidance. And if it's anywhere close to 4,000 crores as well, the market is going to take that because it's a really strong growth that the company has reported over the last 6 quarters, and that trajectory seems to be onwards and upwards from here.
Puneet, what was the most standout comment from the management? Because you would have quizzed on the con call, you would have quizzed on a lot of things. What was the standout key takeaway which helps a minority investor?
I think it's the EBITDA margin, Neeraj, because we talk about Dixon, we talk about Amber, they all operate in the 4 to 6% margin range. Here's Kaynes Technology at 16.8% and saying that it is sustainable over the next 3 quarters as well. So it's not a quarterly phenomena. And I think that is why the stock is now more and more expensive in terms of valuations than even Dixon Tech itself. And hence, that was one of the key standouts. It's a huge jump in a very short period of time. And with OSAT and semiconductors and PCB coming in, this margin could be added on with revenue growth and make a killer combination, to say the least.
Okay. Puneet, thanks a lot for giving us those details. And that's Kaynes Tech, arguably the stock of the day. By the way, some numbers on your screen. There was Vedanta earlier, now there is Adani Enterprises. And the number that I can read is the profit before exceptional item, which is up about 11.7% on a quarter-on-quarter basis, by the way. So we are doing a QOQ analysis right now. The net and the other numbers will come up on your screen. Revenues, QOQ down about 18% at 21961 versus 26966. And profit before exceptional items up about 11%, like I said. The stock, though, down about 2.7, in fact 2.8% currently. So keep an eye out for Adani Enterprises, 2461 currently the price. Okay, we're waiting for some of the other flashes to come in, but keep this in mind. Remember, one is, of course, the trade businesses that ongo, but also the Navi Mumbai airport opening up could be the next big trigger that this one would be watching out for. Standard disclosure, this is owned by Adani Group, and Adani Group owns NDTV, and you're watching NDTV Profit currently. The other set of numbers, of course, were Vedanta, which also the stock kind of lukewarm after the numbers as they've come out. So keep both of those at the back of your mind. But I wanted to focus on Kaynes Tech and Aditya Shah, the commentary that came in from Kaynes Tech, that despite the, not up to the mark Q1, they maintain the guidance for the year. They talk about improving the debtor situation and operating cash flow as well over the period, and which is what the street seems to have rewarded them for. Do you track the EMS space and Kaynes in particular?